Crude prices surge. Brent rises over 3% to $73 a barrel as Norway halts production at the key oil field. Escalation in a Russia-Ukraine war also aids the gains. Gold prices surge on a softer dollar and geopolitical concerns. Finance Minister Nirmala Sitharaman says that there is no cause for undue concern over economic growth, promises the government is committed to taking all necessary measures, also says interest rates will have to be far more affordable. Government is likely to discontinue the windfall gain tax imposed on crude oil. Sources say the Prime Minister's office has decided to end the levy after a review. Indian aviation hits a historic milestone. Over 3,100 planes take to the skies carrying over 5 lakh passengers to domestic destinations, marking the first time that passenger numbers have crossed the 5 lakh mark in the country. Hello, good morning. You've tuned into CNBC-TV18 and you're watching Power Breakfast. I'm Vinny Motiwala. Let's look at what the Asian markets are doing. Seems like a bit of a positive start that we're seeing for the Asian markets this morning. Taiwan index is holding on to gains of around 0.5%. Hang Seng holding on to gains of around 0.6% as well. And other than that, when you're looking at the other Asian markets as well, so whether you look at an ASX 200, that's the Australian index, holding on to gains of almost 1%, and Nikkei holding on to gains of almost 0.2% in trade, and Shanghai also holding on to gains of almost 0.2%. So positive start is what we're seeing coming in for the Asian markets. Let's pull up the GIFT Nifty and see what is that indicating. That also is indicating a positive start for the Indian markets. Up 58 points as of now is what the GIFT Nifty is trading at. So yes, a positive start is what we're watching out for from the Indian markets today. We've seen that subduedness in the Nifty for a while now. 7 straight sessions that we've seen a decline. And today, a bit of a positive start is what is indicated. But let's move on. And what happened in the US markets? Now, Wall Street ended mixed when you look at it, with NASDAQ snapping its 5-day streak of gain over 0.5%, led by gains in Tesla, and the S&P 500 rose 0.4%, while the Dow Jones ended just below the flat line. Now, EV maker Tesla shares surged on reports stating that the President-elect Donald Trump's team is working on easing regulations on self-driving vehicles, but all eyes are going to be and continuing to be and remain on Nvidia's earnings that were expected overnight, and later this week is what we're watching out for these numbers. Now, the chip maker shares have fallen over 5% in the past 5 trading sessions. So surely something that we are watching out for in terms of the US market. But JP Morgan's asset management chief market strategist believes that US equities have a good run and is expected to continue in the same way, provided investors consider some possibility of change in terms of policies that is going to affect the markets. Let's listen in to what more they have to say.
Very strong performance for U.S. equities. We do still think this is a good environment for risk. That includes equities, that includes corporate credit. I just think there are 2 important questions for us that investors are already paying attention to. Number one is we seem to be out of the cyclical storm, all of the distortions from the pandemic. But now we're, in the short term, in a little bit of a policy fog environment. That can lead to some of a bit more choppy performance. So it's really all about the 3 S's. What's the scale, the scope, the sequencing of the policies of the new administration, and how do we counteract headwinds and tailwinds?
Okay, that's all the action that we have on the global market front. But how will all this overnight cues impact the Indian markets? We have a research team joining in with us to set you up for the trade in terms of trade setup. What are the stocks to watch out for, as well as the FNOQs? Good morning, Hormaz, as well as Sudarshan. And Hormaz, let me start with you. How are we looking at in terms of market cues? What is the trade setup looking like for today?
Trade setup comes up with some bit of hope for the bulls, and it came out in yesterday's session as well. Although it was the 7th straight day of losses for the Nifty, although the index closed below the 200-day moving average as well, but it has closed off the lows of the day, and that was the big takeaway. And despite the sell-off, the bulls managed to hold on to some bit of lower levels around the 23,350 mark. Then it was a tug of war, right? It was the Nifty Bank that was supporting the index from any further downside, but the IT index was pulling the index lower lower. And if you pull out the contributors chart as well, you would see stocks like HDFC Bank, SBI batting for the bulls, but Infosys, TCS, Reliance Industries, all of them contributing to the downside. But then most of them recovered from the lows of the day, and that contributed to that 100-point recovery that the Nifty had towards the close of the session. So what next now for the index? Of course, the close above the 200 DMA is essential to instill further confidence in the bulls, and 23,350 on the downside, which is yesterday's low, will be a key level to watch out for. For the Nifty Bank as well, it was HDFC Bank that ensured that the 50,000 level is protected on the downside in yesterday's trading session. So that remains a key to watch out for. But of course, we are heading into a midweek holiday. It is the polling that takes place in Maharashtra tomorrow, so we'll watch out for trading volumes might remain thin today. We'll watch out for any potential moves in metal names that were another key contributors to the upside in yesterday's session. We'll see if there is any further selling pressure in Honasa Consumer. That was a 20% circuit yesterday, and the city gas players as well that were trading lower in yesterday's trading session. Of course, the action is now again become stock specific now that the earnings season is over, and of course the important thing to watch out for is any further recovery, whether it gets sold into or not, and the template remains a sell on rise for the market. But for now, the Wall Street handover is fairly positive, and the GIFT Nifty too is indicating a positive start for our own markets.
Okay, GIFT Nifty is indicating a positive start for our own markets, but which are the important stocks that we are keeping on our radar today? GMR Airports, that's the one we're watching out for. We have a business update coming in for the month of October. The October passenger traffic has gone up by 9% on a year-on-year basis, month-on-month basis. Also, there is an increase of 5%. Domestic passenger traffic up 9.2%, international passenger traffic up 9.2% as well, and air traffic movement is also up almost 9%. This is all that we're comparing on a year-on-year basis. Moving on, Shilpa Medicare, its arm Shilpa Pharma Life Sciences has gotten a certificate of suitability from the European Drug Authority, and this is for an API that is called octreoid, and this is used for the treatment of increasing the treatment of high level of growth hormones caused by some particular concern. So yes, on the back of that, Shilpa Medicare could be in focus. ITI, they bagged a contract worth around 95 crores for mining digital transformation and surveillance systems in Uttarakhand, so keep an eye on that. Where PG Electropass, that's in focus. Its arm has signed a definitive agreement with Spiro Mobility for manufacturing EVs for Spiro India, so keep an eye on that one. MedPlus Health is in focus after there was a big block deal that took place yesterday. Now we have the seller PI Opportunities, that's Premji Invest Fund, that has actually sold 5.77% stake in the company, and they've completely exited. And other than that, we have SBI Mutual Fund also that has sold some part of their stake, 0.84%. So keep an eye out on MedPlus Health today as well. We also have AstraZeneca Pharma, that's in focus. They've received an approval from the DCGI, and this is for an inhalation preparation drug. This they're planning to launch in 2025. So keep an eye out on all these stocks today. But let's move on and finally get in what are the cues in the world of F&O. How is that going to be shaping up today? Sudarshan is going to take us through all those details. Sudarshan, good morning.
Good morning, Vinny. So first thing first, Sensex and Nifty have closed lower on Monday for 7th straight day, and it's the longest losing streak that we have seen almost in 2 years, that is since February of 2023. But if you look at the last 7 days move, a similar kind of pattern has been found. First, opening with minor gains, then going into the red, then again make intraday recovery, and at the end closing in the red. For today, GIFT Nifty is indicating a start with minor gains. As far as flows are concerned, FIs continue to sell. Yesterday, we saw FIs selling more than rupees 1,400 crore, but in a single day, it's the lowest sell figure that we have seen if you exclude Diwali days of 2 days, Dhanteras and the Muhurat trading day. In the last 35 days, FI have sold more than rupees 1.5 lakh crore. In the index futures, though, FIs have bought more than rupees 350 crore. At the same time, they've added long contracts of more than almost 5,000 and also added short contracts of more than 1,300. With this, long exposure by FIs now stand at 24%, and on the client side, long exposure has increased to 68.5%. On the option front, 23,500 call has seen addition of almost 36 lakh shares, 23,700 call has seen addition of more than 32 lakh shares. And on the put side, 23,400 put has seen addition of more than 23 lakh shares, and 23,300 put has seen addition of more than 18 lakh shares. Important levels for Nifty, support is now seen somewhere around 23,360 to 23,400, and resistance is now at 23,550. Lastly, stocks that might be in focus, keep an eye on city gas companies. We'll have to see if they see follow-on selling.
Okay, Sudarshan, thank you so much for that. But with that, we're going to step into a very short break. But don't go anywhere, because after the break, we'll get you excerpts from the Finance Minister's address at the SBI Conclave. Stay tuned in to listen to her comments on inflation and growth. Welcome back. You're watching Power Breakfast on CNBC TV18. Now, the government is likely to discontinue windfall gain taxes, and sources have told CNBC TV18 that the Prime Minister's office has asked Petroleum and Revenue Departments to finalize the contours to the issue the relevant notifications to discontinue the levy. Timsi Jaipuria is joining in with us to give us more details on that. Timsi, take us through the rationale of the government behind this decision. What is it that we are expecting here now?
Well, after almost over 2 years of existence, the windfall gains tax levy could soon come to an end. That's what sources are indicating to CNBC TV18. What we are picking up is that the government at the top has decided to discontinue with this levy, and a formal notification for the discontinuation of windfall gains tax levy could come soon as by end of December or middle of December. Sources indicate that the Prime Minister's office has asked Petroleum Department and Revenue Department to finalize the contours to issue a relevant notification to discontinue this levy. Remember, this levy, that is the windfall gains tax, was levied from 1st of July 2022. And some of the reasons behind this discontinuation is that the average crude price was not yielding much taxes. The industry was unhappy with the levy, and the levy was having an impact on the production levels, and thus the country now wants to enhance its production levels of crude oil, because of which this discontinuation decision has been taken. Let's see how soon a formal notification is issued. Where are we actually in terms of the total collections? All of this are likely to coming in together with the announcement of discontinuation, which could be as soon as within December itself. Let's see, as and when it comes, we'll keep you updated. Back to you.
Thank you so much for that, Timsi. But let's move on to the big newsmaker from last evening. Finance Minister Nirmala Sitharaman played down concerns over a potential slowdown in the economic growth. Speaking at the annual SBI conclave in Mumbai, she said that there is no reason for undue concern and India remains in a strong position. Finance Minister also believes that we need more conversations to discuss the inflation and interest rate dynamics. Listen in.
Let me assure you that the government is fully aware of the challenges posed by both domestic and global factors. There is no cause for undue concern. India's economy remains resilient, underpinned by strong macroeconomic fundamentals. FDI inflows have demonstrated healthy growth in FY25. Reinforcing global confidence in India's economic potential. Our foreign exchange reserves comfortably cover 11.8 months of imports and exceed 100% of external debt, underlining the strong net buffer in the Indian economy. The government is closely monitoring an evolving situation. We remain committed to taking all necessary measures to ensure that India remains fully and firmly on course to become the third largest economy in the world.
How concerned are you about inflation, and what is the view as far as interest rates are concerned? Do you expect a cut anytime soon, or do you believe on account of where inflation is at this point in time, the cut perhaps is going to be further pushed out?
You know, this is a question which I'm sure every journalist would love to ask. And Shireen leads the bandwagon. I respect her for asking me this question. I will certainly try to give an answer. Global markets don't go by your demand and supply ups and downs. They want a consistent flow of pulses to come into India. So complex issues, but very much affecting the common man. So inflation gets actually very, very volatile because of the supply-demand constraints. Equally, I think what is important is when you look at India's growth requirements, and you can have so many different voices coming out and saying the cost of borrowing is really very stressful. And at a time when we want industries to ramp up and move building capacities, bank interest rates will have to be far more affordable. So I'm putting as much what Shireen asked me as a reply back to you, saying these are our requirements if we have to make Vikasit Bharat not just an aspiration but as a reality. So we need to have a lot more conversation on this, and I would stop at that.
Okay, and on that note, we're going to step into a very short break, but don't go anywhere. After the break, we'll talk about what's happening in the world of commodities.
transformative idea that's quite literally shaking up the world. Donald Trump and the impact and implications according to you.
I think pretty transformative, Donald Trump, and has changed the perspective of how we're going to run the world as we go forward, or how he is going to run the world as we go forward. And as was mentioned, 66% of global market cap is US. We just got to make sure that America does not make the rest of the world irrelevant. And that's one of the challenges we must all live up to. So for however small our market share, we need to grow it much faster than what we have in the past. And Shireen, as you think about transformation, I think if you look at America's power, it is essentially three things. One is military, second is finance, and third is creativity. And if you look at these three important things, which gives the Trump power to the United States, let's ask ourselves each a question about how India has got to transform for the future. So I'm literally taking on from where you have said. So let's look at military power.
Okay.
It's the most powerful defense power in the world, which is United States. And if you look at India on a relative basis, if India has to transform, our percentage of spending on defense as a percentage of our GDP is not growing.
The second thing is
Welcome back. You're watching Power Breakfast on CNBC-TV18. And like promised, we do have Manisha Gupta joining in with us to tell us what's happening in the world of commodities. Good morning, Manisha.
Morning, and thank you for that. Well, it has been a rebound in many of these commodities. I'll start with metals first because the smartest of gains have come in for this one. Remember, the US dollar index gained up by 1.6% in the previous week, but that rally seems to have taken a pause right now, and that is supportive. So when you look at the steel rebar prices, they gained up by 3% overnight. Copper, aluminum have been in favor in any case. We've seen both of these metals also gain up by more than 1.5%. Even the precious metal prices have seen gains. Silver gained up by 3% overnight, and gold prices, after declining 6% since the U.S. presidential elections, also are now trading back above $2,600 an ounce. So we are looking at gains coming in across all of these. What the street is waiting for right now is further events to come in from China. You have the LPR decision happening in this week, and then it also is about Powell testimony that would happen in this week. Is the reason you have the crude oil prices also seeing some support. We have seen a 3% of surge come in for crude prices also overnight. So the New York session has been good, and the Asia market right now today morning has been supportive of these gains.
Okay, Manisha, thank you so much for that update coming in the world of commodities. But let's move on to some news on the national front. Now, this is from Manipur, where violence has escalated once again. Police have said that the protesters was killed in a firing after clashes between forces and protesters who were vandalizing properties. The mob was protesting at the killing of a woman and children abducted by militants. Manipur Chief Minister Byron Singh called an urgent meeting of the MLAs to take stock of the law and order situation in the state. However, the meeting saw several significant absences, with only 24 of the 45 sitting MLAs showing up. Meanwhile, an update coming in on the air quality in Delhi and Noida, Ghaziabad as well as Gurugram reached alarmingly high levels, with most AQI stations touching the 500 mark even today morning. While the Union Health Secretary issued an updated advisory on a Monday to states and union territories regarding the air pollution, Delhi University has decided to shift to online classes till November 23rd. Jawaharlal Nehru University till November 22nd will be moving on to online classes as well. Okay, and with that, it's a wrap on this edition of Power Breakfast on CNBC-TV18. Thank you so much for tuning in. Morning Call up next.
I learned from Mahatma Gandhi, that is leadership by example. If you want austerity in your company, you, the leader, show austerity. If you want punctuality in your company by every employee, you come to the office first. Then you don't have to give big speeches. So I think I can go on and on the issue of leadership, by example, but I think we in the corporate world must embrace leadership by example. The third thing that I would talk is, this is something that not just the corporate leaders, but leaders in every area in India, in corporate world, in politics, in NGOs, in bureaucracy, everywhere. And that is putting the interest of the community ahead of my personal interest. If I did that, my personal interest will be much larger in the years to come. That's exactly what we at Infosys followed. In the beginning, none of us had any cars. We all traveled by economy until we were $1 billion in revenue, and that was the time that I was there, and we were $288 million of after tax. Until such time, we all traveled economy, even on international flights. So the point I'm saying is, let everybody lead by example. Prime Minister Modi, who has done a brilliant job so far in terms of accelerating our economy, all of that, may want to look at whether we need more of managers in the government rather than administrators. And to do that, they perhaps may want to look at, rather than the current method of having some, whatever it is, some 3-4 subjects, examination, etc. for the IAS, he may want to look at selecting people from the various management institutes, bringing them into the government. I hope the opposition won't have much objection, like they have already raised. Bring them into the government. First, get them trained at Mussoorie on decision-making under uncertainty, on facing the competition.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Mangalam. Guys, hi, good morning.
Good morning. Day 2. We have the band of boys. And it's a little cooler here in Mumbai. I think this morning, a little cooler than normal. I know for a Delhi boy, this isn't cool. But for Mumbai standards, we're getting into the Mumbai winters.
And I thought the haze is also a little better this morning. Yeah. I mean, otherwise it was bad. I mean, by Bombay standards. Delhi, of course, is catastrophic. But here in Mumbai, it was getting a lot, very bad. But I think this morning, I stepped out. It was looking a little better.
Better weather and hopefully better times for the markets.
Some of the people were saying that, running on the road in Bombay is better than doing yoga inside your house in Delhi. That's the difference between the air quality index between the two cities.
Delhi is absolutely crazy what's happening. But well, we see that every year, and every year people complain for that, for those sort of few months, and then of course it's unfortunately back to usual in that sense. Hopefully, authorities take charge, get a fix of things. Well, that's a conversation for another time. But let's just start by telling you what you need to know as far as markets are concerned, because it's looking a little better. I mean, and this is largely on the back of what we've seen overnight. because 2 days in a row, the markets in the US were coming off. NASDAQ had lost about 3%. Last night, a little bit of a lift, 0.5% on the NASDAQ. S&P about 0.4% higher. So risk sentiment is improved. By the way, bond markets traded better. So yields came off about 2 basis points to about 4.42. Dollar index has cooled off about 0.5%. And I suspect it's largely positioning related. Because, I mean, I think if you go back and look at the last fortnight or so, pretty much every day, the dollar index has moved up by 0.2, between 0.25% and about 0.5% or so. So a little bit of cooling off is what we've seen as far as the dollar index is concerned. Just so, post-Trump, we've got very little data in terms of how general economic confidence, etc., in the US is. We got that ISM manufacturing number. This week, we'll also get the PMI numbers, flash PMI numbers. But you had one indicator last night, NAHB builder confidence, that beat expectations. It hit a 7-month high. So this is, I mean, just immediately post-Trump. We'll, of course, as I said, get more data this week. Oil prices jumped 3.5%, 73 plus. Gold prices came up as well, back above $2,600. There is, of course, some development in the Middle East, which we can talk about. But I think there is another important development, which may also be kind of the common reason why both did well. So the Biden administration over the weekend actually authorized the use of, and these are news reports, authorized the use of long-range missiles by Ukraine. Russia has so far maintained that this is the red line. I mean, if Ukraine is given long-range missiles capable of striking deep into Ukraine, Russia will consider that it's at war with NATO. And I think this is something which was, unsettling, a bit of a disquiet. And you had gold, which went up, and I think, of course, oil prices, which went up as well. As I said, there was also that Middle East news flow, Israel striking, in Beirut. And, of course, that's a developing situation as well. But I thought this was important to highlight. Lots of headlines suggesting more sort of likely Trump appointments. There are some news reports about who the likely Treasury Secretary is going to be, but no confirmation. So we'll wait for that. How are things set up in terms of levels? I mean, if the market, after coming off, and we have come off quite a bit, has got to come up a little bit, you've got to start to look at what it needs to get past. So then 23,748, 23,750 roughly becomes the first sort of resistance line which the market needs to get above for things to improve somewhat. Supports come in at about 23,189. We've been putting out the same number last couple of days. That's a 61.8% retracement of the full rally from the June 4th lows and to the all-time highs. So let's see. I mean, if some gains are able to sustain. Bank Nifty yesterday traded within. It was an inside day for the Nifty Bank. We traded within Thursday's range. On the way up for the Nifty Bank, the level to take out is 50,828. We left off at about 53.63. It's about 1.5% away. On the downside, the recent low is 49,904. And then, of course, for the Nifty Bank as well, you look at the 61.8% retracement. So that's the setup. I mean, also remember here locally in India, tomorrow is a holiday because of the account of voting in Maharashtra. So markets are going to not be trading. Global markets are going to be trading. So there is that element to throw in as well. GIFT Nifty, I think, is indicating a slightly higher start. I mean, it's not how you start, it's how you close, especially after what we've seen over the last, 1 month, 1.5 months or so. So 70 points higher, but at least some green to begin the day with. Guys.
Absolutely. So I was just looking at the cues every day, and the more things are different, the more they turn out to be the same. And every time after the sell-off that we see, we hope that, there is some sort of recovery coming by. And if there is a short covering bounce, chances are that it may be, more hope than anything else. So that's something that we'll most definitely keep an eye out on. The Nifty has declined for 8 straight sessions. In the last 8 sessions itself, it's lost about 1,000 points. So if you look at it from a point-to-point basis, November 6th, the Nifty was 24,484. The bulls were hoping that the Nifty goes ahead and crosses that 24,500 mark. Well, 8 days later, you have the Nifty at 23,454. Now the bulls are hoping that the Nifty crosses that 23,500 mark and stays above that as well, the 200-day moving average that we're talking about. The index to track today will, of course, be the IT index. Why do I say that? Because yesterday was the key drag on the frontline indices, and that's because of the big cut that we've seen in the NASDAQ over the last few trading sessions. But yesterday, the Nasdaq ended about 0.6% higher, snapped a 4-day losing streak. So to that extent, do we see some relief coming in for the IT stocks or not is something we'll watch out for. The FIS selling, we've been talking about that, right? Now that's been reducing over the last few trading sessions. Yesterday's selling was just around 1,400 odd crores, and the DII buying is outpacing that for at least the last 3 trading sessions. If you look at the net flows as well, for 3 trading sessions, they've been in positive. Yesterday it was close to 1,000 odd crores as well. Interestingly, in index futures, the FIs yesterday sold the Nifty 275 crores, not much incremental selling, but the Nifty Bank, which was outperforming, saw some purchase, so we'll keep an eye out on that one. And the broad range to watch out for would be obviously yesterday's low of 23,350 and the 200-day moving average of 23,565 itself. The one stock I'll be watching out for will be Indian Hotels. In the last 8 sessions, when the Nifty was down 1,000 points, this stock is up 10%. It's got the capital markets day today, and usually the company lists out its long-term vision in the capital markets day. So we'll keep an eye out on that. And from a short term as well, it's entering seasonally strong quarter. So we'll watch out for that one stock. Nigel.
Well, that's right. The hope is that the Nifty IT stocks, they do well in today's trading session, because yesterday they got slam dunk and the Nifty Bank actually has been doing well. But if you had to pick a day, maybe today could be the day, and the bulls could look to fight back today. The reason I say that is because, overnight we have the dollar index. After a while, it was down close to around 0.5%, and that's something that you're waiting for. So a weaker dollar is something that you look forward to. And in terms of FI selling, they continue to sell. But the selling that we saw yesterday was half of the average that we've seen in November so far. So normally they're selling more than 3,000 crores. Yesterday it was sub 1,500 crores. So both those 2 data points, the bulls will want to cling on to those data points. What are the FIs doing yesterday's trading session? Well, they added more longs and shorts. So that's surprising. After a while, we've seen that close to around 5,000 long contracts is what they added, though they continue to remain net short with 76% of their positions on the short side. Moving to the options data then, 2 strikes were very active. 23,500 call. This is getting written for the last few trading sessions. Even yesterday, more than 30 lakh shares getting added there. And on the downside, this 23,200 mark is very, very important. And we are seeing signs of some put writing out there. So we'll keep an eye out on that front. But I'll tell you what, for the trend to turn, you'll want to see higher highs and higher lows as well, which hasn't been happening in the last few sessions. So the day's highs, in fact, if you just look at it, it's been on a declining trend. Every day we're making lower highs. Even if you look at the lows, on a day-to-day basis, you're making lower lows as well. So today you'll want to see actually the Nifty get past that 23,600 odd mark, which was yesterday's high. So that's going to be the important mark that we're looking at. So in terms of levels that we're looking at, you have the 200 DMA, that's the first reference point, resistance at around 23,650. If you can get past this mark, then you're calling for another couple of 100 points on the upside. So this is the crucial resistance zone. While on the downside, going by the options data as well, you're looking at this 23,200 odd mark. The Nifty Bank, last 2 sessions, it's been showing that it wants to put in a bit of a fight. And the bulls, they'll be counting on the Nifty Bank. Even in yesterday's trading session, it managed to defend the lower level, which is the 200 DMA. And it's closer to the 200 DMA in comparison to the 20 DMA. But you want to see the Nifty Bank do well from here on. And the sense is that if we have to bounce, well, this one needs to bounce and needs to see some kind of support coming in from the tech index as well. The Nifty Financial Services Index, one of the last few weekly expiries. So that'll be another index to track because today is Tuesday. So, you'll have one of the final weekly expiries. After this, it gets back to the monthly settlement.
All right, Nigel, thanks a lot for that setup. We'll keep an eye on the Nifty Financial Services, the last expiry today. But on that note, let's get you some equity calls today. Lawrence Blanco of CLSA says that in the short term, the Nifty is correcting off the October highs and continues to unfold towards that 22,800 to 22,990 downside target. Below this target level, he adds that the next chart support comes in at 21,281 to 21,555 area. He says he would look for evidence from the price structure and momentum indicators for a re-entry point around either of these price levels. He says, should the indicators fail to provide evidence of a tradable low at either of these levels, the risks will remain to the downside.
Okay, well, we have Mahesh Nandurkar of Jefferies commenting as well. He says an unlikely consumer sector earnings decline, broad-based earnings downgrade were the most disappointing aspects of the September 2024 quarter results as Q2. This is due to weaker revenue growth and margins. He says 12% earnings growth for Jefferies coverage. This is excluding oil and gas and metals, was still respectable though. Nifty EPS growth for FY25 is now projected by them at below 10%. Mahesh adds potential government spending pickup easy liquidity should help growth sequentially. He goes on to add, banking sector remains their high conviction bet and a buy. Okay, well, Jeffrey Dennis is with us, independent emerging markets commentator. Jeffrey, good to have you with us here. Thank you very much for your time. Prashant this side. So a little better overnight, but it's not really helped. US markets going up or going down hasn't really mattered since that top in September for India, where there has been continuous FII selling. The intensity is coming off, though. And many are starting to say, and we spoke to a bunch yesterday, who are saying that maybe it's time to, get back into the market here. Your thoughts, Jeffrey?
I think it probably is in the short term a good time to think about getting back into the market. I mean, the way I'm looking at the overall situation here is that obviously you've seen a tremendous rally in the US and a poor performance by emerging markets since the presidential election on November the 5th. And that's because investors are pricing in now higher bond yields, a stronger dollar, etc., possibly a slower rate of decline of Fed interest rates. So what that does is it tends to suck money out of the emerging markets. And my LinkedIn posts recently have really changed their tune. And I'm much, much more cautious about EM now in this environment because the Trump trade, so to speak, assuming it goes further, we'll have to see, isn't just not favorable when you get those sorts of conditions. Now, India is always going to be vulnerable when you get this sort of situation because it's so highly priced, and it so was obviously a few weeks ago so highly regarded by investors. But now that you've seen it coming off considerably, and I do really still believe in the growth story in India, I think if you get a stabilization for a period of time in some of these key overseas variables, such as bonds and such as the dollar, I think you will see India beginning to make some sort of a modest recovery. But don't let me muddy the waters here. This is a much, much more challenging environment, I think, for EM following President Trump's election, I guess, about 2 weeks ago now.
So what would your allocation then be, or how would that shift in DMs versus EMs? And if you could, talk about your pecking order in emerging markets itself.
I do think obviously we have to see how this whole Trump thing plays out. And the key issues, as your viewers will know and you know, are how much does he increase tariffs? And how much do other countries retaliate? What is the impact on all of this going to be, including tax cuts on the US fiscal deficit? So for me, the key is to watch the bond market in the US, because what the bond market is going to signal is concern about the deficit and therefore the debt levels. And I think bond yields are probably going quite a bit higher over the next, let's say, 12 to 18 months, maybe no more than 5%, but enough, I think, to propose some sort of challenge to the emerging markets, indeed to equities maybe generally. At this point, I would tend to prefer at the margin the developed markets to the emerging markets, but I still think it's worth pointing out that within EM, you've seen some very good gains year to date, although India's pulled back recently in India, more recently in China, also in Taiwan, also in places like South Africa. So where I am is to tentatively take a look back at take a look again at India in the short term for an overdue. I think still be long Taiwan because I think tech continues to look good selectively in other emerging markets such as in the ASEAN region, and it may be time to start taking a look at some of the oversold Latin American markets as well. But mark my words, I think this is a much, much more complicated environment now for EM because of Trump's election.
Hi, Jeffrey. Good morning. The last time we chatted, we were trying to factor in Trump coming into power, and that's precisely the way it played out. And you had mentioned in the past, India over China and Brazil over Mexico. That's your preference. But, you hinted that maybe the yields could head towards 5%. Well, I'll tell you what, a lot of our viewers will be hoping not, because that will not be very, very good news for emerging markets. What are you pricing in with regard to the Fed? Another rate cut coming in the next meeting, point number one. Point number two, what about the dollar index? that moved to around 107, and it moved very, very quickly.
Yeah, forgive me, sorry. I do think, of course, the other things that will influence the Fed are the inflation numbers appear to have stalled out at about the 2.5% level for the headline, just over 3 for core. I think they'll come down a bit more, but it's going to be slow going from here. The US economy looks pretty good. Now, I think what that probably means is the Fed cuts in December. And as of this moment, I think the prospect of 4 rate cuts next year, which is what the dot plot says, 4 rate cuts in the US is very, very unlikely. And I think it's more likely to be something like 2. And if it's not 2, it could be less than that. So I think, and again, inflation obviously is going to be impacted by these tariff increases. So you've got to see how that all plays out. So as far as I'm concerned, as I say, this is a challenging environment, and I think what it does mean, and you've just said it there yourself, is that the dollar is going to continue to be well bid, and that's completely against my long-term view just a few weeks ago that the dollar would weaken. And if the dollar continues to be well bid, European economies are weak, I think we possibly challenge parity against the euro. That is not good for emerging markets overall, and I think this is, as I say, it's a more challenging environment than I thought was the case several weeks ago.
All right, Jeffrey, we'll leave it there. Thank you very much. And I think you made that point clear. Absolutely. Appreciate you joining us here on CNBC-TV18, as always. Let's just quickly tell you what's lined up here as we get into the show. So we've got lots of interactions lined up. You'll hear from Venkatesh Balasubramaniam, he's a veteran analyst, of course, now with JM Financial Institutional Equities, from the sidelines of their conference. We'll talk markets with him. 9 o'clock, we have the management of MedPlus Health Services joining in. We've got some investors who've sort of sold stake in the company. We'll ask Mr. Reddy about that and more. 9:20, Andrew Holland will be a market master. 9:30, you'll hear from the management of IRB Infrastructure. The company plans to transfer 5 matured highway assets towards InvIT. Tarun Garg of Hyundai Motor India will be speaking with us at 9:40, second quarter earnings in focus. And of course, at 10:15, you'll hear from Lata in conversation with Pranjal Bhandari of HSBC and Abhishek Upadhyay of ICICI Securities as they talk about second quarter earnings wrap up and, of course, the economy. That's the lineup here.
Time to slip into a snappy break, but we've got a lot of stocks that we're tracking for you. We're looking at GMR Airports, PG Electroplus, ITI, Gulf Oil Lubricants, Z Entertainment, Shilpa Medicare, AstraZeneca Pharma, as well as Colgate. All of them will be reacting to positive news flow, while we have Vari Energies as well as MedPlus that will be reacting to negative news flow. Slip into that break, come back, we'll get into further detail on all of these names.
On creating competitive advantages, on being open-minded to learn from people who have performed better than us, on strategic thinking, on simulation, on workflow management, on project management, and other management techniques. The second thing that we may want to do, because we have, I often used to tell at Infosys, the reward for winning the semi-final is to get to play a tougher game, which is the final. Therefore, the fact that India has tasted success, the fact that India under Prime Minister Modi has done a good job so far, what that really means is this: we, the Indian citizens, must be in a position to play an even tougher game, a more difficult game, a game that will gladden the heart of every Indian. And to do that, one of the things that we may want to look at is, instead of becoming general administrators, we may want these management trainees that are trained at Mussoorie to be allotted to specific functions in the public governance system: agriculture, defense, and manufacturing, infrastructure, whatever it is. And then they have to spend the required number of years, 20 years, 30 years, 40 years, etc., like it happens in some of the developed nations, so that they do become subject matter experts and they can find solutions to us.
Are not yet the factory of the world. Let us first become the factory of the world, and then we should open up our doors for competition. Let there be no tariffs, nothing. I mean, United States, even after, let's say, 100 years or 150 years of developed nation status, even today they have actions.
Watching us here on Bazaar Morning Call, the GIFT Nifty indicating a near 70-point uptick at start. Let's see where we go from here on. But a lot of individual stocks in focus post-result season. So a lot of news-based stocks as well. So we do have our CNBC-TV18's list of top stocks for the day. Our team joining us this morning. Good morning, guys. Let's bring in Upasna for a bunch of stocks that are in news this morning. Upasna.
Good morning, Mangalam. So first up, let me start with GMR Airports. The company has reported its October air traffic passenger data. Now, October passenger traffic saw growth of about 9% on a YoY basis and 5% month-on-month at 1.07 crores. Now, company said that it has consistently maintained the traffic levels above 1 crore passenger per month since December 2023. Now, aircraft movements was up 9% on a YoY basis and 7% on a month-on-month basis. Next up is PG Electroplast. The company signed a definitive agreement with Spiro Mobility to become an exclusive manufacturing partner for manufacturing of EVs of Spiro Mobility in India. Hence, even this stock will remain in focus. Next up is ITI. The company has backed contracts worth 95 crores for mining digital transformation and surveillance system in Uttarakhand. Mind you that the company has recently entered a consortium partner and emerged as a lowest bidder for BharatNet Phase 3 project worth almost 4,559 crores. Next up is Gulf Oil Lubricants. Even this stock will be in focus as ICRA has upgraded the rating to AA+ from AA for company's long-term fund-based cash credit limits of the company. Hence, all these stocks will remain in focus today on our radar.
Okay, all right. Thanks a lot for that, Upasna. Well, let's hop across to Vamakshi. She's tracking a couple of names. Z Entertainment and Vari Energies. Morning, Vamakshi.
Well, good morning, Nigel. Let me first start off with Z Entertainment. The stock is expected to open higher today, and that is because Puneet Goenka has stepped down from his position of MD, and in fact, this has been done in order to concentrate on his operational responsibilities as the CEO of the company. With this step, he intends to dedicate his entire time to focus on improving the operational performance as well as the profitability levels for the company. As far as his terms of appointment is considered, his salary will include a variable portion of nearly 40%, which will be tied down to achievement of certain targets. And keep in mind that these targets were revised earlier on November 17th and were in fact enhanced. In addition to that, they've also appointed Mukund Galgali as the deputy CEO. He will be assuming his role in addition to his profile as the CFO. So overall, they're strengthening the management team, and that is the reason why I'm going with the green for this company. But apart from that, keep an eye out on Vari Energies as well. The company reported Q2 numbers. They were a rather muted set. Revenue saw an uptick of only 1%, so it was rather flat. The EBITDA margin too was flat, in an improvement of only 6 basis points out here to 14.68%. And the net profit, however, was up nearly 15%. But keep in mind that this growth is largely being led by multifold growth that we saw in the other income. The order book for the company stood at 20 gigawatt. The board additionally has approved investment up to 600 crores for setting up and development of infrastructure for the purpose of developing renewable power projects and the bidding pipeline. But overall, it's a muted set. So therefore, going with the green because the stock had seen a good run up yesterday. Going with the red, sorry.
All right, Vamakshi, thank you very much for that. More stocks with news flow. Back to Vinny. Vinny, morning.
Good morning. So we'll start with some of the pharma names. We have Shilpa Medicare. We're expecting a bit of a green today after the arm. It's Shilpa Pharma Life Sciences has gotten a certificate of suitability from the European Drug Authority, and this is for the API drug which they have is octreotide. So keep an eye on that one. This drug is used for treatment of high levels of growth hormones caused by acromegaly. So keeping an eye out on that. Green expected here. AstraZeneca Pharma, also we're expecting a positive up move here. They've received an import and market permission from the DCGI for its inhalation preparation drug, and this is going to be launched in Jan 2025. So yes, an important up move coming in for AstraZeneca. MedPlus, yesterday we did see that big block deal that happened. Now we do have the names that are coming in. PI Opportunities has sold 5.77% stake in the company, and we have SBI Mutual Fund that has offloaded around 0.84% stake in the company yesterday. So overall, we could see a bit of a red coming in on the screen because PI Opportunities has completely exited the firm. Now there are some buyers that have come in. Interesting name: Morgan Stanley, Franklin Templeton. We have Invesco Mutual Fund as well as Kotak Mahindra Mutual Fund among some of the buyers. Lastly, Colgate also in focus. They have actually started an initiative which is for AI-powered personalized dental screening for oral health movement. So keep an eye out on that one.
All right, we'll keep an eye out on all those stocks. Colgate, of course, will be in focus as the company looks to grow its category, increase the penetration out there as well. Thanks a lot for all those stocks which are in the news, Vamakshi, Vinny, as well as Upasna. Let's give you a quick recap of all the stocks. We have stocks like GMR Airports, PG Electroplast, ITI, Gulf Oil Lubricants, Z Entertainment, Shilpa Medicare, AstraZeneca Pharma and Colgate with positive news flow, whereas stocks with negative news flow are MedPlus and Vari Energies. All right, let's bring in Manisha Gupta for a roundup of all the action from the commodity space overnight. Good morning, Manisha.
Morning, and thank you for that. Well, the New York session on Monday has been quite strong, and we've seen Tuesday morning in Asia actually follow through it on that. So if I start with the crude oil prices, we've seen 3% of gains come in for the overnight markets. There is an Norway oil field power outage where the production has been halted, so that supply concern has been supportive. And then, of course, the Biden administration allowing Ukraine to use U.S.-made weapons in Russia has added to more war premium coming in for the prices. The markets also are looking at China PLR movement decision that comes in this week, and that would give you further sense in prices there. But it's not just crude, because when you look at metals, we've seen strong gains here as well. The gold prices rebounded by 2% overnight. Silver gained up by 3%. The dollar index, which gained 1.6% in the previous week, has seen a pause in that rally. That has been supportive. And that goes for metals as well, where copper, aluminum, zinc, even steel prices gained up by 3%. So almost everything in commodities trading in positive in Asia.
Okay, all right, Manisha, thanks a lot for that. Well, time to slip in a short break. Up next, we'll get chatting with Mr. Venkatesh of JM Financial Institution to discuss the recent FI outflows as well as the past quarter's numbers. Stay with us.
Europe is putting tariffs, right? And we are saying that we should open up. Then we will kill our manufacturing here. We are not a great manufacturing country in any case. Today, our GDP, manufacturing GDP is only 17% of our GDP, right? And we must get to 25-30%, what China is. But if you open up and we become liberal, then we will kill our industry.
So you talked about tariffs. Donald Trump says tariffs is the favorite word that he has in the dictionary, and he has promised that he is going to go full throttle as far as tariffs are concerned. What is that going to mean? We don't know the quantum, we don't know what finally will happen, but given the threat and what he's done in his previous term, what will it mean?
No, what Donald Trump is, in my opinion, he's very clear. He is a very clear-headed guy, whether right or wrong, but he has a clarity of thought. And he says that for me, America is first. I want to build America. I don't care about the world. For me, America is the world. And therefore, I want my industry to grow. I want America to grow, American industry to produce goods. It's not that Chinese should supply to me and then I will consume. I don't want to become only a consuming country. I want to produce and consume. So therefore, I want to put tariffs. Yes, tariffs do make you let's say lethargic. You become more uncompetitive
Yeah.
to an extent. So therefore, you have to gradually bring down the tariffs to become competitive.
Huh.
But you have to allow the kid to grow up
Huh.
before you start running the race.
So let me throw that argument back to you. You said you have to allow the kid to grow up. So where are we, sir? Haven't we adulted yet as far as Indian manufacturing is concerned?
Not at all. Not
No.
at all. That's what
Teenager or preteen?
Preteen.
Preteen?
Yeah, we are just kind of 4-5-year-old.
Really?
Yeah, absolutely. In manufacturing.
Yeah.
Because we, you see, China, if you open up the records and see, China in 1990, what kind of protectionist China were? In 2000, what was their protection levels? And what they are today? Today they are opened up because they become the factory of the world. I wanted to export steel in 98, 99 to China. I was not permitted to do that because China had tariffs. They removed the tariffs, but now today we have...
Well, the big news maker from last evening, Finance Minister Nirmala Sitharaman, played down concerns over a potential slowdown in the economic growth. Speaking at the annual SBI conclave in Mumbai, she said there is no reason for undue concern and India remains in a strong position. The Finance Minister also believes we need more conversation to discuss the inflation and interest rate dynamics. Let's hear her out.
Let me assure you that the government is fully aware of the challenges posed by both domestic and global factors. There is no cause for undue concern. India's economy remains resilient, underpinned by strong macroeconomic fundamentals. FDI inflows have demonstrated healthy growth in FY25, reinforcing global confidence in India's economic potential. Our foreign exchange reserves comfortably cover 11.8 months of imports and exceed 100% of external debt, underlining the strong net buffer in the Indian economy. The government is closely monitoring an evolving situation. We remain committed to taking all necessary measures to ensure that India remains fully and firmly on course to become the third largest economy in the world.
How concerned are you about inflation? And what is the view as far as interest rates are concerned? Do you expect a cut anytime soon, or do you believe on account of where inflation is at this point in time, the cut perhaps is going to be further pushed out?
You know, this is a question which I'm sure every journalist would love to ask. And Shireen leads the bandwagon. I respect her for asking me this question. I will certainly try to give an answer. Global markets don't go by your demand and supply ups and downs. They want a consistent flow of pulses to come into India. So complex issues, but very much affecting the common man. So inflation gets actually very, very volatile because of the supply-demand constraints. Equally, I think what is important is when you look at India's growth requirements, and you can have so many different voices coming out and saying the cost of borrowing is really very stressful. And at a time when we want industries to ramp up and move building capacities, bank interest rates will have to be far more affordable. So I'm putting as much what Shireen asked me as a reply back to you, saying these are our requirements if we have to make Vikasit Bharat not just an aspiration but as a reality. So we need to have a lot more conversation on this, and I would stop at that.
Well, that's the Finance Minister answering questions from CNBC-TV18's Managing Editor, Shireen Ban. We have Venkatesh Balasubramaniam now joining us, Managing Director and Co-Head of Research at JM Financial Institute Equities. Venki joins us from the sidelines of the JM Conference, India Conference, which is kicking off. Venki, good morning. Great to have you with us here. Thank you for your time. You know, those who, for the uninitiated, Venkatesh, of course, was the veteran capital goods analyst for a very long time at a top sort of institutional broker, And of course, he's taken on his roles and responsibilities at JM Financial fairly recently. Venki, welcome again. Just a quick word on your sort of understanding of where the market is headed from here, and what are the 2 or 3 sort of things which are at the heart of answering that question, the dominating drivers in that sense. Venki, go on.
Okay. Now, look at it this way. I mean, I think a lot of things started unraveling somewhere around, somewhere towards the end of September, when the Chinese government started giving a stimulus package. Now, when the Chinese stimulus package came through, most foreign institutional investors realized the Chinese markets are trading at a 1-year forward PE of 8 or 9 times. Meanwhile, India, through July to September, was trading at almost a 1-year forward PE of 21 to 22 times. Now, that is almost above 1 standard deviations from the mean. So the call was, is there a case to move some amount of money to China? So we believe that in the month of September, at least towards the end, there has been a move of money. China saw FII inflows of almost $96 billion. Now, once that passed, we moved into October, the month of October, and earnings season, I think, started somewhere around October 5th or 6th. Now, what happened in the earnings season was results were mostly disappointing. When we did our analysis, we realized that almost 66% of the companies in our coverage have seen EPS cuts during the earnings season. Almost 45% of the companies have seen target price cuts. We've also observed that a very clear trend that small and mid cap companies, we are seeing higher amount of EPS cuts than in large caps. And also we observed that in small and mid caps, a greater than 10% EPS cut was quite common, which was not very common in the large caps. Now that was most of October. In the month of October, we almost saw $13.5 billion of FII outflows. Thankfully for you, DII inflows of almost 12.9 billion kind of counterbalance the whole sell-off. And that is why in the month of October, you saw the broader Nifty correcting by only 6%, despite the fact that this was the largest single month outflow of FII money from India. Now, as we moved into November again, unfortunately, with Trump coming to power, it basically indicated to the market that the US dollar would be stronger. It also indicated that interest rates could be higher for longer. Now, we also believe that at that point in time, there is a possibility that FIIs might have taken a call. The US market looks very interesting. How about taking some money back? So what we have observed is the FII outflows have continued in the month of November so far. So this is where we are poised, and this is when we are trying to host our India conference. Now, the thought process is very simple. That valuations have corrected. Sell-side analyst estimates have also got cut. So valuations are slightly more reasonable. I wouldn't say India valuations are cheap. We are still trading at almost 20 times P 1 year forward, which is not cheap because the mean is somewhere close to 17 or 18 times. But this is a good time for investors to start once again analyzing their, whatever they have cherry picked so far and start analyzing them. And that is what we are facilitating in our conference, that people can come and meet some of these corporates in the conference. At some point in time over the next month or so, we believe FII outflows will start coming down meaningfully. At least outflows will stop. I'm not sure when the inflows will start, but outflows will stop. So this is a good time to once again start looking at things. We also believe on the Indian economy side, corporate capex will start picking up in the second half. We also believe that rural demand has started picking up. So some of these positive factors are still there, and domestic SIP inflows will continue. So it is a very good time to start looking at companies, figuring out where are the pockets of ideas that you should be buying.
Okay, all right. Hi, Venkatesh. Good morning and good to see you in. This is Nigel on this side. Very, very valid points you're making on that front for investors to come and post this correction. Risk, I mean, it's far more favorable when you're buying 10% low on the index itself, and stocks have corrected more. Talking about the domestic flows, we were talking about the mutual fund industry sitting on cash of roughly around 1.6, 1.5 lakh crore odd. Now, what's happened in the month of October, as you mentioned, the FIs were selling lock, stock and barrel. the domestic money was buying that. So we have seen a fair bit of deployment out there. In addition to that, we have IPOs where money was deployed as well. But we have the SIPs that continue to look quite strong. You have a ballpark number. What kind of liquidity is the mutual fund industry sitting on? Because we're banking on them. We are hoping the FI stop selling, and we're banking on the domestic liquidity. So if you'll have a rough number.
See, look at it this way. Even if you assume whatever was the cash levels at the starting of October have got deployed over the month of October, on a monthly basis, you are at least having ₹500 billion of mutual fund inflows which are still coming in. Even in the month of October, what have you observed? We have observed almost ₹590 billion of inflows into domestic mutual funds. Out of that, of course, roughly 70 odd billion is basically arbitrage flows. Even if you take them out, that's roughly ₹518 billion of inflows. We believe these inflows can continue for the near future, especially given that 50% of that is basically SIP inflows at almost 253 billion. So we believe that there is enough and more money in India to support this sell-off. And at the end of the day, the sell-off has come down a little bit. At least it has started decelerating. At some point in time, it will also end. Maybe it will take a month more, but the deceleration will happen. And as people observe that third quarter is perhaps not as bad as the second quarter, obviously FI outflows will kind of stop.
Okay, all right. Just to summarize that, Venkatesh, hopefully the FI outflows slow down, and you believe that domestic money is adequate. I think it's around 5% of the total industry size, and that's adequate to support the market, right?
Yes, precisely.
Got it. What would be the realistic assumption on earnings, though? I'm looking at the BSE 500 companies. The earnings growth for the first half was little south of 10%, I think around 9%. And for the year, still consensus is working with, I think, 16 to 17%. The government spending is there, yes, but the base as well is a little bit higher. Realistically, what should the earnings growth look like?
We usually look at earnings growth on the Nifty, and now given that the quarter is largely over and most of consensus and our own analysts have cut numbers, our analysts predict that the Nifty growth for the current year is more like 6 or 7% odd. That is what we are expecting for the current year. So this year, on a relative basis, we have seen a deceleration. We are expecting a rebound the following year, which is FY26, where we are expecting almost 17 to 18% Nifty EPS growth.
All right. Interestingly, the domestic mutual funds, or MF holdings, if you look at it, they're overweight on pharmaceuticals, healthcare, capital goods, and consumer durables. Sectors which saw the highest FII outflows included the likes of BFSI, oil and gas, and FMCG. Whereas the sectors which saw a fair amount of inflows, or the only two sectors which saw inflows, were chemicals and metals. Would your sectoral position or call be similar to what the mutual fund industry is overweight on and what the FIIs are buying in terms of sectors right now as well? Or would you have a different outlook here?
Okay, see, on the long side, the sectors that we like are obviously one of the best sectors we like currently is metals and mining. And I'll kind of lay out the reasons for you. At this point in time, spreads are high. Why are the spreads high? Because input costs are lower, especially coal prices are on the lower side. Now, with the China stimulus, we are expecting metal prices to go up more. Further, when Trump takes over presidency, normally he puts a lot of import tariffs. Now, that also leads to higher prices on the metal side. So, we believe that the next couple of years could be a very good time to own metals, and we would advise most investors to be overweight on metals. Now, what beyond metals? Now, if you look beyond metals, some of the sectors that we like at this point in time are basically IT, pharma, diagnostics. This is something which we really like. We also like the asset management industry. So, ownership there could be good. Amongst the banking and financial space, we are a little partial towards PSU banks. Given that we are expecting interest rates will be higher over the next year and a half once Trump comes through, we believe that NBFCs will not do that well given their fixed rate asset books. and between private sector banks and PSU banks, we have a slight preference for PSU banks because valuations look more reasonable. So these are some of the sectors where one can be overweight. Chemicals is one sector which you mentioned where there was FII inflows. Good time to start looking at this sector, but we would wait for another 6 to 9 months before we would advise people to start building positions. The reason there is maybe you will see another quarter or so of earnings cuts, so valuations become more reasonable there. But yes, Trump coming to power is very good for export-oriented sectors because we believe that Trump will definitely put higher tariffs on China vis-a-vis India. And what that does is if you have sectors like, say, chemicals or maybe even wires and cables or tiles or a few of the other sectors which are export, they would definitely benefit in this kind of a scenario. And obviously, what you are noticing now is FIIs are already positioning themselves for that. So that is why you have seen inflows in chemicals.
Very interesting calls out there, especially on the metals front and the PSU banks. Unlike a lot of the other conversation that we've been having with a lot of experts who do believe in private sector financials, but Prashant, interesting ones out there.
No, absolutely. And Venkatesh, thanks very much and hope this is the first of many conversations here on CNBC. Appreciate it. Well, that is the conversation from the sidelines of the JM Institutional Conference. We'll take a quick commercial break here. We'll have Mitesh and Sudarshan joining us on the other side. We talk specific trades. Stay with us.
Chinese steel, which is surplus, they are nearly 60% of their capacity is surplus capacity. Yeah. So it comes via Japan, Korea, Vietnam, Malaysia to India at 0% duty. Are not yet the factory of the world. Let us first become the factory of the world, and then we should open up our doors for competition. Let there be no tariffs, nothing. I mean, United States, even after, let's say, 100 years or 150 years of developed nation status, even today they have tariffs. Europe is putting tariffs, right? And we are saying that we should open up. Then we will kill our manufacturing here. We are not a great manufacturing country in any case. Today, our manufacturing GDP is only 17% of our GDP, right? And we must get to 25, 30%, what China is. But if you open up and we become liberal, then we will kill our industry.
So you talked about tariffs. Donald Trump says tariffs is the favorite word that he has in the dictionary, and he has promised that he is going to go full throttle as far as tariffs are concerned. What is that going to mean? We don't know the quantum, we don't.
Welcome back. You're watching us here on Bazaar Morning Call. A bunch of stocks on our radar, a bunch of conversations overnight. Can today be an IT day or not? Will today actually be the day where we see a bit of relief for the bulls after 8 days of relentless selling? Well, to answer a lot of your questions, some of them stock specific as well, we have Amnish Agarwal, who's the head of research at Prabhudas Leeladhar, joining in. Amnish, thank you so much for joining in. Good morning. Two stocks I wanted your thoughts on at the outset itself. First one, of course, is Mamaearth, Honasa, which was down about 20% in yesterday's trading session. Weak numbers coming in. And the second one would obviously be Swiggy, because the Swiggy versus Zomato market cap valuation differential sort of battle is playing out as now both of them are listed. So on both those counters, if you have a view.
Okay, hi Mangalam. You see, as far as Honasa is concerned, I think this is typically what happens in many of the consumer companies. Honasa started with their lead brand focusing on the, you can say, B2C on online platforms. And later on, they went into your all the general trade. Now, if you look at commentary of not Honasa, but many of the other companies, what has happened is that the fast growth of quick commerce has actually clogged the general trade to quite a good extent. And that is why many companies, some might have taken, say, 6 months earlier, a couple of them have taken now. So they are taking some sort of a, you can say, inventory destocking. And Honasa also suffered due to that. The second is that, you see, it is a fairly young company. Today, when it comes to the entire, particularly personal care, hair care, beauty products kind of a kind of ecosystem. There, the competitive intensity today is very high because you are getting all the global brands, courtesy all these platform companies. So I think the going is never going to be easy for, you can say, many of these companies. And given the fact that particularly the young ones where the profitability is not so visible, they don't have a long track record of profitability, I think some reactions of these kinds are likely when the destocking happens at so early a stage. But having said that, I think it's going to take some time for the things to stabilize at Honasa. Okay, so I can't give you exact view that whether one should go or buy now or one should wait, because any which ways there is some sort of a slowdown in demand which is also there. But definitely, I think the times are going to be challenging for the entire space, although one might say that in the coming quarters, the performance of Honasa and many of these companies might show some improvement. Now, your second question was regarding Swiggy. So, you see, once you start analyzing Swiggy, then the typical debate boils down to Swiggy versus Zomato. And when you look at the various parameters in terms of throughput, in terms of margins and some of these, you can say today's Zomato is far better placed than Swiggy. There's absolutely no doubt. The second difference is that if you look at the past 3 years kind of a period, then Swiggy has actually in the last 3 or 4 years lost market leadership in the key segments. For example, they were the first ones to start quick commerce. Today they are, say, number 3. Even in case of food delivery, Zomato has raised ahead of them. So, and in the, you can say, typical marketing scenario, what usually happens is that the leader makes maximum amount of money. So to that extent, I think what is attracting investors to Swiggy is that the market cap of Zomato is, I think, roughly around, say, anywhere 2 to 2.25 times than that of Swiggy. So that is something which is making, you can say, Swiggy attractive to investors. But having said that, if someone wants more clarity in terms of profitability, more, you can say, success in terms of, say, hardcore numbers, then I think Zomato seems to be far ahead than Swiggy at this point of time.
All right, so Zomato's far ahead of Swiggy, even as there is a fair amount of valuation difference between the two. Before we move further, just a quick thought on all these city gas distribution companies, because for twice in a row, GAIL has gone ahead and cut the APM gas allocation to them. The street believes that this is the start of, derating for these stocks, as a result of which, we saw big cuts in IGL, down almost 19% in yesterday's trading session. MGL was no different. After these cuts, do you think that, it makes a case for maybe buy, given the larger opportunity of natural gas or piped gas being delivered to most places?
You see, there are two ways to look at it. One being that your allocation from GAIL has been cut. And if you look at over the years, the allocations have not been going up for city gas distribution companies because the gas is also being diverted for some of the other priority areas. Now, from the second angle, when it comes to now move towards the greener fuels, whether it is EV, whether these are hybrids or whether it is CNG, definitely there is a lot of scope. And many of these companies, they actually depend a lot on what happens on the, you can say, automotive front, what happens on the, you can say, domestic PNG also, although I think they make maximum amount of money when they supply to automotives. Now, I think in the longer term, the demand is there, and I believe that even if the supply to them is cut by GAIL, then they will be able to, I think, they will import us and compensate for that. And I think if you look at the past 5-10 years, kind of a longer view, do they have pricing power? The answer is yes. So I think it's a kind of very sharp reaction which has come in. Okay, but having said that, at a lower level, yes, they could be good trading bets.
All right. Amnish, we'll come back to you in just a bit. We have Mitesh also joining us, Mitesh Thakkar and Sudarshan Sukhani, with what they're making of things. Gentlemen, good morning. Good to have both of you here as always. Mitesh, let's start with you. I think GIFT Nifty is indicating a slightly higher start, though the close is going to be more important in how we trade through the course of the day. What are trades? What trades come to your mind? Index and then stocks?
Morning, Prashant. You put it correctly. I think, the opening is good, but what will matter possibly is the closing. And, I've been calling for some kind of a market pullback given the fact that, we have a scenario wherein the indices are showing extremely oversold readings and they could therefore, give some kind of a bounce. So I'm slightly positive for the time being. And my understanding is that today could be the day when we could see at least, if not a big reversal, at least a strong pullback rally. And then let's take it from there. So the level which I watch on the upside is obviously getting past the 200-day average first, which is around 23,550, 560 zones. I think we should at least test that. If we start sustaining about that, then I think we'll look at possibly this rally extending to about 23,800, 850 zones.
All right. Sudarshan, your call on the index and topics?
Yeah, good morning. Well, the markets are now coming to a standstill. We have been talking about how momentum is falling, although the decline continues. Yesterday, again, we saw a de-acceleration in the momentum of decline. That is the first sign that perhaps some kind of a stop is coming to this fall. Now, it may or may not last, but today is probably a good day to find out. So for short-term intraday traders or swing traders, there's a buying opportunity. Now, that buying opportunity doesn't come at the open. There's no need to chase gaps, but any small intraday decline in early hours should be used to take a long position in the Nifty and the Bank Nifty both. And then we see where we go, keep stop at 23,400. And it's a matter of chance, but it's worth taking the long side.
Okay, all right. What about individual stock ideas? Sudarshan, you go first.
All right. Well, I have mainly buy ideas today. Havens is a buy. Stop under 1600. Now the stock hasn't actually recovered from the decline. It's just moving sideways. So maybe the sideways is a substitute for further declines. We'll see. Similarly, Indigo is a buying opportunity with a stop under 3900. Same pattern, big decline, sideways movement when the Nifty was again declining. So let's see whether this sideways was preparatory to an up move. And the third is Syngene, which is an intraday short with a stop above 860, and that is because of the big hammering IT took yesterday. Muthoot Finance is the last buying opportunity, is the last name in the list. It had a big gap up yesterday. It may tell us that perhaps.
Okay, I think we lost the line there with Sudarshan. We'll just try and have him back. Mitesh, you want to step in? Your stock calls?
Yeah. So for me, I think, I would look at couple of buy calls today, hoping for a reversal. So Hero Motors is a buy with a stop at 46.75 and 47.80-90 is my target area. Jubilant Foods, after excellent numbers, has been slightly subdued, but just been giving a pullback to the averages. So buy here with a stop at 597. Look for targets of 630, and also buy on Chola Finance with a stop at 1227. We'll take a tight stop and looking for a pullback to about levels of 1280. On the selling side is HDFC AMC, around 42.30, 40 zones. So sell on a bounce back. Sell with a stop at 4,300 and look for a target of around 41.20.
All right, gentlemen, thanks a lot for that. We'll take a short break, come back with a pre-opening rate. We'll be joined by the management of MedPlus Health as Premji Invest and SBI Mutual Fund have divested about 6.5% stake in the company. We discuss the plans for the company after this short break.
Will happen, but given the threat and what he's done in his previous term, what will it mean?
No, what Donald Trump is, in my opinion, he's very clear. He is a very clear-headed guy, whether right or wrong, but he has a clarity of thought. And he says that for me, America is first. I want to build America. I don't care about the world. For me, America is the world. And therefore, I want my industry to grow. I want America to grow, American industry to produce goods. It's not that Chinese should supply to me and then I will consume. I don't want to become only a consuming country. I want to produce and consume. So therefore, I want to put tariffs. Yes, tariffs do make you, let's say, lethargic. You become more uncompetitive to an extent. So therefore, you have to gradually bring down the tariffs to become competitive. But you have to allow the kid to grow up. before you start running the race.
So let me throw that argument back to you. You said you have to allow the kid to grow up. So where are we, sir? Haven't we adulted yet as far as Indian manufacturing is concerned?
Not at all. Not at all. That's what
Teenager or preteen?
Preteen.
Preteen?
Yeah, we are just kind of 4-5-year-old.
Really?
Yeah, absolutely. In manufacturing.
Yeah.
Because we, you see, China, if you open up the records and see, China in 1990, what kind of protectionist China were? In 2000, what was their protection levels and what they are today? Today they are opened up because they become the factory of the world. I wanted to export steel in 98, 99 to China. I was not permitted to do that because China had tariffs. They removed the tariffs, but now today we have 0 tariffs on steel. Chinese steel, which is surplus, they are nearly 60% of their capacity is surplus capacity. Yeah. So it comes via Japan, Korea, Vietnam, Malaysia to India at 0% duty.
Let me ask you for your comments, wearing your former Cisco hat, on what we're likely to see happen on the infrastructure side, on the chip side, with the wars that are currently underway in the industry. How much are we likely to head into a phase of significant consolidation? Is that something that you believe is just a question of timing? It's not if, it's when.
Well, it depends on the 3 categories that you covered. Let's start with semiconductors. I happen to be very close to everyone from NVIDIA to AMD to Broadcom to...
Back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio, 14 minutes away from market opening. The pre-open rates have come in, as the GIFT Nifty was indicating, almost 60 points higher on the Nifty, though we have to allow them to settle and at the same time wait for the market close as well. But when we're talking about markets, today the primary issue is in focus, that of NTPC Green. 10,000 crore rupee IPO opens for subscription today, closes on November 22nd. The management, remember, earlier told CNBC-TV18 the proceeds of the IPO will be used for capex and they're likely to commission 90 gigawatts by 2027. Let's hear out what the management had to say to us.
We have already chalked out programs to go up to 60 gigawatt by 2032. And this is what we had declared almost about 2.5 years back. Today, when the storage prices are coming down, we believe that we will be able to achieve that before 2032 rather than waiting up to 2032.
The proceeds of this 10,000 would be essentially for filling our capital expenditure. It's almost 19 gigawatt in the next 3.5 years. But however, intermittently we may use the proceeds also to, retire some of the costly loans temporarily. But broadly speaking, it is meant for a capital expenditure. The present debt equity is 1.91. But however, we will be implementing all this with a debt equity ratio of 80-20.
As you know that NTPC supplies almost 1/4 of the electricity to the entire country. We have the pan-India presence. So similarly, NTPC Green Energy will be playing the similar role, that it will be leading green energy company which will be having footprint almost everywhere. But to start with, what we are doing is that the areas where there is a maximum potential for the solar and wind, we are focusing on that, which is like Gujarat, Rajasthan, Andhra Pradesh, Telangana. These are the states where we started, but going forward we will be going almost across the country wherever there is a potential, whether it's for solar or wind, to meet the peak requirement and to have the grid stability during the day when there is excess solar. So it's both, there is a combination of that. So there will be huge capex requirement for the storage solutions. We are working on that also. And going forward, there will be another important segment, which is the 4th segment, which is called the green molecule. Going forward, there will be storage solution as well as the green molecule solution, which will be FY27. We will be having 19 gigawatt commissioned, but that does not mean only 19 gigawatt. There is a work which is going on continuously. And what we intend is that what we had said about the 60 gigawatt by 2032, we should be in a position to commission that before that.
Amnish, what do you make of this issue? NTPC Green, plenty of interest out there. They're priced it quite favorably as well. Your view?
Yeah, so Nigel, NTPC Green is into, you can say, as the management said, green energy, solar, wind. You see, the closest comparable for that seems to be Adani Green. So if you compare the valuations of, say, Adani Green and this company, then definitely the plans are very ambitious. The growth rates will be high over the years. Is the stock cheap? I would say no. But for the investors who are ready to bet, say, for the next few years, I think the growth will come, and in the long term, one will make money. But definitely at the current price of, say, 8 odd rupees, with a market cap of, I believe it should be roughly around, say, 85 to 90,000 crores. So on a relative basis, you might find it to be attractive. On an absolute basis, I don't think that the issue is it is cheap in any which way.
All right, we take that point. Thanks a lot, Amnish, for joining in. You might want to, stay on to listen into this conversation that we're likely to have with the management of MedPlus Health Services. The first management on the show today, Premji invests in SBI Mutual Fund yesterday, divested about 6.6% stake in the company for about 550 crore rupees. Remember, the company has reported a good set of second quarter performance. So to discuss this and more, we do have G. Madhukar Reddy, who's the MD and CEO at the company, joining in. Thanks a lot, Mr. Madhukar Reddy, for joining in. We'd like to ask of you, these institutions who are selling stake, who's on the other side, who's on the buying stake, and whether with the prospects of the company looking so strong, you yourself would want to, increase your stake in the company further as well as these institutions offload some of the stake that they have. But that depends on how the fundamentals of the company grow. So let's talk about the fundamentals of the company itself. Two things that really stood out. One was, the overall margin profile of the company improved, and that was in congruence with your own private labels improving. You had earlier in the past indicated that, private labels should be about 25% of your overall GMV over the next couple of years. What's the differential in margins between private label and the regular products that you sell? And where should margins settle at once you reach that 25% mark for private label?
Yeah. So as you all know, private label is what makes retail tick. And it is actually no different in retail pharmacy also. To us, we are already at the 24-25% GMV, but that includes both medicines and non-medicines combined. So if you only take medicines, which is what I was talking about earlier, by volume, we should probably be at around 16.5% or something like that. I expect we'll continue to grow at the rate of around 1% by volume, which is on the MRP basis every quarter. And that basically adds roughly around 15 basis points to our overall margin. So I expect that we'll continue to do this over a period of time, and it'll be a slow but gradual growth because I think we already have the early adopters in. A lot of people, we started our private label in MedPlus only last year, and since then we have gone from almost 0 to 16.5% on volume basis. So while there is growth, it's going to be slightly slower, but it is going to be inevitable.
So just a back of the envelope calculation out here, 1% increase in private label medicine volume adds 15 basis points to margins. You are at around 17%. You intend to be at 25%. So that's about 8 percentage points. If you back calculate that, the net impact of margin should be a positive 1.2%. Should we look at it that way?
Absolutely. It'll happen though over several quarters. But that said, I must say that unlike normal retail, grocery and other retail, there is no real cap on the amount of private label you can actually do in medicines. If you look at the US markets, US FDA will tell you that 91% of all medicines sold in US are generics. And by generics, it is private label of some store or the other. So if you go to Walgreens or CVS or any of the other stores out there, they'll either give you the innovator product or they'll give you a generic. And that generic is the equivalent of what we are doing right now, the private label. So, the one differentiation I'd like to make is when you, let's say, go into a grocery store to pick up a store brand soap or something like that, there are some people who will pick it up because, it is inexpensive and they believe it is the same product anyway. But a lot of others will have some brand loyalty, and that is because, the brand itself may have some kind of a unique thing. It could be a fragrance, it could be a texture, it could be some other quality which you really like in that particular brand, so you're not willing to switch. But unlike that, medicines have no such difference. You know, a 650 mg paracetamol is 650 mg paracetamol. If it is made in the right factory and to the actual standards, it should not be any different at all. Hence, you don't see any cap in the private label. It's just that people have to accept that it is the same quality, and it'll take a little while. So while I say the near-term target for us is 25, the long-term target could be anything.
Okay, all right. Hi, Mr. Reddy. Good morning and good to see you in. Just a quick question on the shareholding pattern. What is the feedback? You know, last few months, there's been a lot of action. One big shareholder getting out, another one coming in. Do you think for now, all those big shareholders are satisfied who are left and who wanted to leave, they're out? All the clean-out trades have been done?
I think so, but I won't really see it as a clean-out. I think it is one type of investor giving way to another type of investor.
True.
We started the company in 2006, and we have had several sets of private equity investors. And the last two private equity investors, which is Premji Invest and Warburg, they entered the business in 2017 and 2019, 2018 and 2019 and 2021. And their mandate was to basically take the company public and find an appropriate time to exit. So they have done their job. They helped the company through our growth process and everything else and all. And now I believe it's time for the public market investors to come in. And I think we have had the guys who actually replaced them are excellent, partners to have. And I feel obviously very happy to have this guys next journey.
All right. You know, Mr. Reddy, we have our ear to the ground, but always better to clear these things, because sometimes shareholders are wondering whether it's an opportune time, but if there's going to be another big shareholder who's going to come to sell, then they just, delay their purchase of the stock for a bit. Let's talk about business though. Your store addition, I think for this year, you'd scaled down to around 450 odd. What's the current target for this year? And for FY26, you get back to that 600 odd mark. Also, with this shift in private labels, what does it mean for your working capital?
So, two things. We have already announced that we'll do between 400 and 450 net stores, so that's on. We lost a little bit of time in the first quarter because of elections and a couple of other things out there, and we are not really now eager to make up for that. So that will be felt this year. But next year, as you said, we'll most likely end up going back to the 600 stores. On the private label side, well, in the long run, because private labels actually cost a lot more to actually purchase, it'll be a positive thing for the working capital for us. The thing is, it is too early, because right now we have got both the brands and the private label. So it is, in fact, have actually bloated our overall working capital out there. But as we go forward and as it becomes more clearer on what we need to stock and what can't be substituted in the brands, then when we know that, we'll probably, stop stocking the rest, and private label will take the position of those. And given that private label costs a fraction, 20% of what the branded things cost, I expect the working capital requirements will come down significantly.
All right, quickly before we let you go, sir, running short on time, the smaller part of your business, the diagnostic business, you've said that you won't invest any more money into this. For the last 2 quarters, it's been a bit positive. What is the likely run rate which is sustainable here?
It is still at a very early stage, I would say. It is still growing. Right now we're doing around 27 crores a quarter, so that's around 108 crores per year kind of run rate. I expect we'll continue to grow here. We'll see, how much. I can't really commit that number, but I expect it's still in the early stages. And we still, as you know, it's a different model. It's a subscription-based model. On that count, we still don't have the number of subscriptions we wanted. So we're not going to go and basically expand immediately on that side.
All right, Mr. Reddy, great conversation as always. Thank you very much for joining us. It's a pleasure having you with us here. That's the management of MedPlus. I think we've got 2 minutes to go as far as market open is concerned. We're going to just highlight Suzlon as a stock which should be in focus. It was up 5% yesterday. It's fallen off quite a bit from the highs. Morgan Stanley's come up with an upgrade. They're saying, well, the thesis is intact. Sudarshan is here with details. Sudarshan.
So Morgan Stanley has upgraded the stock to overweight from equalate, but has cut the target to rupees 71 from rupees 78 per share. It believes that after steep decline in the stock price from 52-week high that stock had hit in September, it's a good time to accumulate the stock. And the rationale of the upgrade is first, business moat and growth opportunity for wind OEMs remains strong, and it believes that company will be a beneficiary of India's energy transition, and it expects market share to improve to 35 to 40% by FY27 versus 25% FY24, and India's wind additions will drive 32 gigawatt of orders over FY25-30. Talking about estimates, it believes it continues to hold its assumptions of 7.15 gigawatt of sales volume over FY25-27, but it has lowered FY25 wind turbine generator EBITDA margin by 50 basis points, but has retained FY26 and FY27 margin assumptions. So on the basis of these rationales, it believes that it's good time to accumulate Suzlon Energy.
Sudarshan, thank you very much for that. So that Suzlon in focus, market starting about 75 points higher on the Nifty, 200 points on the Sensex at this stage. We'll look at the indices, headline indices, and then we'll of course look at individual stocks, etc. As well. So first rates should start to come up shortly. Look at names like Vari, Premier Energy. These are all solar companies. We're all up a bit over 10% yesterday by close. Of course, Vari's got some news flow, as Vamakshi was highlighting this morning. So first rates anytime now, and it's about 1/3% higher to begin the day. So 90 points, so 23,500 plus, 77,570 or so on the Sensex, and the Nifty Bank is starting about 1/4% up. 50,470, 80 roundabout is where we are starting. Mid-cap index is up about 0.5% as well. Look at that. The Nifty heat map coming into view. It's largely all in the green to begin the day. Just a few names are lower. So that's a good-looking screen. Now, of course, to the real task of holding on to what you started the day with. 23,555 is where we are starting.
Well, stocks in focus. I think the one top of mind is Honasa. Smacked back yet again, down another 15%. Yesterday it was down, circuit down 20%. It's lost another 15%. I'll tell you what, this is what will hurt investor sentiment as well. Because that's a stock that's way below its IPO price. It danced all the way to 500 rupees. Now it's half of what it was at its peak. So that one's clearly a worry. The other one is Vari Energies. The stock has opened up down close to around 5%. Now it's still down close to around 3%. And volumes are very, very large on that one. Akam Drugs, I don't know what's gone on there. But in terms of losers, that's coming up as one of the top volume losers, down close to around 4% or thereabouts. No respite for IGL, at least as of now. The stock is down close to around 1.5%. What's flying away in today's trading session? Well, the street likes the news with regard to Mr. Puneet Goenka. He's asked the Z board to relinquish him from his position as MD. For the timing, the street seems to have taken that very, very positively. The stock is flying away. ACME Solar, that's the new listing in there. That's up close to around 4.5% in today's trading session. So good up move is what we're seeing on that stock. Easy Trip was another stock that got smacked in the last few sessions. That's up close to around 2%. And Indus Stars, the stock has corrected from 450 all the way to 320. For the time being at least, that stock is seeing a good relief rally as of now. PG Electro Plus, that's the other one in there. Locked, upper circuit, 10% higher. There was some news flow with regard to their diversification as well. Now up more than 10%. So big up move is what we're seeing out there. Mangalam.
Well, on Honasa itself, it is a narrow exit door right now. Promoters own about 35% of the company. Remember, it's been a year since the company is listed, so everyone can obviously go sell, in the markets itself. Honasa is the one that I'm talking about. In the last two trading sessions itself, down almost 35, 36 odd percent. Now, with today's decline, the stock is actually, in terms of valuation, fallen below that $1 billion mark as well, at about 8,100 crores for the market cap. 35% of the shareholding is with domestic and foreign institutional investors itself. So we'll keep an eye out on, the shareholding pattern out here, the delivery volumes, etc. on Honasa, down 16% right now. CMS Infosystems is another one which is down about 4 odd percent as well. Kitex Garments, I mean, it's a lot of these motley crew of stocks which are doing extremely well this morning from the cash market. In the, other areas of the market, Trent, which was a big loser yesterday, has come back in today's trading session. Straight off the bat, up around 2.5 odd percent. The question is whether this up move sustains on that stock or not. Power financier companies are doing extremely well in today's trading session so far as well. So we have PFC, REC, which have opened with a fair amount of gain. NTPC, of course, on account of the opening of the NTPC Green IPO. A couple of these oil marketing companies doing well too, and a few of these upstream oil companies, the likes of ONGC, etc., doing better. IT stocks relatively better than what they were yesterday, up 2% for Infosys.
Well, and as we did that market check, we're at 23,600. But as Prashant has been mentioning, the start is not as important as the end. So hopefully the bulls have something to cheer. Two factors that we highlighted earlier today. The dollar index is weaker. That's normally bodes well. And the FIs are selling, but they're selling relatively less.
You know, Nigel, we'll only know, we'll only be wiser in hindsight. You know, we'll have 2-3 days of flattish markets, slightly higher markets. Then we'll kind of look back and say, well, that was it. That was the point when the markets have turned. And it always happens like that. I mean, you know, almost next to impossible to say that, well, this is it. And, you know, the selling has stopped. And that we'll know from the institutional figures. But I think for the market to have turned, I think that we'll only kind of point to in hindsight and say that, you know, well, that has happened. Market, of course, I mean, the good thing is, even if, for example, in the US, there is some turbulence, etc., here we've already kind of, in that way, paid the price. We're off about 11-12% from the highs in September. So it's a tougher environment, as many have been pointing out, and that is all correct. But the market, the prices are also down. You know, they're not nearly as much down as they were in earlier bull markets. But when we talk about earlier bull markets, it's like a different era. You know, we've had sharp corrections during bull markets, but that was back in pre-2010. In the last 4 years have absolutely been just one way, with very little correction. And this 10% plus fall on the Nifty is the first that we've seen of this magnitude. So, you know, in a different kind of a zone in terms of levels, in terms of pullbacks, etc. as well. Let's put some of these points to Andrew Holland, who's with us now. He's Chief Executive Officer at Avendus Alternate Strategies. Andrew, good to have you with us here. Thank you very much for your time. Andrew, of course, is someone also who's got a keen eye on some of the global stuff. And that, if one is to believe some, is the head, and emerging markets are now the tail. Would you see it like that, Andrew? You know, we had somebody in the morning, Jeffrey Dennis, who was saying that it's a much more tougher environment because the competition for flows is not just other emerging markets, but it is the US itself. Just your thoughts there, Andrew.
Yeah, no, I mean, the US is really the only game in town, right, Prashant, because all the action's going to be there. And all the negatives, you know, from what we know of what President-elect Trump is saying, is going to impact emerging markets. So I think, you know, until he takes office and we see some of those policies, you know, it's difficult to make a case. You know, the best case we can make for India at the moment is that relatively compared to anywhere else, and that's mainly China, we're going to be okay. But that's really not a reason to buy. And if you think about, you know, let's say calendar year next year, if you're expecting earnings growth of, say, you know, 10%, which is looking like at the moment, so you could say maybe the index goes up in that kind of a level. But, you know, in the US, I'm looking at, you know, bond yields of 5%, you know, because everyone's talking now of yields going higher or the Fed going on hold, if not increasing, you know, the kind of interest rates in the second half of 2025. So 5% yield, given I might have depreciation in India of 5%, I might as well stick where I am. Why do I need to come to an emerging market? If anything, the one place to look at is China, because, you know, they do have a lot of powder dry, which they can use to stimulate their economy. For India, unfortunately, at the moment, you know, the government spending's really not picked up, so that multiplier effect is not there going into the second half of the year. And there's no, you know, earnings are being downgraded, Prashant. We talked about this before. Volumes are lower than expected, but more importantly, margins are a lot lower. And so there's no, with the valuations still where they are, I just can't get excited at the moment.
But, you know, although to be fair, Andrew, in the US also, S&P trailing P multiples are north of 25. You know, so it's not as if valuations are cheap in the US, right? Here in India, as you asked, it was a rhetorical question. I understand. Why do I need to come to other markets, right? In the US, I mean, you got about 10, 12, 15 companies which are driving bulk of this gain. Everything else is down in the dumps. And maybe that'll pick up. Here in India, though, that's not the case. It's been the opposite, right? It's been small, mid caps, etc., which have led this rally over the last couple of years. Large cap returns have been okay. So there is that. Andrew.
Yeah. So going back to the US, but what do you have, Prashant? You have an expected corporate rate tax cut, which is going to be earnings per share, kind of accretive, right? And that's going to really help the kind of small and mid cap companies as well. And that's where the excitement is, and that's why there's a lot of talk about M&A picking up in the US. So it's going to be a broader based rally, is what the market's telling us going forward in the US, and that's why it remains kind of the main game in town at the moment. But for India, that earnings pressure is not going away for the time being, and I just don't see what the upgrades are. So either the market consolidates and then earnings start to improve in the second half of 2025, or valuations come a bit lower. So I think valuations probably come lower before earnings start to pick up. And plus, Prashant, one of the things that we've all been kind of banking on is an interest rate cycle, which is going to be lower. And now there's question marks about that, particularly in the US. And I think, unfortunately, the RBI will be on hold in December as well. So we're going to have to wait, sometime into 25 before the possibility of a rate cut, starts to happen.
Hi, Andrew. Good morning. Good to see you. And Andrew, I take your concerns on board with regard to the Indian markets, and the Chinese stimulus was something that started that entire shift of hot money from India towards China. But actually, their stimulus has been not as much as expected. And from an Indian government perspective as well, we're seeing spending actually has picked up just in the last month or so. So hopefully that holds us in good stead. So I get your point that it appears right now you lean more towards the US markets in comparison to an emerging market. But from the Indian markets, there'll be select stocks as well as sectors that still have a good runway. Something that you're bullish on here in the Indian markets?
Some of the themes that we've talked about before, which is electronic manufacturing sector, that's one theme which I think will continue to play out over multiple years. So I still like that sector, and of course it would be a beneficiary of potential tariffs on China as well. So I do see that as a theme that will continue to play hard. I still like the kind of hospitality sector in terms of people spending, so airlines, hotels. I still think, I was talking to someone the other day who said, they're trying to book a hotel for a wedding, and it's all booked through to March, April of next year. So, and these are in not just the main cities; these are outside of the main cities as well. So, hotels are continuing to see very, very strong demand, and obviously that's going to help their margins and revenues. So, those are the two sectors which I like as a theme, which I think will continue, as well as premiumization, which we talked about before. So those themes are not going away from India, and I think that's where I like to play. The rest are going to be more trading ideas. I could make a case for buying metals at the moment on the back of that. China will have to do a stimulus sometime in the next 2 to 3 months, and that will boost metal prices in the short term. So usually the market will play that out before, but these are more trading calls rather than long-term calls.
Are there any short trades that you have in this market right now, given the fact that there are weaknesses? Would there be anything that you would sell? You believe that despite the decline, there is further downside from here?
No, I think there is further downside. I think there's another, possibly, if I had to have a Nifty kind of trading range, then I'd probably say anywhere between 22 to 24 would be my kind of guess. And sometimes you overshoot that. But what I think will happen is that, you were talking about it prior to me coming on, is that FII selling anyway kind of goes down in December. I think everyone wants to kind of book whatever they've done and not take big calls unless there's something more significant globally. And therefore, if domestic flows remain strong, you could see that kind of year-end rally. But I think it'd be a relief rally rather than it'd be a sustainable rally going into 2025.
Just a few names. Sorry, go on. Finish that point, Andrew.
So no, I was going to say this. So you're asking about short. So I think the market's looking a little bit oversold at the moment. So you might have that rally of 2%. So I don't think the short side is where it'd be. I think that for a retail investor, with all the things that are happening at the moment, just sitting on some cash for the next 2 months is probably not a bad strategy, and getting some returns from fixed deposits or liquid funds, just to see what how President-elect Trump kind of comes in, what policies are, how that's going to affect all emerging markets.
Any thoughts on Swiggy, Andrew?
I can't talk about individual stocks, and as you know, we were one of the lead managers, so I really couldn't talk.
I see. Got it. By the way, I just want to highlight it's looking good. 10:1 advances to decline ratio. So 10 up for every one stock down. And when's the last time we've had it? Usually we've had the reverse for the last many days, and 200 points now on the Nifty. So whatever happens after today, but I think as you go into the market holiday tomorrow, if you go home with this kind of a setup, I think portfolios will feel a little bit of relief, which have been, of course, under pressure all the way. The biggest volume-led gainer is Z, which is up 6.5%. At the number 2 place is Paytm. Paytm, of course, never really had a big correction or anything of that sort. High was about 853, low was about 750, and is already back above 800 as we speak. PG Electroplast is up 10.5%. We highlighted that earlier. And that's, of course, come off the highs, though, but still up. Chennai Petro is up 6%. That's a decent pop coming through there. Deepak Fertilizer is up 5%. Granules is up about 5%. These are all individual names. Webull Solar is up 5%. There is GMDC, which is up 5%. Shakti Pumps is up 5%. Shakti Pumps was up 5% yesterday as well. Almost back at 5,000 rupees, Shakti Pumps. And MRPL, the other refiner, standalone refiner. So Chennai Petro and MRPL, both 5% and 4% respectively, with very, very strong market breadth at this stage. Vari is the biggest volume-led loser. Honasa, though, has picked up from the lows. The low today is 242. Stocks at about 255 right now. IGL and MGL are still sulking, but it's a half a percent, 0.75% after the 10% plus knocks that we saw on both these names in trade yesterday. Andrew, it's a pleasure. Thank you very much for joining us. Great speaking with you here on CNBC-TV18 as always. Thanks very much. We'll speak again. Nigel.
All right. Let's get straight to our next management. IRP Infra Trust to offer 5 of its matured highway assets to IRP InvIT Fund. The proceeds will be utilized to capitalize on the upcoming opportunities. To help us out with the rationale, how are things shaping up, we're joined by Mr. Maheskar, the Chairman and Managing Director of IRP. Hi, Mr. Maheskar. Good morning and good to see you in. It's been a while since we chatted. This is Nigel on this side. Well, give us a rationale for this particular move and how does it help the company?
Very good morning, Nigel. Yes, you're right. We are speaking after a long time. And let me start by congratulating you on completing 25 years. We crossed that benchmark last year and happy to connect. As regards the asset that are being offered to the public InvIT, we have talked about asset rotation some time back. And IRP, I can say, has come investments that we hold in the private InvIT and public InvIT together. It has surpassed 80,000 crores. And with this significant sizing up of the assets, we have now decided that we want to undertake an asset rotation plan under which presently we have offered 5 of our assets from the private InvIT portfolio to be sold down to the public InvIT. A non-binding offer has been made, as has been made public, and the public InvIT would now evaluate these assets on whether they would like to buy it or not, and then the process would be taken forward. The total enterprise value of these 5 assets is around 16,000 plus crores. The idea here is that with a considerable size of portfolio having created, we want to unlock some value, and the value that gets unlocked, we deploy in growing this portfolio further by undertaking newer projects. And that is the rationale behind this strategy.
Mr. Maiskar, hi, good morning. Prashant here. So could you talk to us a little bit about the sort of value creation, the value unlocking that you're talking about, and where exactly will this be reinvested, the proceeds?
Yeah, so these 5 assets presently are in the balance sheet of the private InvIT. Private InvIT, as you know, comprises of 3 large investors, with IRB holding 51% of it. And GIC Singapore holds 25%, and Ferrovial Group, listed out of US, holds the balance 24%. So this private InvIT is making these 5 assets available to the public InvIT now. The enterprise value of these 5 assets, as I said, would be in the range of around 16,000 crores. The private InvIT as a portfolio has a net debt to equity of around 40% debt. So once these assets are sold, the equity value that would come back to the private InvIT will then be deployed to undertake newer projects, because we see a strong pipeline of asset monetization that NHAI or Road Ministry is likely to undertake. And that is the opportunity in future where the proceeds of these are all matured assets. And if we see, these have been operational for last 5-6 years. So we usually bid assets on a equity IRR of 15-16%. And with the construction risk taken off, the assets having stabilized, I have a good track record on tolling revenue history, now are being made available to the public InvIT. And the rationale for public InvIT is to look for matured, stabilized assets. So with the yield compression that will come through, it will create a significant amount of equity value for the private InvIT as a part of this strategy to sell down.
Take that point. 2-part question then in that case. One, where is the plan to reinvest these proceeds? You said that the 16,000 crore you would invest in a lot of these NHAI sort of bids that are coming by right now. Awarding activity also, because the election is expected to be a little slow. So to that extent, over how long will you invest these 16,000 crores in? And have you identified any assets here?
So 16,000 crores would be the enterprise value of these assets. The equity unlockment will be commensurate to that. And the equity money that will come back to IRB, private InvIT, will be then deployed for the newer assets. So if we look at the opportunities available, TOT is a platform which government has talked about very aggressively. They have a strong plan to monetize their assets. And these are the opportunities where we'll look to bid on. And we feel that this opportunity will continue to look strong in the future as well. So if you look at it regulatorily, we expect around 5 to 6 months for this whole unlocking exercise to take place. And once we have the money in the private InvIT, if we go by the regulation, we have a holding period of 18 months within which we have to deploy this equity back into new projects. So we have a fairly long period over which we can hold this liquidity and judiciously deploy it in good assets to create further yield generation and create value for the private InvIT platform.
All right. Mr. Maiskar, a quick word on the toll collections. How have they been so far, if you could tell us that? And since we have you, we are set for the Maharashtra elections and you have presence out here. And over the last many years, there have been numerous times we have called and asked you what could the impact be with regard to continuity or a change in government on your business. I think in the past you've told us that now you're reasonably protected, but a comment on that as well. So toll collections as well as a comment on this.
So toll collections continue to be very strong. We have been disclosing the toll numbers across our assets on a monthly basis, and we have seen excellent traction in the past so many months. That I believe is a pulse of the economy, because these are projects spread across the country, and the toll numbers are very vibrant, and we expect them to continue to grow in a strong manner. And this is what gives the visibility to the whole portfolio, because If you look at the average life of the portfolio is today 22 years plus. And these assets have been growing at a very, very good pace and are creating significant value for the whole portfolio. And mind you well that IRB holds 51% in the private InvIT and also 16% in the public InvIT. So these investments, what we have done in these platforms is creating significant value, which should now start reflecting in the IRB end, as well as we complete a significant transaction where Centra Ferrovial Group bought 24% from GIC and has established a fair value construct for us to look at valuing these assets as well at IRB end. And I think this is going to play out very, very strong in the coming months and quarters.
All right, take that point.
On the election, I don't have any comment.
Go ahead.
On the election, I don't have any comment because in my experience of 30 plus years, I would say that across the governments and political parties, there has been a very, very steady regime on the policy as regards toll roads are concerned. And we are grateful to the governments across board that they have been investor friendly and the toll roads across government regimes has done well.
So that risk is a thing of the past. It is a perceived risk.
I don't think it is a risk today.
It's a perceived risk. It's not
a perceived risk. No, not to my experience in the last 30 years.
Always good speaking to you, Mr. Maishkar. Thanks a lot for joining in. All the best with regard to business, entire rejig that we're doing. And in fact, we'll touch base, say, in the next month or so to understand how things are shaping up.
He's given a very political,
Thank you so much for having me here.
Politically correct answer given by Mr. Maiskar out here. We, hope for the business to continue extremely well. But, speaking about roads and tolls, let's move on to cars and petrol. Perhaps Hyundai Motor India, the company that recently listed, but we know for a very long time as well, reported their second quarter earnings, Red Sea crisis affecting both revenue and margin. To talk us through the performance, now we're joined by Tarun Garg, who's the whole-time director and chief operating officer of Hyundai Motor India. Thanks a lot, Mr. Garg, for joining in. In the second quarter, we saw a decline both year-on-year and quarter-on-quarter. You did speak about the Red Sea crisis impacting certain section of your exports business, and the domestic business, of course, had a high base as well. The question then, from here on, how do you expect growth to pan out in the remainder of this fiscal?
If you see the earnings, one is the H1 earnings, where you see the EBITDA is at a very strong 13.1% as compared to 12.6% of financial year 23-24. So you can see very strong results despite the strong headwinds which we are seeing in the market. Of course, so that is very good. Regarding the Red Sea crisis, of course, it affected our exports to the Middle East. We try to really make it up by focusing on the other markets, whether it was Africa, that is one. The second is the overall volume impact was kind of made up by our premiumization strategy, which has really helped us to increase the domestic ASP consistently. And of course, whether it is the ADAS, whether it is the sunroof, whether it is the automatics, I think that continuous focus on premiumization remains. The SUV percentage has reached a 68% January to October, as against about 60% last year. So I think that focus again remains very strong. We have just launched the Alcazar facelift, which has received some great response. So I think that should add to not only to the ASP, but to the SUV percentage as well as to the margins. And of course, going forward, we are going to launch the Creta EV in the next quarter, which we believe is going to be a very strong game changer, not only for Hyundai, but for the Indian four-wheeler electric space as well. So I think despite some of those demand headwinds which this year is facing because of a very high base of last year, we believe that Hyundai will continuously, make efforts to, to have some stable, results.
All right, hi sir, morning, good to see you. Ben, one more question on growth. Industry bodies, some of your competitors, they are talking about low single-digit growth for FY25. What's the growth range that you are looking at?
No, if you see the CAGR for the auto industry, it has been 5%, whether it is a 5-year CAGR or a 10-year CAGR. In fact, all the OEM players, beginning of this calendar, we have sat together to determine what kind of a growth this year can have on that high base. And all of us unifiedly, we said that it would be a low single-digit growth. And I think we have been proved right. If you see this year, we are at a low single-digit growth. But I think the important thing is that we are talking about a very high base of 22% growth in 23 and in 22, and then again 8.5% growth in 23. So obviously on that high base, if you have a single-digit growth, this is very good. So I believe that the festival season was very good in terms of retail sales. We had a very strong Vahan registration growth in October 24 over October 23. The momentum is continuing in November post-festival as well. So we believe that, yes, once the industry stocks are normalized and, we will start seeing those positive offshoots of demand. And of course, we still remain committed to a low single-digit growth as far as the industry volumes or HMI is concerned.
All right, got that. Tarun, you've spoken in the past about the Creta EV launch, which is scheduled for the fourth quarter of this financial year. Just wanted to also know the launch timeline for the other 3 electric vehicles that you've spoken about in the past. If you can provide us with that timeline.
So very difficult to really give you the exact timings, but we will. I believe EVs is the way to go, and we are very much committed to not only launch new products, but also give a very comprehensive solution to the customers in terms of the entire life cycle. I think that is what will really differentiate Hyundai from the others. We are a very strong brand, and when the customer is buying a EV, the key areas in his mind are the cost of ownership, the service network, the charging infrastructure, the reliability of the brand, and we believe that we have everything. And of course, with HMC's technology, leadership in the EV space, I think we should be able to really provide some very comprehensive solutions to the customers going forward in the EV space.
Right. Mr. Garg, you've been focusing on premiumization. We see that the contribution of SUV has increased to 60%. So the question is that how much better, more can it get? Can it increase even further? Or you are now looking at the entry-level segment as well? If you could give us the strategy for premiumization versus entry-level and the penetration of SUVs, which is now about 60%.
Every year we are asked this question that is this the peak? Last year when we reached 60% SUV contribution, we were asked, is this the peak? Now we reached 68%. And again, you're asking, we saw 70% penetration in September. We have just launched the Alcazar facelift. We are going to launch the Creta EV. So the dual cylinder is in the Exter is helping us to increase volumes there as well. So we believe that there is still more headroom as far as the SUVization continues. At the same time, we are a complete player. We are very strong in the hatches. We are very strong in the sedans. The Aura continues to do well. From a volume of 3.5 to 4,000 per month, we are now consistently clocking 4,500 and more in Aura. The Verna, after the full model change of the Verna in 2023, it has received some great response from the customers. So I think we have all kinds of powertrains, petrol, CNG, diesel, electric, turbo, and of course, all kind of body types, whether it is hatches, sedans, and SUVs. This makes us a complete, vehicle manufacturer. Also, if you see, in India, different states behave differently to different power types, powertrains. So if you see in, for example, Uttar Pradesh or Maharashtra, CNG is very much preferred. In Delhi, petrol is very much preferred. In Telangana, Punjab, diesel is very much preferred. So having different type of powertrains help us to really tackle all the customers very well in different states. At the same time, it is a very strong risk hedging. You mentioned about sometimes, maybe the allocation of gas, sometimes the prices could change, the customer preferences could change. If you have access to all kinds of technologies, I think this really puts us in a much more advantageous position to really leverage all the opportunities that exist in the market.
Let's talk a little bit about your capex plans then, with respect to Pune as well as the Tamil Nadu units.
Pune plant is absolutely on track. And in the Q3 of financial 25-26, the Pune plant will be up and running. Pune plant will add 170,000 capacity in phase 1 to our existing capacity of 824,000. So total capacity by the Q3 of financial 25-26 will be 994,000, which will take care of our export as well as domestic needs going forward. Regarding capex, we have an MOU with the Maharashtra government for 6,000 crores, which covers both the phase 1 and phase 2. Phase 2 will happen in 2028, which will add 80,000 capacity and take our capacity to almost 1.1 million. Regarding Tamil Nadu, 26,000 crore MOU has been signed till 2032. So I think everything is on track. And we believe that the Pune plant capacity addition will really give us a very strong leverage to look at not only increasing volumes, market share, but also, of course, expanding the margins as more and more models get introduced and as the capacities increase.
Tarun, there's a fair bit about hybrid and EVs. What we understand also is that you've been working on a project related to hydrogen. And you've even collaborated with IIT Madras for the same. If you can give us any details, where is that project at, what stage?
So look, what is very important is that we have a very strong enablers in place. So we are really investing not only in electric vehicles or the charging infrastructure. In hydrogen, we believe hydrogen could be a very important game changer in terms of energy needs for the country. So we have a collaboration with IIT Madras and the Tamil Nadu government. We have committed 100 crores to the project. We are developing a hub, innovation hub, where we will try to really bring down the cost of green hydrogen from the current level of $5 a kg to probably $2 a kg.
All right, Mr. Garg, thank you so much for joining in and giving us an outlook for the second half of this year. You seemed fairly optimistic. The stock price is reflecting that, up around 1.5%. But what's actually doing extremely well in the entire market itself. The Nifty's moved closer towards that 23,700 mark itself at the high point of trade, being led by a bunch of sectors. Any of the sectors, if you look at right now, most of the sectoral indices at the high point of trade. The Nifty Bank up almost 0.75% as well. The Nifty IT index up 1.5% after having fallen 2% yesterday. The broader markets as well can't take your eyes off that. 2,000 stocks in the green for about 260 in the red.
It reminds me when Saurav as well as Sachin both fired right at the top. You have Reliance and HDFC Bank. Both of them are up close to 100%. The problem has been that both of them haven't been moving in unison. But currently, both of them are up close to 100%. That helps our cause. We're talking about more than 20% of the index moving in the same direction. So that's good news, I think, for starters.
I think, Nigel, it's a definition of age, right? When Prashant talks, he'll be talking about some of the other players. Both of us talk about Saurav and Sachin. Maybe the current generation speaks about Virat, Rohit. The generation after that, Sanju Samson and Rinku Singh, all of them.
Sunny Gavaskar.
We won't talk about age here. We'll take a quick commercial break here. We're going to come back and, we'll talk about what else, but politics, right? Because tomorrow is the Maharashtra polls. Exit polls come out tomorrow evening as well. 23rd is the counting. We have Sanjeev Srivastava and Sudhir Suryavanshi joining in to talk about what are the sort of permutation combinations and who's ahead and who's behind. So that's coming up in just a bit.
Others, in terms of the industry overall, all of those are very active in terms of consolidation, movement into AI growth, and candidly, all of them are very active in terms of investing in the India and U.S. corridor. I don't think you'll necessarily see a consolidation there. I think you will see challenges to NVIDIA evolve because clearly, if you want to know how the AI is going, it's much like Cisco when Cisco was the leader in networking. If you want to know how the internet was going, just watch Cisco's growth to 60 or 70 or 80% per year. NVIDIA is the bellwether in terms of the industry, but others are going to focus on it. To your question about cybersecurity, you're right. It is set up for consolidation. I was just with a customer advisory board yesterday, interestingly enough, with Pindrop, talking about the deep fakes, and the 20 customers there said, John, we have an average of 50 cybersecurity.
Okay, welcome back. You've got the market, which of course, as we pointed out, is seemingly very, very strong. Just under 200-point gain now. It's about 40, 50-odd point give back from the day's high, but holding on strong so far. Now, the high voltage election campaign here in Maharashtra is drawn to a close. All 288 constituencies will vote tomorrow. And that's the reason why we have a market holiday as well. But let's just talk about this in some detail. Sanjeev Srivastava, senior journalist, and Sudhir Suryavanshi, senior assistant editor at New Indian Express, are with us to take us through the permutations and combinations now, and of course what is likely post the votes are counted, which is not very far away. 23rd is the counting of votes. Gentlemen, good morning. Prashant here. I mean, if there was ever I dare say, a khichdi, I mean, this is it. For the life of me, I can't figure it out. So let me throw it to you, Sanjeev. Who's ahead, in your opinion, and who's likely to form the next government?
I don't think anybody knows the answer, Prashant, to that. Now you can discuss two things I agree with. One, whether it's a khichdi, biryani, jeera pulao, where it's a very, very messy election. It's very complicated because the number of candidates also on each seats. Both the alliances have put on so many candidates on each seat just to cut some votes. And if it's a closed election, those factors will come to play a role. The second thing which we must remember is that whenever an election is held in an assembly state, a few months after or less than a year after the Lok Sabha elections, usually that pattern gets repeated, which gives the opposition alliance, the Pawar, Uddhav, Congress grouping an edge. But this election has become too close, and like you said, Prashant, the real game, if the election is close, may actually start post the counting. Because nobody is, except for the BJP and Congress, you can't claim with any degree of certainty these people are going to stay where they are. So what happens post-elections will be as interesting if the election becomes a close contest, if the results indicate a kind of anything is possible scenario. So sorry for confusing the viewers and you, and because I think everybody is just waiting for the coin to fall and then see whether it's heads, tails, or what is the outcome.
I mean, that is not the ideal situation, right? From a voter perspective, I mean, you vote for somebody, and then, I mean, you don't know, which side your vote gets counted in. But yeah, you're right, absolutely right. And I don't think you confuse the issue any more than it is already. So I won't ask you like I do for not doing a straw poll in that sense. Sudhir, if you want to come in, your thoughts on who's ahead, if you have a sense.
See, I travel, almost across the Maharashtra, different part of the Maharashtra, and the sense from the ground I get particularly, in a couple of things we need to, talk or demystify the whatever you call it as a khichdi. We need to demystify it. First thing, there is an anti-incumbency factor. That is true. On the ground there is anti-incumbency factor. Second, there is agrarian crisis like a soybean and cotton. Issues are most talked about, particularly in Marathwada, Vidarbha, North Maharashtra, and some part of Western Maharashtra, because both are major crop in this region, and both crop prices and rates has gone below the MSP. So there is anger among the farmer community. So therefore, this anger is overshadowing the Ladli Bahina scheme that government has started, to reap the benefit in the election. That is the second. Third thing, there is also an anger among the people that the parties were broken, then the government was toppled. But other hand, if you see in the Mahayuti, the benefit for them is that their candidates are very much strong, and they are not easily to dismantle by the oppositions, because they got their own popularity, plus they got money, muscle, power, plus they got an institutional network through their cooperative sector like sugar factories, milk federation, then their institutional network like education institution, medical colleges, then many institutions. So these are both are things are holding them back and rooting them strong against the oppositions. So therefore, I will call it a neck and neck fight. And the plus, the person will manage election very well, because this is all about a micromanagement. First time I saw this election like ultra local or ultra, like a village panchayat elections. Many caste combinations, many small group. Within a caste, there is a sub-caste, discussions happening on the ground. So the communities has been divided on the line of caste, then the religion, many things. So which factor will play the role? that is very difficult to tell the viewers. But certainly I can see the numbers will be very sticky this side or that side, and the independents likely to spell the spoil, particularly Vanchit Bahujan Agadi and the MIM for the Mahavikas Agadi. On the other side, MNS Raj Thakre, he has also filtered 140 something odd candidates, and these candidates are on the ground. I saw they are damaging the Eknath Shinde in a big way, because Shinde and the Thakre and the BJP, they share the same kind of vote bank. So there are many issues what I saw on the ground. But what I feel that the voter are wise, they are very shrewd, and they will give the clear mandate this side or that side, and that will be better for the Maharashtra, which has been struggling, to come out, because if you see the growth of the Maharashtra has staggered recently in the report, as Vishal also mentioned.
Right. Sudhir, but welcome to the show. This is Nigel on this side, but you have to put a finger on it. As of now, who has the momentum going for it? It appeared that, the UBT Congress as well as the Sharad Pawar fraction, they did fairly well in the Lok Sabha elections. But do you think, the BJP-led, BJP and the Shinde camp, they have pulled the momentum back in the recent past?
Yes, in the Lok Sabha, if you see the Mahavikas Agadi has got a 63%, the space, electoral space, and the Mahayuti has got 35% only. But in the meanwhile, the Mahavikas Agadi, they took the voters and the people of Maharashtra granted and laid back, and they wasted huge time in the seat sharing and the seat allocation. I think they have made major blunders in the seat sharing and put in the candidates, and these candidates are not performing well on the ground. That is the first thing. Second thing, if you see, reason-wise, because Maharashtra is like Europe, state within the state. What Vidarbha thinks, that is not necessary that, Coastal, Konkan, that is a coastal area will think. But I feel after traveling extensively on the ground, in Vidarbha, that is divided into two divisions, like Amravati division and Nagpur division, slightly give the yes to the Mahavikas Agadi because their DMK and AIDMK combination, that is called the Dalit, Muslim and Adivasi plus, Kunbi, that these are the major factor in the Vidarbha region. If we come to the Marathwada, in Marathwada, MMD factor is working, that is the Maratha, Muslim and Dalit. And because of Jarange, Maratha reservation agitation, the MMD factor is still intact for the Mahavikas Agadi. There is little bit desertation in the Dalit votes, but the Muslims and Maratha consolidately standing with the Mahavikas Agadi, therefore they have got the age. But if you come to the Western Maharashtra, Konkan and the Mumbai, I think that there is a 50-50. There is a neck and neck fight between the Mahayuti and Mahavikas Agadi.
All right, we take that point, Sudhir. Thank you so much for joining in. We'll give the final word to Sanjeev. Sanjeev, you said that everyone will wait for the coin to drop, thereafter call for heads or tails. But while the coin is in the air, there are a lot of murmurs around the Ladki Bahini scheme actually being a bit of a game changer. With your ear to the ground, what have you heard, and how much could that tilt in favor of the Mahayuti?
So Ladli Behna scheme has been a big changer for the Mahayuti as well as a big game changer for Shinde's personal popularity and image as well. Nobody expected Shinde to be some kind of a big factor in this election, but he has become. But if one has to really stick one's neck out, we traveled extensively during the Lok Sabha elections in Maharashtra. And the picture, really the national picture became very clear thanks to our travels in Maharashtra, where one could sense the anger. Now in elections, we often say that the same bullet doesn't get fired twice. So will that anger sustain in the assembly elections also? We don't know the answer, but I think it will sustain. It will not go away entirely. Some semblance of it will remain because it's only 5-6 months since the Lok Sabha election. So if I have to really stick my neck out, I will say Mahavikas Agadi is in the lead as of now. They should get more seats and more numbers than the Mahayuti. But that doesn't necessarily mean that they will form the government. The government may still be formed by someone else. So the real game, unless Mahavikas Agadi really takes a clear lead, I don't see Mahayuti taking a clear lead. It's only the opposition which can take a clear jump or lead, according to me. Unless they do that, then the coin will know which side it is going once it comes and hits the ground after 23rd. Close election, Mahavikas Agadi, traditional parameters, if you look into it, has an edge. But is it a distinct one? We don't know.
And you need a distinct one to be absolutely sure that, the one with greater seats will form the government. Unpredictable election, but I think the only thing even more unpredictable, or I don't know, I want to say unreliable, are exit polls, which we will get tomorrow.
Yeah.
And
exit polls now, Prashant, sorry to say, they have become some kind of a, well, I also don't want to call them a joke. But it has become totally unreliable.
And that's tomorrow evening. And, markets will be trading. So we get the polls tomorrow evening. You'll have 2 days of trading, Thursday, Friday, and then on Saturday you have the counting.
So my question to you, Prashant, will markets react to exit polls?
They shouldn't, right? As we are saying, as I said, look at what happened in Lok Sabha elections, right? Exit polls came that weekend. Yes. Monday markets jumped. The actual results came on Tuesday. Complete reversal.
But Haryana proved them so wrong. Lok Sabha was so wrong. Yeah. So the markets would discount the exit polls.
Even the US elections, or no?
US.
Well, there as well, the pollsters got it wrong.
So, I think, I don't think, I think the markets will discount and wait for the actual results. But in any case, as both of you said, it's going to be, in that sense, Sudhir did say perhaps they will, voters will put one side clearly in the lead. We'll see. But you're saying it's going to be closer. It's not going to be that big a sort of difference. So we'll have to wait and watch. And we'll probably chat once again on Thursday morning once we have those exit poll results. Thank you very much, Sanjeev and Sudhir, for joining us here with that perspective. Thanks indeed. Well, I think 200 points higher on the Nifty 235, 23,688. We'll take a break. We put the focus on commodities. Manisha is going to be with us on the other side. Stay tuned.
Our environment, they don't talk together. That one's probably set up in terms of more of a consolidation. I hope to play a role there in terms of my startups. For people in the room, if you want to have a safe future, become an expert in AI and cybersecurity. The two of them will come together in terms of resolution. In terms of your big question, Shireen, I think this might be the first time ever when you go from mainframes to mini computers to PC, client servers, to the internet, to the cloud, and now to AI, where the prior generation might actually produce half the leaders in the new technology. That's not occurred before, but I think with the hundreds of billions of dollars that Microsoft and Google and Amazon and Apple and Meta are putting in, they will be a force here, and then I think you will see some of the players in the room, hopefully some of mine as well, also become a force. So for the first time, the large traditional players, maybe 2 or 3 of them will really make this transition and be in leadership roles. And again, I think it's the startups that are going to light it up. For those of you in the room, regardless of your industry, manufacturing, government, healthcare, you've got to have a AI strategy and foundation. And as investors for FDI others, they're going to say, where are you on your AI implementation? Where are you in terms of driving your productivity at 7 to 10% a year, which I think you can with AI. 2025, some predictions. I think you'll see 2025 be the year where AI crosses the chasm. Everybody talks about it today, but if you talk to the average person in India or the average person in America, it is not affecting their day-to-day activity, either at work or otherwise. By the end of 2025, I think we will see it in a broad level at all of our, both of our countries and in all of our business and personal lives. It's going to move with tremendous speed and excitement. Disrupt, or you're going to be disrupted.
What do you think is the state of the theatrical business right now, Karan, and where do you think it's going to go? I mean, we do talk a lot about phases within this business, and you have your ups and your downs. We're probably in a cycle right now, which we've never really been in before, where the bigger films are doing bigger business than they've ever done before, and films that might not have done this business before COVID are going through the roof. And then there are some films that come and go, even with very big stars. So it's clear that the audience seems to be becoming very discerning about that trip to the theaters. What do you think we need to do as a content industry to be able to?
I believe we have to read the room. We've got to read the room as filmmakers. You have to know that today there's a lot of content available at, on streaming services, but there is still a huge desire for a community watch to go to the cinema. So you have to understand, please let's make the high concept films. The company.
Okay, welcome back. Let's look at commodities and what they're doing. Manisha is standing by. Remember, overnight, oil went up sharply. Gold prices went up about 2%. Manisha, what's top of mind?
Well, yes, crude was up 3%. You had gold prices up 2%. Silver gained up by 3%. And the base metal prices were anywhere between 1 to 3% on the higher side as well. But the best of fundamentals within the base metal prices seems to be coming in from aluminum. For the year, we've seen 10% of gains. But when you look at the year-on-year basis, you can see it has outperformed the base metal prices. The next best gainer comes in from zinc, and copper is up 8% in the last 1 year. But 16.5% of gains is what we are working with in sense of aluminum there. And there are various supportive factors coming in for aluminum. One, the generic one is that the dollar index the rally has seen a bit of a pause. Last week, dollar index gained up by 1.6%, but it's trading quite flat in the Asian markets right now. The second has been over the weekend, where China cancelled 13% tax rebate on aluminum effective December 2024. That is already baked into the prices as of now. The other factor also is about the new infrastructure demand investment in China. The first 10 months of this year show an increase of around 4.3%, and aluminum usage within that also has been on the stronger side. And then it has to do with the firm alumina prices. Remember, we've been telling you on how the bauxite supply disruptions in Guinea and Brazil have taken the aluminum prices near record highs in last few months there. Then the energy transition demand also is on the stronger side from sectors like solar panels, vehicles, etc. So when you look at the aluminum for energy transition, there's a very important report that's coming out from Norsk Hydro, which is the biggest one when it comes to aluminum production in Europe. It says that 15 to 22 million tons of extra usage in sense of EVs is what will come in from aluminum. And by 2050, this number could actually double up by 25 to 42 million tons as well. Another very important thing to note is that even as we talk about aluminum within India and globally, but when it comes to China, 63.5% of global aluminum is consumed within China. So that's a market to watch out for. And those numbers will tell you the story, because in 2015, if the world was using 27 million tons of aluminum, China was using 29. And fast forward to 2024, the world is using 29 million tons of aluminum, while China is using 43. So this is nearly 63% of world aluminum going in for China. The other thing is about prices, where we have seen good gains, as I told you. And while we are trading at around $2,600 a ton right now, the all-time high is $4,100, and we are far away from those kind of levels. Well, the markets also are looking at new capacity expectation coming in from India, Indonesia, and China as well. And that perhaps could keep the prices in check. So nobody is expecting aluminum prices to go near those all-time highs there. Importantly, on what the markets are expecting in sense of prices for next year, well, we have BMI telling us that 2450 is what they expect in sense of prices. Goldman Sachs has it at 2,700, and most bullish of them all is Citi, $3,000 a ton of a possibility for aluminum for next year.
Manisha, thank you very much for that. Keep an eye out on those prices and those commodities as well. Time for a quick commercial break. Here is The Economy. Lata in conversation with Pranjal Bhandari, Abhishek Upadhyay, as they decode trends from the second quarter earnings season, which is just wrapped up. Stay tuned.
To cinema halls immediately, not the films that you have access to, on a daily basis on a streamer. So besides the tentpole films, it's the high concept films or the films made sensibly, because the star cast really today is not just the only driving force. It's the trailer. It's the very first impression. So we have to, I always tell filmmakers, this may sound like a sales pitch, but plan your trailer. If a film is giving you a great theatrical trailer, it's going to give you a great theatrical opening. Anything generic is going to slip through. Anything been there, done that is not going to work. So you have to plan your first unit. It has to be a unit that makes sure that an audience is going to say, I booked my ticket, I'm going to go see. And that is happening. As we speak, we've had a great 2 years. According to me, there have been some thunderous numbers as well, like you said. We've touched the 600 crores. We've never done that before. We've done that. And we also have touched 100 crores with a completely new cast. A creature film with a new actor called Abhay Verma has done 100 crores. That is the power of theatrical audiences. We just have to give them what they truly want. We have to read the room, which we have to start assessing within ourselves.
Mr. Jindal, over the next 5 years, by 2030, you talked about how very few players are actually investing. There's a private capex challenge. How much is JSW across the group going to be investing in India? How much will you invest outside of India?
In terms of numbers?
Yes.
So, it's not very easy, but
given the demand visibility.
Yeah, so we have made a very ballpark number that between now and 2030-31, fiscal 30-31, we would be investing close to $70 billion in India and maybe $2 billion outside India.
Today, the automobile industry, and same for Wipro, the IT industry is going through a lot of disruptions. AI is the biggest disruption, and in EVs, the technology is a major issue. Nobody knows where we will finally go. You've often said that this is a moment of reckoning for the automobile industry. The battle is between the established mainstream auto players and how they embrace the new technology, and the startups, or upstarts, as you call them. So who's winning, and what's going to define who wins this battle? And who lasts for the next 75 years?
So there are three terminologies here. There is startup, then there is a word which I like to call most of them, which is upstart, and then us, the winners or the champions, right? So I must explain what is the difference in my mind between a startup and an upstart. In my mind,
Welcome to It's the Economy. India's second quarter was marked by several lagging indicators. The IIP Index of Industrial Production, core sector growth, the Vahan registration, all of them dipped. And the worst indicator, of course, was the Q2 Nifty earnings performance, Nifty EPS rising by just 4%. And this was a single-digit rise for the second quarter in a row. So now it's time to look ahead. Was that a one-off first half? And is the economy likely to turn the corner? What are the early indications from the month and a half that we have seen in the second half indicating? With, better than usual monsoon, renewed government spending. And of course, if time permitting, I also want to discuss what FM Nirmala Sitharaman and Commerce Minister Piyush Goyal said practically to us, that they want to lower interest rates, whether you should therefore expect any change in interest rate policy sometime soon. For all these questions, I'm joined by two economists, Pranjul Bhandari, the chief economist at HSBC, and Abhishek Upadhyay, the senior economist at ICICI Securities primary dealer. Pranjul, Abhishek, thank you very much indeed for joining us. Well, Pranjul, I'm starting with you because you put out a note, but your note, though, largely covers the quarter gone by. If you have a heat map, you say, of 100 indicators. What are they indicating for October and November?
Yes, thank you, Lata. So, because there's just so much of noise in terms of what's happening to growth, some indicators doing better than others, we brought together 100 indicators of growth. And many of them are actually, data we got for the month of October, just released a couple of days ago. So it's actually quite real time. And it gives us a sense of what's going on. Now, what we find is that about 55% of the indicators we are tracking are still growing positively. So a majority is still doing better than it was in the past. But a quarter ago, 65% of the indicators were growing positively. So this fall from 65 to 55 is something, that is really impacting sentiments. And on the margin, there is some sort of a slowdown, that has happened. Now, there are a few sectors which are better than before. Agriculture is better. Government is spending right now. Services exports are still growing at a fast clip. But on the other hand, there are some sectors which are much worse than before. Consumption tops the list there, particularly urban consumption. That has fallen off over the last quarter. And trade and transport is not doing too well. So I think putting all of this together, I think our sense is that on the margin, growth is slowing, but it is slowing to more sustainable and more broad-based levels. Like, for example, agriculture had been such a laggard for the last 2 years. We are seeing signs of that pickup now. So my sense is we'll work with a slightly lower clip, not 7% plus, but more like 6.5% over the foreseeable future. But it will be more broad-based than what we had in the past.
Okay. Do you recall which were the sectors? I think two-wheelers have done well. I saw your heat map and you had a dark green on which sectors, do you remember?
Yeah, so two-wheelers have been doing well. Some consumer non-durables have actually picked up. Terms of trade, which is basically earnings of farmers, have also been strong. Construction, which is a very important source of income for rural India, has generally been doing well. In manufacturing, consumer goods manufacturing is not doing too well, but industrial goods manufacturing is still doing well. And I think that is linked to government capex, which has picked up over the last 2 months across both central government and state governments.
Okay. A similar question to you, Abhishek. Have you been tracking any of, I know you have your own heat map as well, and you look at freight, you look at power consumption. How do October and the first half of November look like? We have 1.5 months of this quarter with us.
Well, first, the caveat, the timing of festive season is different. And what we need is, data for both October and November to make a firmer judgment about how the growth momentum is. But I agree, in terms of hard data, the auto sector retail sales, both passenger vehicle and two-wheelers, have been quite strong. Again, could be some growth is exaggerated there, but still headline numbers are quite strong and reason for optimism. Also on the government spending side, we don't have the actual numbers, but we track the government cash balance numbers, and those have really come down sharply. So the central government, the overall government cash balance would have been around 4 lakh crores after the September advance tax payments. And from end September onwards, there's been this downward trend which has continued, and the current estimate is closer to neutral. So government cash balance position has really, government surplus cash has really dwindled, and that is a sign of government spending having picked up more pace after the second quarter. Okay. But very broadly, more fundamentally, what we need to still acknowledge is that in terms of policy settings, whether monetary policy or fiscal policy, I don't think policy settings are very tight. Also on the global side, while there is uncertainty about how the demand situation will shape up, global commodity prices at least have softened, which is good for us. So very thematically, don't think we should be looking at any big growth slowdown. Yes, it is possible growth could tread water for some time, particularly given signs of weakness in urban demand, but we don't expect any big slowdown here.
Okay, not a big slowdown. I want you all to put a number to it. Pranjal, what's your best guess? We have some positives in terms of better than expected monsoon government spending, and we have some negatives in terms of uncertainty of the global environment, and clearly urban consumption not doing well. There's no running away from that. So what's the guess for second quarter and, of course, more importantly, third and fourth?
Look, my sense is that India's potential growth, where it can grow sustainably over the foreseeable future, is closer to 6.5%. It is lower than the 7% plus prints we had gotten used to in the last couple of years. But the truth is that was off a low base. The base has now normalized, and we are now converging towards more sustainable numbers. And 6.5% is still, by the way, in the current global order, a very, very high number. But I think markets and generally, most of the analysts have to get used to this. That India
is your number 6.5? Yeah, is your number 6.5 for the full year this year?
No, for this year it's higher because we had higher numbers in the past. But for the upcoming release that we'll see for the September quarter, we are in the 6.5% ballpark. And then when we come to FY26, our senses will be again in the 6.5% ballpark.
Okay. Abhishek, just one quick question because I missed the number. What was the government cash balance? What has it come down to, you said?
Close to neutral levels, Lata, from close to 4 lakh crores after advance tax
almost
payments.
Zero. Okay. Okay. Well, similar question to you, what are you estimating in terms of what may be the second quarter gone by, which we will get on November 29th? But more importantly, what's the second half average looking like? The Reserve Bank's old number is sitting at 7.4, 7.5.
So we are at 6.5% GDP growth for the second quarter, Lata. And for second half, we have penciled in a close to a 7% growth, but we do see some downside risk to that. Again, primarily on account of the consumption demand, where high frequency data has been soft. Important to look at reasons for why this slowdown has happened to make any prognostication. And here, I mean, the understanding I have is that some of the slowdown on the urban demand side could be linked to somewhat tighter credit conditions that we've had. We know RBI has engineered some regulatory tightening, but even banks themselves, the commentary suggests that there is incipient stress in some parts of unsecured lending basket, and there has been a tighter credit provisioning therefore. So that could be a headwind which could stay with you for some time. Also on the inflation front, what we have seen is inflation has stayed higher than we expected also. Particularly, again, commentary from FMCG players, etc., indicates slowdown in metros, where it is possible housing costs, etc., which went up too fast, may have played a role. So these are headwinds which could stay with you for some time. But this at best could be a mid-cycle slowdown rather than a start of a new trend.
Okay. No, I take your point. More than interest rates, it appears that it is inflation that has sapped urban demand, metro demand. There was a Nielsen study which Britannia quoted in detail in their presentation, saying that rent has taken a huge chunk and metro did worst for them. Second-tier cities did far better in terms of demand. But very quickly, Pranjul, we had these two statements coming in from first Piyush Goyal saying that food inflation has nothing to do with interest rates and therefore RBI should cut. Well, that was Commerce Minister, we thought. But yesterday we had Nirmala Sitharaman practically repeating that to Shireen Bhan, not with so much ferocity, but saying that we need more discussion on the inclusion of food and inflation and interest rates as well, goading the banks to cut rates, to make them more affordable. So now what's your rate cut expectation?
These are tricky times, Lata. We have had an inflation print, which is not just a high number of 6.2%, but it also shows that food inflation is getting a little more widespread than it was in the last couple of months. We've started seeing cereal inflation and all rise again a little bit. Then we have, what's going on globally, and there's a lot of volatility in the rupee. The RBI has been spending reserves, and that has been sucking out some of the domestic liquidity. And my sense is, come December, we'll start seeing liquidity conditions tighten, and we'll start seeing the short-end rates rise a little bit. So it'll actually be a bit of an implicit tightening that we have there. So, my sense is monetary policy can't ease a lot right now, but yet, we have growth slowing on the margin. And once the global conditions ease a little bit, there might be space for some gentle rate cuts.
No, I just want a date. We are running out of time. What's your date? February, April?
February, but the risks are to April as well if inflation doesn't fall.
Okay. No, sorry, out of time. Abhishek, just one word. I mean, what's your take on rate cut?
February rate cut.
Okay. Yeah, going by the building pressure from Delhi, it does look that becomes an added factor, even if the macroeconomic conditions still look, pro-inflation. Anyway, thank you very much, both Abhishek and Pranjul, for joining in and giving us some sense of what the first 6 weeks of the second half look like. It looks like we are not going to make it to the 7% GDP for sure, maybe a little south of that. With that, we wrap up on Bazaar. Chuck Trust is coming up.
Who have a build strategy. They build technology, they build brands, they build products, they build consumer experiences, they build employee satisfaction, they build a strong top line, but they also build a strong bottom line. Upstarts are those who don't have a build strategy, they have a burn strategy. They burn technology, i.e. their batteries. They burn brands by reducing price every month. They burn products in their factory, in the truck, at the dealership, on the road. They burn employee relationships with 50% attrition. They burn consumer relationship with poor service. This is burn strategy. So this is upstart versus startup. Now, as far as startups and champions are concerned, they are the same actually. The only difference between a company like Wipro and Bajaj or a so-called startup is that we are startups with a story because we've been around for long enough to have built a story. I just told you a little bit about my story. Rishad just told you a little bit about Wipro's story. So a legacy company, I mean, they try to imply that legacy means old, you know. And the point is...
Sound very good, does it, Rishad?
No, but there are some startups which are also not born yesterday. They are 5, 10, 15, 20 years old themselves. तो ठीक है यार, हम लोग बुजुर्ग हो गए, लेकिन तुम्हारा बचपन कब तक चलेगा, you know? So you can't keep calling yourself a startup forever. So a legacy company is nothing but a startup with a story. And frankly, the best of both worlds happens when companies like ours dedicate 10 to 20% of their resources, in my opinion, to have a startup within itself. The Freedom CNG motorcycle, the Chetak electric scooter, the e-3-wheeler, electric 3-wheeler we are making, this is nothing but a startup within a legacy company, and this is how you carry your company from your present activities into the future. So that's my definition of upstart, startup and champions. But if you give me another 30 seconds, I want to share with you what Piyush Bhai once told me in this regard, because these startup wale are very kind of intimidating because they are from the IITs and the IIMs and all that. हम लोग तो ऐसे मतलब backyard में पड़े हुए लोग हैं.
And they say that they put ice cubes in their water to drink.
Yeah, like we have oats for breakfast, but that's a different story. But I will share with you a quote that Piyush Bhai told me in this regard, and this is what I would like to say to these upstarts. And the quote is like this: फर्क बहुत है आपके और हमारे तालीम में. फर्क बहुत है आपके और हमारे तालीम में. आपने उस्तादों से सीखा है, हमने हालातों से.
I want to understand from you, what is the aspiration now on the EV side? I mean, you've got this joint venture that you've inked with MG. Take me through what we should expect in the next 5 to 10 years as far as JSW's EV ambition is concerned.
So the idea is that to give the consumers a very good product, very good quality at affordable price in the EV spectrum. And I believe that JSW can do it extremely well.
Okay, so that's the proposition, but what does the roadmap look like? What are the numbers that you're targeting?
Numbers is in...
The Indian market opens in the green, tracking largely positive global cues, does extremely well now. The Nifty at the high point of trade. Mid-caps outperform Nifty, Auto and IT lead the pack.
Zee Entertainment rallies nearly 7% after Puneet Goenka steps down from his post as the managing director.
Onasa Consumer extends losses for the second day running on the back of weak quarterly performance. The stock slips 15% early into trade, recovered from day's low but still down 10%, taking the weekly losses to 25%.
Switzerland Energy climbs nearly 5% following positive commentary from brokerage house Morgan Stanley. The firm upgrades the stock to equal weight to overweight and sets the target price at 71 rupees per share.
PG Electroplus zooms more than 10% of the company signs an agreement to become an EV manufacturing partner for South Africa's Spiro Mobility.
Hello and welcome to Chartbusters. I'm Nigel. With me is Manglam, and it's good to see after a while all the top indices at the top of your screen while trading well in the green. The Nifty is off to a flyer. The Nifty Bank is participating. IT as well is doing quite well, and the breadth of the markets as well looking quite good. So Manglam, it's a good start to the trading session.
It's a good start to the trading session, and the way it's going, it seems like, the end might not be very bad either, but then again, who's to say? We'll keep an eye out on that. Fingers crossed. All guns blazing for the bulls right now, and coincide that with the big dip that we're seeing in the India VIX as well. Yesterday was a volatile trading session. The India VIX went up above that 15 mark, but now as we speak, down about 5.5%. Overnight, the CBOE VIX came down as well, so we'll keep an eye out on all these parameters as we move forward. Good time to bring in Shilpa Raut of Prabhudas Leeladhar for a quick technical check on the market. Shilpa, after a 1,000-point decline over the last 8 trading sessions, one was hoping for some bit of a relief, and that has come by. The question here on is this relief tradable on the long side, or do you think that we're still not out of the woods yet?
Good morning, Nigel and Manglam, and thank you for having me on the show. We might take this as a short-term rally that is happening, a short covering, you may say as well. But the kind of FIS data has been placed, I believe, we are not supposed to see a very, large downside from here. The downside potential from here should be around, 22,500 at maximum. If you look at the open interest for the next 2 series, it is reflecting that this 22,500 level should hold. So if that is the case, then I believe, from here one can start accumulating, and the kind of, stock futures that has been added by, the FIs, I believe, they're at 60% net longs now in stock futures. So which means that, maybe they're neutralizing their trades for indices and, are going long in stocks gradually. So which always indicates that, there will be a turnaround anywhere, short-term, in the near future. So for me, I believe that, if Nifty is holding 23,200, you can see levels of 24,500 to 24,800. That pullback rally towards these levels can be definitely expected. And from there, we might again evaluate, if there's a trend reversal for new all-time highs, or again, this sideways, market will continue.
So Shilpa, you're just holding on to your longs for now on the Nifty, right?
Yes.
Got it.
And
Nifty Bank.
Nifty Bank also, I believe, as long as we are holding 49,500, we are good to see levels of 53,000 on the near term. And if it holds, then maybe, levels higher as well.
All right. And what about individual stocks? What do you have on your list today? A bunch of them doing extremely well, specifically from the broader markets as well.
Yes, I have 2 buys. The first one would be a buy in ABB. ABB has seen a very steep correction, and from here we see that, levels of 6,500 should act as a good support, and positionally from here 7,200 to 7,500 can happen very quick. And the other one would be a buy in Ashok Leyland. Ashok Leyland also is giving a breakout today, and as long as it's holding 215, I believe levels of 235 can happen anytime.
All right, let's shift focus then to our special segment where we get you a few ideas of profit. Thank you, Shilpa, for joining in. This one comes in from Money Control Pro's Anubhav Sahu.
Well, in the current market correction, there are limited pockets which are resilient from earnings point of view. We believe hospitals is one segment which continue to do well, as there is a significant demand-supply gap for organized multi-specialty healthcare in the hinterland. And to capitalize that, few of the regional players are doing well by investing or acquiring assets in tier 2 or tier 3 cities. And in that context, we like KIMS, that is Krishna Institute of Medical Sciences. Now the company is on track to add 2,600 beds in next 2 to 3 years, which would be more than 50% of its existing capacity. Broad operating model is to own assets of about 400 beds in underserved regions, mobilize different business models like equity partnership with leading doctors, or take up assets on lease to lessen capex intensity. Other driving thesis is to acquire running entities and turn it around. Now, recent instances are that of Sunshine and Kingsway hospitals, wherein operating margins have substantially improved in the last 2 years. Key monitorable is balance sheet, as debt to EBITDA is guided to be about 2 times during expansion period. Valuations are in line with the sector. Overall, given structural tailwinds, we believe stock can be accumulated on dips.
Thanks a lot for that, Anubhav. For the time being, we'll slip into a short break. On the other side, we'll get you excerpts from our conversation we had with Mr. Rajesh Gupta, the MD at Lloyds Metal and Energy. Stay with us.
I would like to, idea is to produce 1 million cars. And
1 million cars in the next 5 years.
Next 5 to 7 years, yeah. By 2030, let's say, 1 million cars should be on the road of JSW, whether it is MG or not MG, but under the JSW umbrella.
That is one of the aspects of Mr. Jindal. You know, it's almost a blow hot, blow cold relationship with China, isn't it? I mean, you just talked about all the reasons why we should not do business with China. And through the COVID period, you were very clear we shouldn't do any business with China. But now you're doing business with China. You've been a joint venture for the electric mobility space with a Chinese company. So do you believe that there is a need to be pragmatic on how we engage with China?
No, absolutely. With any country. In fact, even Pakistan, for that matter, we should be pragmatic.
To deal with Pakistan?
We should be pragmatic.
Yeah.
We should not say that no, nothing doing. So when I said we should not do business with China, when Galwan happened, because I was very clear that we cannot deal with an enemy state. Pakistan, for that matter, is an enemy state.
Yeah.
But still, if we work properly, you know, with a control mechanism, we should open up and do business. Because
with Pakistan?
Even with Pakistan.
Okay.
Because a very poor neighbor will always hurt us. So therefore, we should think, we should have a long term, but this is not a foreign policy discussion that we are having. But my point is that with China, we should, because China has already developed this technology on electric vehicles. Today, 60% of their new car sales are electric or new energy. India, we have 2%. And this is the way forward. We import all our fuel for the cars. All petroleum products are imported, 85–90% is imported. So it's in our interest that we transition ourselves to a technology which is domestic, which is local technology, local
So bring the technology in from China, but manufacture in India.
Exactly. Absolutely. Because technology exists in China. We must develop it over time in India, but we must bring the technology and develop the products in India.
That you believe, Mr. Murthy, that you would like Indian entrepreneurs, young entrepreneurs to focus on as we move forward?
Well, first of all, let me say that the entrepreneurs of today are so much smarter than I ever was. I mean, look, the gentleman, Harsha from Swiggy, he says he will do.
Well, I spoke to Mr. Rajesh Gupta, the Managing Director at Lloyds Metal and Energy, on the sidelines of the Global Leadership Summit and asked him about his outlook on the business given the pricing disparities with China. I also quizzed him about the company's CAPEX plans going ahead and how they want to forward integrate. Let's hear out what he had to tell me.
So 25-26, we should go up to 25 million tons of dispatches of iron ore. And out of which 4 million tons will be making pellets and around 500,000 tons of sponge iron. So the capacity of sponge iron will also double. The capacity of iron ore will also more than double.
So FY26, then things are looking very, very strong. You know, there are two big triggers that are playing out right now. One is the Chinese stimulus. The second factor is the United States is going to have a new president, which could have its implications on metal pricing on the whole. How do you see both these two factors, affect metal pricing and iron ore in particular?
So iron ore in India is quite diverse from the international pricing, and it's quite steady at the moment, or a little stronger because of the continuous demand growth and supplies of steel growing in India, and that is going ahead forward only. International price is still very high compared to the Indian market.
Indeed.
Yeah, so I don't see that as a big shock to the Indian steel market. Of course, if there's a problem in the international market, there will be some reactions in the iron ore market. In the steel market, over a period, I think China will be forced to reduce their production, and that will also be positive in the steel market in India as well.
Okay, all right. One thing that makes Lloyd Metal stand out is your cost of production is relatively much lower in comparison to what other miners are currently doing. Also, you have your mines in terms of their life is, much longer than others as well. So update us on both these two factors, the cost of production, until when your mines will be valid.
So our mines validity, the lease validity is 2057 without a premium, and that's what keeps the cost. The biggest factor that keeps our cost lower is a zero premium mine. Even yesterday, a mine was auctioned in Goa at around 125% of the average selling price. So this is a very big cost driver for us. Apart from that, we are also continuously striving to reduce costs in the operations side. And one of the factors that we are doing to reduce cost as well as to make the mine sustainable is to make the mine green. We should be zero carbon by 2026 end.
Okay, all right. That's encouraging then. So you're saying, you're giving us two big details here. One is that your mining capacity, total production will go up to around 25 million tons in FY26. And the validity of your mines is all the way till 2057. Are we getting that correct?
Yes, yes.
All right. The next big trigger is going to come now as you forward integrate. People said that great, that Lloyds Metal is a good iron ore miner. But now, as you've been saying, you're moving to pellets. There's a beneficiation plant coming in there. So your steel plant. By when do we see Lloyds Metal become a fully integrated steel unit, and what is the capacity we should look at?
Our first steel plant will be commissioned by the year 26 September or so. That is a 1.2 million ton steel plant. It will be a wire rod plant, the first in Western India. So that's one big output of steel, and the other one would be a 3 million ton output, which will happen in 2028 or so.
Okay, all right. Final question then, sir. You did a QIP and you got a lot of big influential investors that came in there. But some part of the street didn't get the required quantity. Do you have any more fundraising plans? Given the outlook you have a big capex plan, which you say most of it will be funded by internal accruals, but some more equity dilution could be on the cards?
We haven't really gone into that process. As of the moment, we don't think so. But definitely our plans are very, very aggressive. And also aggressive, but thought process driven aggressive. So we hope to be focused on that and then see the fundraising plans later.
All right, with that, we'll step into a short break, come back on the other side. Parakram Jadeja of Jyoti CNC Automation joins in to discuss their quarter gone by. Stay with us.
Food in 10 minutes in this environment where I took an hour and 25 minutes to come from Santa Cruz West to this place. He is a magician. He is a magician. He is a remarkable guy. Therefore, we must all salute him. We must salute him not because he may be able to do or he may not be. That's not the issue. Even to have such an audacious vision, even to have such an audacious aspiration, target, that itself is fantastic.
But let's talk a little bit about the journey to the IPO and to listing day itself. The last few days looked quite difficult, didn't they?
Oh, Shreen, thank you for having me. Indeed, I think we're now taking all a sigh of relief that the stock is up, 10 to 12%. But it's not been easy. From the time we went on the road, Zomato, which is the closest comp, I think was down about 8 odd percent. The market was down 5.5%. There was the US election, there was China stimulus, so a lot outside our control. And I think what we did well was we priced it right, where we knew we had enough book and we had a high quality book, a good balance between domestics and foreign, breadth and depth, and people who really understood the story and not who were looking to flip on day one, but also just to long-term holders. And I think the proof of the pudding came actually in the anchor book. And once the anchor book got oversubscribed by high quality names, we knew we were prepared for a jittery market. I think, did I expect it to open positive? I think that's even better. But I think we had played it right to make sure that we left enough money on the table.
That decision to leave enough money on the table, and I think this has been one of the big lessons as far as the recent IPOs are concerned, getting the price right. I mean, we've seen the debacle of something like Paytm, for instance, and you were investors there as well. That decision to get the price right, to put enough on the table, how hard is that conversation with founders? How hard was that conversation with Harsha?
So I think, like you said, I think when you've seen stocks not do well in the past, then the conversation becomes easier. I think if Harsha was the first tech IPO going public, Maybe it would have been harder, but Harsha is an exceptionally long-term thinker. He's made money for investors all throughout. So I think with Harsha, it would have been easier. But generally with entrepreneurs, I think it's been easier because now it's quite clear. You are stopping your journey with private investors. You're starting your journey with public investors. And if you don't have their confidence, then that's going to play out, in different ways over the next 10 years. Their confidence will be less. They will give you less room for error. And so now the formula is quite fixed. Let's leave some money on the table. Even if you get diluted a little bit more upfront, I think over the 5-year period, we'll all be much happier.
Well, let's talk about Swiggy and your confidence in the bet that you've decided to make, and you didn't participate in the OFS. Is that on account of the fact that you believe that there's significant headroom for growth from here on?
I think there is. I think, look, there is very few times in a country.
Welcome back. You're watching us here on Chartbusters. Let's get chatting with the management of Jyoti CNC Automation. The company reported a 42% rise in the revenue, net profit more than tripled while compared to the corresponding quarter last year. To discuss the numbers in detail, we do have with us Mr. Parakram Jadeja, who is the CMD of the company. Thanks a lot, Mr. Jadeja, for joining in. The last time you joined us, you did give us a fair amount of outlook for the remainder of this year. Now, the first half, done close to around 800 crores on the top line. What's your outlook when it comes to the revenue as you end this year? And margins, 25 to 27% band, do they sustain there, or could there be an upside or a downside risk?
So we are absolutely able to maintain the margin scenario like that. We'll see a little bit improvement to be there. And in terms of a top line, let's say quarter on quarter, we are going to maintain the growth momentum like that. And our capacity is an add-on from this quarter. So we will have some better top line improvement we'll see into quarter 3 and quarter 4 to be there.
So first half, you've done about 40% in terms of top line growth. What happens to the entire year?
We will maintain the similar growth like that, and some improvements we will see into a similar number to be there.
Earlier, Mr. Jadeja, you were talking about 40 to 50% growth. Do you think you can be around 45%, the mid-level, or could it be at the upper end of the range? And as you said, margins as well, you're looking at improving. The third variable that we look at is the order inflow. I think earlier we were talking around 1,500 to 2,000 crores. Is that doable?
So basically, if you look at that in terms of a top line, yes, what you are on a right numbers to be there. And
which is the right number, sir? Which is the right number? 40, 45 or 50? I think you're hinting at 50.
We are near to be 50 there.
50%, okay. Super. That's out of the way. Margins, you said it will be maintained and can improve. So that's as well as out of the way. Yeah, order inflow guidance, if you can help us out and break it up sector-wise.
If you look at that, our order book has been improved in this quarter from 3,400 crores to close to 4,300 crores. And many orders in pipeline that. So today we are not looking to be let's say challenging on an order book side. The challenge is to now maintain the growth rate in terms of execution there to 40 to 50% quarter on quarter on like. So we are adding the more capacity also over here. And we are keeping another 10,000 machine capacity will be ready in the next 2 years time. And every quarter will improve like this.
So, just a quick question, a follow-up on the order intake itself, and then we talk about the machine utilization, etc. You had earlier said that for the entire year, your order inflow will be a little over 1,600 crores. And the first half itself, you've done around 1,500 crores in terms of order inflow. So, the next couple of quarters, should we not see many orders coming in? Or,
No, it's not like that. We will see the order book will be like that. So there is a uptrend we are seeing in terms of all these areas. So we were anticipated to be entire year to be 15 to 1,600 crores that we have achieved into this.
Exactly.
Okay. So now pressure on us to deliver more basically. Okay.
Okay. So next 2 quarters.
The way we will, let's say our execution will be improved. Order intake will be still better because our pipelines are more stronger over here today.
Okay, all right. Let me just talk about the EMS vertical. That saw solid order inflows, and that contribution as well has gone up as a percentage of the total orders. I think it was close to 500 crores. Could you tell us what is the trajectory out here, further orders in the EMS space, and how does execution pan out from here on?
Yeah. So basically in EMS I earlier also was always telling that The EMS is going to be a full color will come in at 25. So this is beginning of this this arena, and we are looking furthermore order in pipe on EMS sectors. And in terms of execution, on a next year you will see it will reach to be almost 20 to 25% of our total top line to be there.
All right, 20 to 25% of your total top line. And just for reference, what is the margin differential between EMS and the others? Or are all sectors the same margin?
Our margin is basically is a combination of all basically.
Yes.
It's a model mix. Today, let's say we have a high-end machines and we have an entry-level product and mix of like that. So margin based on this, our order book today, okay, average machine realizations are reaching to close to 40 to 50 lakhs over there. And that's our margin also to be maintained in between 25 to 27%.
All right, 40 to 50 lakh is the average realization per machine. This was at a much lower throughput. I remember you had said that you want to, increase your throughput as well. Looking at your machines itself, there are three ways you can enhance your business. One, by adding machines, which you're doing in Rajkot. Secondly, by debottlenecking and adding another 1,600 machines, which you've done already. And the third was from, 27 lakh, you wanted to increase the realization to 40 to 50 lakh. Now,
so today,
realization...
Yes. We already increased from 27 to 41 lakhs now there. Okay.
So when does it get to 50 lakh?
Based on the today's our order book, the order book, average order book today is a 50 lakhs.
So once everything comes on stream, what is the potential revenue and what capacity utilization are you at right now?
So today, in terms of before this, our new bottleneck has been removed. We were at around, let's say, first half is 85% there. And we are looking to be up to this end of this year is to be around 75 to 80% utilization like that. And the next year, our new capacity will come. So we'll see the further growth to be there.
Help us out with your subsidiary, French subsidiary, Huron. Could you tell us what kind of revenues and margin trajectory for FY25? Just this subsidiary.
So subsidiary there also we are looking to be a similar growth and the patterns like that. And in terms of a revenue, let's say last quarter to here also the growth is almost a 50%. Similar momentums we are maintaining. There also we are doing the capacity enhancement to be there. So next year we'll have a much better growth.
Could you give us an absolute number for the French subsidiary?
Yeah, basically we have done this quarter is a 70 crores there.
All right. 70 crores
and margins of?
Margins of let's say in the first H1 our margins has reached to a PAT level is close to 1.8 million euro there.
All right. Just a final question once again, just trying to understand the scale of the business that you can do. At the end of the first half, you had 6,000 machines, right?
Now capacity has reached to 6,000 now.
Okay. Plus
16,400 there. Okay.
Okay. And
so
all in all,
at the end of the year, we are looking to be in between 4,500 to 5,000 machine execution is going to be happen end of this year.
Okay. And next year you are also adding another 10,000. So you will increase your utilization there as well. Just back of the envelope calculations of the 16,000 machines that you have, even if you utilize say 80% of that by the end of next year at about 40% 40 lakh per machine in terms of
okay. Let's say 10,000 machine capacity will come only end of the year.
Got it. Okay. Very quickly, this 400 crores capex you've announced, what is the asset turn on it?
So the asset turnaround in terms of a fixed asset turnaround, we will reach to 4 times there.
4 times. So another 1,600 crore potential from this 400 crore capex that you've announced.
Correct.
All right, Mr. Jadeja, appreciate you joining in. It seems the street like what you have to tell us. As we speak, the stock that was in the red has moved into the green. Appreciate you speaking to us. We'll hold you at these numbers when you join us the next time around. For the time being, we'll wrap up on this edition of Chartbusters. Stay with us. Trading Hour comes up next.
An investing professional's career, are you going to see such a large platform being created, right? When you have both food delivery and Instamart, when you have $5 billion plus of GMV, when you're touching 100 million plus consumers, when the repeat of orders is that high, and India is only becoming richer, more urbanized, and the product market fit becoming only stronger, we think Swiggy has a long way to go. Obviously, execution is important. There is competition, Zomato, Zepto, but I think the market is large enough. The product market fit is very strong. And that's why we didn't do any OFS, because we think there's a long way to go for Swiggy.
And you're holding 8% off it, so that's a sizable chunk.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats.
Hello and welcome. You're tuned into Trading Hour. I'm Sonal Bhutra and with me is Vinny Motiwala. So it's a dark green on the screen after a really long time. The Nifty seeing gains of almost 300 points right now. We do have the mid caps which are around up around 1,000 odd points. And you know, it is coming in from most of the heavy weights, around 20% of the weights, which is HDFC Bank and Reliance Industries. Both of them are contributing to the gains that we are seeing today. And usually they've not seen the same direction in terms of the gains that we have seen. But today, HDFC Bank is up 2%. We have Reliance, which is sitting at gains of around 1%. So this is the reason why we are seeing so much contribution coming in from these heavyweights as well. Most of the sectoral indices, they are in the green today. But we have to talk about how the, the small cap index is moving today. It's a 2% gain that we are seeing there. The auto index has made a comeback. And IT, which has been volatile, but yes, it has been one of the outperformers. That index is up around 2% as well. So some green on the screen after a very volatile season that we've seen.
Absolutely volatile season. And, Sonal, when you're looking at it, it's 7 consecutive days of fall that we're seeing for the Nifty. Now, snapping that and finally seeing a green, I think, Sonal, you wear more of green so that we at least see a bit of green coming in on the screen. But yes, that's how we're looking at the market. At least a positive side that we're seeing coming in. A lot of mid-cap movers also. GMR Airports, that's in focus. We did have this domestic data that came in. We have Suzlon Energy, Federal Bank among the top gainers when you're looking at it in the Nifty mid-cap. And all the sectors today are trading in the green as of now. Some of these other Nifty performers, like Sonal mentioned, IT today is outperforming, right? So let's pull up something like an Infosys that's holding on to good gains in terms of contribution also for the Nifty. We've good contribution coming in from Infosys, TCS, and other than that, M&M. Auto stocks, they have started seeing a bit of a pickup as well today. So Nifty Auto is also something that we're keeping an eye out on. And two pharma names that I want to highlight today, we have Shilpa Medicare, that's in focus, as well as AstraZeneca Pharma, both in terms of news flows coming in for these two companies. So keeping an eye out on at that side as well. But a positive day that we're seeing coming in terms of the move in the market. But let's talk about a stock that specifically is in focus today, and we have M&M that we're keeping an eye on. It's the top Nifty gainers. Sudarshan is joining in with us with details from the CLSA's note and what is keeping the stock abuzz. Sudarshan, good morning.
Good morning, Vinny. So CLSA has come out with a note after it hosted Rajesh Jejurikar at its India Forum 2024, and CLSA has maintained outperform rating on the stock with a target of ₹3,440 per share, implying an upside of nearly 20% from current levels. So what are the positive catalysts? Company's focus now is on transition from entry-level SUVs to mid and premium models, and it believes that consumers are ready to pay extra 10% for features in passenger vehicles, and the prime example is the Thar SUV. The growth that Thar SUV has seen in the recent past. Now Thar SUV sales are around 6,000 units versus 700 units that company used to sell nearly a few months ago, and it believes there is a further upside potential in Thar SUV with 5-door version launch, and also consumers are ready to pay extra for ICE models. ICE models basically petrol and diesel models, as company believes they have lower GST rate in comparison to electric vehicle, and it's confident of new model driving growth in FY 25-26. Regarding the EV launch, it says it will launch multiple EVs in next 12 months and 2 EV models, XEV9e and BE6e, to be unveiled next week. So on the back of multiple EV launches and continued SUV demand, CLSA believes there is an upside potential in the M&M stock price from here also.
Okay, all right. Thank you so much, Sudarshan, for telling us what's aiding the M&M stock today, the biggest gainer that we are seeing on the Nifty. But what's not doing well for two consecutive sessions is Honasa Consumer. 2 straight trading sessions of a lower circuit that we have been seeing. The numbers were weak, but Mangalam is joining in to tell us more on what's ailing the stock today.
Well, you know, after a 20% decline yesterday, today as well, the stock is low in double digits as well. And it's taken the entire week's cuts to about 25-27 odd percent. And as a result of which, Honasa's decline from the top has been nearly 50%. So the stock is halved from its 52-week high. What's important is yesterday fell below its IPO issue price, and now it's fallen below the $1 billion mark in terms of market cap as well. Now, we know the second quarter earnings were weak. Now, what remains to be seen from a technical standpoint is whether the exit door is fairly narrow. Because remember, if you look at the shareholding pattern of the company, you know, 35% is held by the promoters, but domestic institutions hold about 17.5%, foreign institutions hold about 19.5%, and PEs own about 21%. The company is widely held by institutions, and were some of these institutions, you know, on the exit door itself, then it would cause further downside on the stock itself. Now, with the downside that we've seen from the highs itself, what needs to be seen is where is the value. Post the second quarter earnings, disappointing earnings, analysts cut their EPS estimates for FY25 and FY26 by about 50 and 30% respectively itself. And at current levels, at around 5.5 rupees FY26 EPS, the stock is trading at around 50 times. With a market cap of a little over 8,100 crores, they do have cash of about 714 crores. So at what level does the stock settle lower is something that we'll have to keep an eye out on after this big rout from the top.
Okay, thank you so much for that, Mangalam. Surely keeping an eye out on Honasa Consumers. But let's shift focus and also talk about Suzlon Energy. In the last 1 month, yeah, surely it had seen a correction. But today, the stock is locked in upper circuit. We have some positive commentary that's coming from Morgan Stanley. So Darshan is here to tell us the details about this note.
So Suzlon continues to move higher. It's at the upper circuit for second straight day. And now today is the note from Morgan Stanley. It has upgraded the stock to overweight from equal weight, but has cut target to ₹71 per share for ₹78 per share. And it believes that after a sharp decline the stock has seen from 52-week high that it hit in September, there is a chance that basically it's advising to accumulate the stock at current levels. And what's the rationale as per Morgan Stanley? It believes business moat and growth opportunity for wind OEMs remains strong, and companies likely to be beneficiary of India's energy transition, and it has large 5.1 gigawatt order backlog executable in next 24 months, and market share it expects to improve in the range of 35 to 40% by FY27 versus 25% FY24. As far as estimates are concerned, it has lowered FY25 wind turbine generator EBITDA margin by 50 basis points to 8%, but has retained FY26 and FY27 margin assumptions. So after a sharp decline that stock has seen from 52-week high, Morgan Stanley believes that basically it can be accumulated at the current levels.
Okay, so that's what investors are doing today, 5% higher on the stock. Thank you so much, Sudarshan, for bringing us all those details. So those are some top gainers that we wanted to highlight. But for now, we'll slip into a short break. Up next, we'll discuss what's buzzing in the commodity space as always with Manisha Gupta. Stay tuned.
And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
The Maharashtra elections this time stand out as one of the most unpredictable in recent history. The political landscape is charged with uncertainty and no one can confidently predict the outcome. Both the ruling Mahayuti alliance and the opposition bloc, that's MVA, face unique challenges, making the contest intense and volatile. The opposition has centered its campaign on issues like inflation, unemployment, farmer distress, Maratha reservation and the redevelopment of Dharavi. They have also used the breakup of Shiv Sena and the NCP as a key talking point to attack the ruling coalition, especially the BJP. Meanwhile, the Mahayuti, comprising the BJP, Eknath Shinde's Shiv Sena and Ajit Pawar's NCP faction, has focused on welfare schemes such as Ladki Bahin and infrastructure developments, and these are the issues they are seeking votes on. We also saw BJP leaders using slogans like Katenge to Batenge despite opposition from many state-level BJP leaders themselves. Another slogan used by BJP was Ek Hai to Safe Hai. The campaign of both MVA and Mahayuti has been clouded by internal challenges like cross-nomination, infighting and uncertainty over the elections.
Welcome back. You're watching Trading Hour on CNBC TV18. Let's shift focus to the commodity space and we'll talk about cacao. What is that pricing doing? Manisha is joining in with us to tell us more details on that. Manisha, good morning. And are my chocolates becoming expensive or cheaper? What am I expecting now?
Oh, they are getting expensive, especially ahead of Christmas and the holidays. I mean, this is the time that you see very strong demand continuing in case of cacao. And we have seen prices near a decade highs. It has been a one-way rally for cacao. I mean, of course, we've seen blips come in there as well. But majorly, the fundamentals are quite on the stronger side. So the two major producers of cacao, one is, of course, Ghana, where we are looking at civil unrest within, and there have been concerns about production there. The second is from Ivory Coast, where we are looking at unfavorable weather, so much so that you have seen production numbers decline, and the inventories, not just in Ivory Coast, but also US warehouse inventories in sense of cacao are the lowest since 2005. So everywhere that you see, whether it's about the production countries or the global inventories, are all on the weaker side there. The markets also are looking at some uncertainty as we look at the European deforestation regulations, which as of now have been pushed off by 1 year. But what shape and form would that come in from? And with the expectation that after Europe, you could be looking at US and Canada and Australia also come in with deforestation rules and regulations, is something that really seems to be bothering the cacao prices there. I want to bring that chart on your screens to tell you on what the prices really have done. So in last 1 week, we've seen almost 6% of gains come in, 13% of a jump up in last 1 month, and it's almost doubled in this year with 99% of gains in cacao prices in this year until now. So well, yes, your chocolates and your hot chocolates and all of those things are going to be expensive before this year ends.
Manisha, I don't know about the prices, but you both have spoken so much about chocolates and hot chocolate that I feel like having it now. So it's on the two of you. When I come out of the studio, you are treating me with one of them. So, but thank you so much for bringing us up to speed to what's happening with cacao prices. A big surge is what we've seen in the prices this year itself. But we'll do one thing. We'll slip into a short break. When we return, we'll discuss market technicals with our technical guest up next, which is Mitesh Thakkar, and also discuss the top trading bets.
There will be an NCP versus NCP battle on 37 seats and Sena versus Sena on 51 seats. Also, both Mahayuti and MVA will witness what they call a friendly fight on multiple seats. Mankhud, Shivajinagar, Ashti, Katol, Morshi, Dindori, Shrierampur are some of the seats. Certain seats like Worli, Mahim, Baramati, Kopri Pachpakdi and Shivdi are gaining attention as crucial battlegrounds. These constituencies are likely to see fierce competition with prominent leaders on both sides striving to secure voter trust. Mahayuti's welfare schemes like Ladki Bahin could play a key role in deciding the outcome. For both sides, the influence of rebel candidates will be important as they could tip the scales in closely contested seats. The possibility of post-election realignments cannot be ignored, adding another layer of intrigue to an already unpredictable contest. With both sides facing internal and external challenges, the stakes have never been higher.
You know, your 70-hour comment has gone viral and you're not going to be able to live it down anytime soon. And any change in thinking on that one, or do you believe that you were just grossly misunderstood?
No. First of all, I don't believe in work-life balance. The only way we can show our appreciation for all these wonderful things that are happening is by our working out. Frankly, I was a little bit disappointed in 1986 or something when we moved from 6-day week to 5-day week. I mean, I was not very happy with that.
What is work-life balance for you?
No, to me, I think giving time for family, for health, and work, all three are very important. I think to be successful at work, one has to work hard. But I think you can offer an array of menu to employees.
So has the menu widened over the years? I mean, from when you took charge to where it is today, has the menu widened significantly?
I think the offering has completely changed. You're being much more purposeful as a company. You're being looking at all these other aspects that I described, in addition to just focusing on outperformance.
Sagar, let me ask you the same question as well. How are you dealing with this culturally? What has been the change on your menu to keep employees happy?
I feel like there is no
right or wrong in these things.
Yeah.
It's not our place to enforce what we think is right or wrong on the people who work with us.
Yeah.
For me, for example, I don't think of work-life balance. I think more of work-life harmony, right? Because I'm always working when I'm not at office, and I'm always available for family when I'm at office as well. So it's I don't think of it as a clear line where
it's not siloed.
It's not siloed where post 6 p.m. you don't pick up work calls, or when at 2 p.m. you don't pick up family calls, right? Like it's that's how I think about it.
Yeah.
There's nothing right or wrong, but I always think of it as making sure that the people who I surround myself with, the people who work together with close colleagues, are all people who are extremely passionate about what they do.
Let me ask you, how are you dealing with this, and what have you changed, if anything at all?
The new generation is very well informed. They're very, very clear in terms of what they want. I think their preferences are very different. They have a very unique view on the world. And I think companies will also have to adapt in terms of whether it's their employee policies or their
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Well, the government is likely to discontinue the windfall gains tax, and sources have told CNBC-TV18 that the Prime Minister's office has asked the Petroleum and Revenue Departments to finalize the contours to issue the relevant notifications to discontinue the levy. Remember, it was first levied on 1st July 2022. It's been 2 years. Timsi Jaipuria is joining us with the details. Timsi, take us through the government's rationale.
Well, after almost over 2 years of existence, the windfall gains tax levy could soon come to an end. That's what sources are indicating to CNBC-TV18. What we are picking up is that the government at the top has decided to discontinue with this levy, and a formal decision, a formal notification for the discontinuation of windfall gains tax levy could come soon as by end of December or middle of December. Sources indicate that the Prime Minister's office has asked Petroleum Department and Revenue Department to finalize the contours to issue a relevant notification to discontinue this levy. Remember, this levy, that is the windfall gains tax, was levied from 1st of July 2022. And some of the reasons behind this discontinuation is that the average crude price was not yielding much taxes. The industry was unhappy with the levy, and the levy was having an impact on the production levels. And thus, the country now wants to enhance its production levels of crude oil, because of which this discontinuation decision has been taken. Let's see how soon a formal notification is issued. Where are we actually in terms of the total collections? All of this are likely to coming in together with the announcement of discontinuation, which could be as soon as within December itself. Let's see. As and when it comes, we'll keep you updated. Back to you.
Okay, thank you so much for that, Timsi. But let's move on and also bring on board Mitesh Thakkar, who's joining with us to give us a quick take in terms of the technicals and a quick check on the market as well. Mitesh, good morning. Thank you so much for joining in with us. Let's look at the market, right? Today, a pretty day coming in for the markets. But do you think this is something that we'll hold on to in terms of a move?
Yeah, good morning. So my sense is that yes, but it will be volatile. We've had a good bounce back to 270 to 80 points on the Nifty, 500 plus points on the Bank Nifty. But bounce backs typically tend to be choppy, so I think there could be some volatility. But I do expect that eventually this bounce back could head towards 23.850 to about 23.900 zone. So there's still about 120, 170 points left on the upside, and then we'll take it from there. So for the time being, we've been advising people to get out of short positions since day before yesterday, and today, morning we've started taking some long positions as well.
Long positions since morning. Any other individual names that you would like to highlight, Mitesh?
Q4 should be a recommendation as a buy call with a stop below 8,100 for targets of 8,400 plus levels. And the other one is a buy on Coromandel with a stop at 1,740 for targets of 1,820.
Mitesh, I wanted your thoughts on HDFC Bank and Reliance Industries. Reliance has seen a sharp fall from the highs of the day. HDFC Bank has been very volatile. Do you think there's an up move that's coming up for these two big names?
HDFC Bank, has been something which, it didn't even fall or it didn't even correct when the market was correcting. I mean, it did come down a bit, but there was no severe decline happening over there. So very, very positive on HDFC Bank. I think it should head towards 1760 first, but then eventual targets are 1790 to 1810 levels, and I do suspect that eventually I might revise them as well. So very positive over there. Reliance, on the other hand, is more of a bounce back from oversold levels, could head towards about 1300 toward 1305. If it starts sustaining above that, we'll look at a slightly bigger reversal.
Okay, sure. And with this, just the word, you did mention about Coforge, but overall as an IT pack, and do you think Nifty IT, now we'll see a bit of a positive up move coming in for this one? In the last month to date move that I'm checking, Nifty IT has been that outperformer coming in, YTD also. So do you think that outperformance for Nifty IT is something that will continue?
Not sure of that. For the timing, yes, there are some of the IT names which look interesting to me, but whether it will outperform in the medium term, I'm still not very clear about.
Okay, all right, Mitesh, thank you so much for joining in. So those are some technical bets and levels to watch out for on different stocks and sectors. But time for some more highlights from the CNBC-TV18 Global Leadership Summit. Our colleague Sapna Das spoke to the DIPAM Secretary Tuhin Kanta Pandey on the government's divestment plans and a lot more. Listen in.
I think we are looking at it. We have, as I said, that we have, after fit and proper, we have moved to due diligence by the, by the bidders, which are in the fray. And we hope to receive a financial bids within this year. TNL is an issue where is an ongoing concern, and they will, their business, which is existing business, is being managed by, BSNL, using the resources that...
It is going to be managed or is being managed?
I mean, in the sense that,
Transition has started.
They are writing an agreement, their operational agreement between them, so that, the BSNL management, which is there, which is also in charge, in fact, CMD is in charge of, BSNL MD is also in charge of MTNL as well. And so that is one part of it. The second part is that they have to have an asset monetization of some of their land and buildings which are there in Mumbai and in Delhi. And they have to really do through following the process of monetization. They have to keep doing it in order to raise resources.
Restructuring package.
And there is no package as such. This package was really considered in 22 by the cabinet, and to that extent we have also issued some guaranteed bonds, and obviously the guaranteed bonds, if they come for redemption as and when their dates fall due.
But MTN is a defaulter at the moment. But then anything with the banks on the cards?
No, if there is a guarantee of the bank, if there is a sovereign guarantee, those guarantees are then honored.
Okay, on that note, we're going to slip into a very short break. But up next, we'll discuss the latest e-commerce trends with Sachin Dixit of JM Financial Institution Securities. So don't go anywhere.
Target those customers. I think we'll all have to evolve, and at Torrent, we are evolving. For instance,
so what's the big change that you've made?
So for instance, our employee policies have a great focus around work-life balance. We are one of the few entities in Gujarat that has a 5-day work week since a while. We also encourage work-from-home policies. We are moving towards situations where our female employees are given a lot more support to be able to continue to contribute meaningfully, but also to take care of their family affairs. Even on our leave policies are far more liberal than what they used to be.
For us, how do we make jobs more interesting and not just a job, but something people are passionate about, want to do? And I think that it's going to be a constant balance, I think, of priorities, where you talk about work-life balance. I think in my case as well, I think it's not so much work-life balance, it's more balancing priorities at a given point of time and giving the flexibility to people to do that. But I agree with Sagar that at the end of the day, you want people to be invested, you want people to be committed, but at the same time, you don't want to kind of be overbearing. It should come naturally. But I think to do that it's not easy, and I think we will all have to change quite a lot. I don't think we've changed as much, but I think it's also a calibration.
एक तरफ अदानी जी खड़े हैं, धारावी पे निशाना है, महाराष्ट्र की जो धन है उस पर निशाना है, मुंबई के नेचर को चेंज करने का लक्ष्य है, और दूसरी तरफ हमारे किसान, मजदूर, युवा जो एस्पायर कर रहे हैं, जो सपना देख रहे हैं, जिनका सपना हर रोज महाराष्ट्र की सरकार तोड़ रही है। तो ये लड़ाई है। ये है नरेंद्र मोदी जी का एक है तो सेफ है। ये देखिए, एक है तो सेफ है। ये इसमें एक है तो सेफ है, ये नरेंद्र मोदी जी की महाराष्ट्र सरकार की स्ट्रेटजी है। हम आपको ये दिखाना चाह रहे हैं। मुश्किल खुलता है ये देखिए, एक है तो सेफ है, देख लीजिए। और ये स्ट्रेटजी का लक्ष्य देखिए, एक है तो सेफ है, धारावी का मैप है, ये भी दिखा दीजिए। दूसरा पोस्टर
Welcome back to Trading Hour on CNBC-TV18. Let's focus and talk about the latest e-commerce trends, the latest internet trends, what is happening in that sector. We have Sachin Dixit, the internet lead research analyst from JM Financial Institution Securities, joining in with us. Sachin, very good morning. Thank you so much for joining in with us. I want to just start by talking about overall the e-commerce trends that we are seeing currently in the industry. What is it that we're watching out for? And are there any concerns that maybe, those big ticket items, maybe that over there, we could see a plateauing in terms of the penetration there?
So, well, obviously what we are seeing across the e-commerce trends that we are talking about, obviously quick commerce is one side that is coming up, where people are talking about the SKUs widening and the impact of that happening on someone like larger e-commerce incumbents. But what we are also seeing is that our offline participants are now becoming more and more proactive. They are willing to match up the discounts. They are willing to tie up with the credit card companies to offer some of the EMI programs and things similar to that. So that is, I think, what we are seeing in some of the larger ticket items, like let's say the white goods or mobiles. Some of that catching up is happening, which is why we are probably seeing that the mix of e-commerce in some of these categories is starting to plateau to some extent. What is getting compensated by is that basically long tail categories, like something in the home decor side, etc., is coming up, which is what is accounting for some of the rise in mix, or maybe something like an BPC, etc., is also rising on some of the e-commerce platforms.
Okay. The other factor that's taking place is the increase in platform fees, especially during festivals, is what we saw during Diwali, Zomato increasing it. What's the customer sensitivity to these changes that come by occasionally, or sometimes they are there for a longer period of time as well? Is there any math on this? Does it really impact the product basket or the frequency with which a customer orders on a platform?
Well, it's tough to say right now. Obviously, the platforms are taking a gradual approach in terms of inching up this platform fee. You would have seen what some of the food delivery companies announced pre-Diwali, that they were amping it up for the festive season. They did not commit to it being the long-term scenario. What is happening on the customer side is customer obviously is doing some sort of math at their end. But so far, we have seen minimal price elasticity being visible on that end. and the customers seem to be indifferent so far at the platform fees or the delivery fees that are currently being charged. What is also happening on the other side of this whole puzzle is the e-commerce platforms like, let's say, a Flipkart or Myntra. Those were never charging you a platform fee until quick commerce era came up. Now we are seeing for some of these platforms, in order for them to inch up their own profitability or basically take care of the return rates that are quite high in something like apparel sort of a category, they are now also bringing those platform fees on their platforms. So which is where I think overall in the entire ecosystem, platform fees are on the rise. Customers are okay to a certain extent, but obviously we'll see at what point do the customers start to react to the rise in platform fees.
Okay, so far so good in terms of, customers accepting this platform fee that we're seeing coming in, Sachin. But, you did highlight about quick commerce and that being a big growth factor. We've seen companies also talk about the quick commerce side as well. So what is it at in terms of, obviously we have seen Swiggy get listed recently as well. We have Zomato in the food delivery side that is there. We have Blinkit on the quick commerce front for Zomato. What are you liking over here, Swiggy, Zomato? What are you looking at in this space?
So I think, and this has been a constant Zomato versus Swiggy debate, which I think played out on media as well as sell-side analyst reports. That's a consistent debate. Obviously, over the past few years, we have seen Zomato inch up some market share. Blinkit obviously has out-executed in terms of how the whole ecosystem has evolved. But there are things that have come up on Swiggy side as well. And the company is trying to ramp up some of their own play, whether it's in terms of execution or in terms of profitability. Right now, I think most of the investors are looking at where the valuation favors them. Obviously, none of the platforms is considered that, okay, they will completely lose the plot. So I think both will survive. The market is large enough for both to exist and also make money out of it. Now it's only just someone might a bias for Zomato, someone might like the valuations on Swiggy. So I think right now it's a tough call between the two of them.
I think that debate will continue for a while, Sachin, because those are the two hot takes that everyone's been talking about as well. Let's talk about take rates. We've spoken about the platform fees, but can they charge higher take rates as well? We always talk about how Zomato charges maybe a little more than what the restaurant prices are. Does that reflect the take rate difference? What are these companies focusing on? And does that also mean that these companies cannot just start with the older, new players cannot break into the existing category? They'll have to look at newer categories then.
So sure, I think on the food delivery side in particular, the take rates are pretty much mature. We do not believe take rates in itself will likely rise too much. What is rather happening is that how those take rates are coming up, right? For example, someone like a cloud kitchen, right? Someone who has zero offline presence or customer recall without the food delivery platforms will offer them higher take rates. What we have seen over the past couple of years, some of these cloud kitchens have grown much faster than the typical restaurants that we go to dine in at. So when these cloud kitchens rise in mix, the overall take rates do tend to go up for these platforms. Secondly, what we are also seeing that some of the restaurants, they were very reluctant to advertise on these food delivery platforms in the past. Now their sort of adoption to advertising on these platforms has also come up, which also gives rise to a higher take rate. I do not believe like-to-like take rates have too much room to go on the upside. There might be incremental shifts up or down, but I do not think they will change very significantly. The only change is likely to happen in terms of the restaurant mix or the advertising proportion that comes to them.
Okay, Sachin, and just a word in terms of overall, if one has to look at the India internet story or play the e-commerce side, what would you be looking at right now?
So, well, I think some of the companies are yet to come to public markets. There are plans that some of these companies are executing, whether in terms of trying to shift their domicile to India from where they were, whether it's Singapore or US. So that sort of play out is likely to happen. Right now, I think for public markets at least, India internet is still an undiscovered story. A lot of the discovery is yet to happen, whether in terms of business models or in terms of pricing or valuations. I think a lot of it is yet to play out. So I'll suggest most of the investor community to keep their eyes out in terms of what is coming to markets over the next few years, because I'm sure a lot of action is still out there.
Oh, there's never anything stopping the great India consumption story, right? So there's so much happening, and all these stocks, they have started to make a comeback as well. So thank you so much, Sachin, for joining in today with your take and what's happening in the new internet era when it comes to different new platform themes that we've been talking about. We'll do one thing, we'll slip into a short break. We'll get you more on the markets on the other side and stock-specific action as well.
ये एक लाख करोड़ रुपए का धंधा चल रहा है। ये आप देखिए, हमारे प्रधानमंत्री जी और अदानी जी एक साथ खड़े हैं, एक है तो सेफ है, और ये लक्ष्य, तो उन्होंने अपना नारा दिया है, हम उनका थोड़ा नारे को आपको समझाना चाहते हैं।
धन्यवाद राहुल जी।
अच्छा, उनका जो स्लोगन, मेन जो स्लोगन है, एक है तो सेफ है, वो मैंने इतनी अच्छी तरह आपको दिखाया है, उसको समझाया है कि एक है तो सेफ है। एक कौन है? एक नरेंद्र मोदी जी हैं, अदानी जी हैं, अमित शाह जी हैं। सेफ है तो कौन सेफ है? अदानी जी सेफ हैं। कष्ट किसको होगा? धारावी की जनता को होगा। नुकसान किसका होगा? धारावी की जनता को होगा। जो हिंदुस्तान की स्मॉल और मीडियम इंडस्ट्रीज हैं, जिसका एक चिन्ह धारावी है, उसको एक व्यक्ति के लिए खत्म किया जा रहा है। तो लड़ाई यही है। नारा उन्होंने दिया, हमने आपको समझा दिया। इस इलेक्शन का नारा मोदी जी ने दिया है और बिल्कुल सही नारा है। एक है तो सेफ है। सवाल है, सेफ कौन है? सेफ किसका है? एक कौन है? ये सवाल।
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.
देश भर के लोग सांस नहीं ले पा रहे।
Okay, welcome back. The markets are picking up pace. Nifty is up more than 300 points right now. It's above the 23,700 mark comfortably for now, very close to the 23,800 mark. We have the IT names which have propelled Nifty higher further. Infosys, that is at the day's high. There's Wipro and TCS. These three IT names, they are the reason why we saw that sudden spurt coming in on the Nifty as well. And it's not just Nifty. Even if we look at the mid-cap index, when we started the show, it was up around 900 points. Now it's a more than 1,000-point gain that we are looking at the mid-cap index as well. And across the board, there's a big surge that's come by. Even some of these pharma names have made a comeback. The likes of Cipla, Sun Pharma, these two should be on your radar because there is definitely some buying that we are seeing from the lows of the day, and Nifty Pharma also is at the day's high. So some pickup, we'll have to see whether this sustains or not till the end of this trading session as well. But let's move on. India is going to be the consumption story for the world this decade, says HUL's MD Sanjeev Mehta in his interaction. This is, of course, the ex-MD that we are talking about with my colleague Shilpa Ranipeta from the sidelines of CNBC-TV18's Global Leadership Summit. Here is an excerpt.
I'm a big believer in the India story. I don't think we should get unduly worried with a short-term blip. There is nothing in the world which moves in a linear fashion. There is more stacked up in favor of India than ever before. And I can express at length why I believe India is going to be the consumption story of the world this decade and beyond, in a manner very similar to what China was in the previous 2 decades. What Viksit Bharat does, the biggest thing, is change the mindset of the people. It's brought in the belief that we can become a developed nation.
Okay, let's move on. The Central Board of Direct Tax Chairman Ravi Agarwal is confident that the tax collections will keep rising as the Indian economy grows. CNBC-TV18's Timsi Jaipuria began by asking him about the present trends in the budget collections. Listen in.
So we are very, very positive about the present trends in the budget collection, and as reflected from the present trends, I am very hopeful and I am in fact very sure that we would not only achieve the budget targets, but we would take all steps to exceed it.
So when we talk about the collections, STT is the outlier. Every time we are seeing STT collections rising to almost double. Do you think that is a silver lining for the tax department to actually see how the recent changes that were made in securities tax collections, in the capital gains tax collections, is that something that is helping the department to come up with some new strategies, or is hopeful that these current rates will continue on these two planks?
You see, these are reflective. STT higher, it's about 89% now increase. But this is reflective of the overall economic scenario in the country. So this is a reflection of that. And of course, tax is the component. It's basically a derivative, I would say. Once the economic activity goes up, that is reflected in the, earnings, corporate earnings, and then also the share market also reflects that. So it's all a reflective of the economic trends and the economic progress in the country. So naturally, if that's an offshoot, and if the economic progress is more, then corresponding taxes would also increase across the board, be it STT or corporate tax or a non-corporate tax also.
So when we talk of the upcoming budget, one announcement that everyone is looking forward to is the changes that the government is planning to simplify the Income Tax Act 1961. After 2 failed attempts that we have seen in the recent past, first the Arvind Modi committee, then Akhilesh Ranjan committee, they even submitted the report. How different it will be from these 2 attempts, and how hopeful are you that yes, this time finally this process will actually sail through and come in the budget?
You see, I would not say that these were, I think it will be too strong to say that these are failed attempts. It's basically an ongoing process, which is a consultative process, and the recommendations there in those were duly incorporated subsequently in the Tax Act also. So it's basically when the right time comes, then the changes are done, and I think I'm sure that this time the right time is there, and we should be able to come up with a simplified version. We are working for it. We are working on it, and we are working very hard on this. We are hopeful and that we would be able to come up to the expectations of the government and to the taxpayers. And that's why we have actually invited suggestions from the taxpayers. This is all an inclusive approach. And we got good suggestions. We would be definitely taking care of those suggestions and duly incorporating it in appropriately in the statute.
Will this also give an opportunity for the department to bring in rate changes, or it will only focus on the simplification of the law, the language, reducing the burden of litigation? Is that the agenda, or there could be some rate changes too as part of this simplification exercise?
So I think I would just say that we are focusing on the simplification of the tax and making compliance easier for the taxpayers. So we are identifying those areas and we are trying to make it simple. So simple language, simple processes, that is what we are looking at.
Rates are not part of this agenda?
That is well, you will see it when the appropriate time comes.
Okay, with that, we'll slip into a short break. When we come back, we'll get you more on the markets and talk about some stocks. Stay tuned.
आप स्टबल बर्निंग का फार्म फायर का डेटा देखने जाइए तो ये दिखता है कि चाहे राजस्थान हो वहाँ पे स्टबल बर्निंग हो रही है, चाहे हरियाणा हो, चाहे उत्तर प्रदेश हो, चाहे मध्य प्रदेश हो। और केंद्र सरकार क्या कर रही है? अगर इस पूरे देश में एक राज्य है जिसने स्टबल बर्निंग की, पराली जलाने की घटनाओं को कम किया है, वो पंजाब है। एक एक राज्य में पंजाब, हरियाणा, मध्य प्रदेश, उत्तर प्रदेश, राजस्थान, आज हर जगह पराली जलाई जा रही है और केंद्र सरकार हाथ पे हाथ धरे बैठी हुई है। आज पूरे नॉर्थ इंडिया को एक मेडिकल इमरजेंसी में धकेल दिया गया है। चाहे दिल्ली हो, चाहे चंडीगढ़ हो, चाहे राजस्थान में जयपुर हो, बीकानेर हो, भोपाल हो, पटना हो, लखनऊ हो, आज देश भर में AQI वेरी पुअर, सिवियर प्लस, रोज सेंट्रल पोल्यूशन कंट्रोल बोर्ड रोज एक डेटा निकालता है कि किस शहर का कितना पोल्यूशन का लेवल है। आप कल शाम 4 बजे तक इस डेटा को देखिए तो देश भर में, पूरे नॉर्थ इंडिया में सारे शहरों का डेटा वेरी पुअर, सिवियर प्लस।
I want to talk about the big transformative idea that's quite literally shaking up the world. Donald Trump and the impact and implications according to you.
I think pretty transformative, Donald Trump, and has changed the perspective of how we're going to run the world as we go forward, or how he is going to run the world as we go forward. And as was mentioned, 66% of global market cap is US. We just got to make sure that America does not make the rest of the world irrelevant. And that's one of the challenges we must all live up to. So for however small our market share, we need to grow it much faster than what we have in the past. And Shireen, as you think about transformation, I think if you look at America's power, it is essentially 3 things. One is military, second is finance, and third is creativity. And if you look at these 3 important things, which gives the Trump power to the United States, let's ask ourselves each a question about how India has got to transform for the future. So I'm literally taking on from where you have said. So let's look at military power.
Okay.
It's the most powerful defense power in the world, which is United States. And if you look at India on a relative basis, if India has to transform, our percentage of spending on defense as a percentage of our GDP is not growing.
The second thing is what I learned from Mahatma Gandhi, that is leadership by example. If you want austerity in your company, You, the leader, show austerity. If you want punctuality in your company by every employee, you come to the office first. Then you don't have to give big speeches. So I think I can go on and on the issue of leadership, by example, but I think we in the corporate world must embrace leadership by example. The third thing that I would talk is
Welcome back to Trading Hour on CNBC TV18. Let's shift focus and talk about NTPC Green's 10,000 crore rupees IPO that is open for subscription today and closes on 22nd of November. Vamakshi is joining in with us with more details on that. Vamakshi?
Well, Vinny, NTPC Green Energy is a wholly owned subsidiary of NTPC. It is the largest renewable energy public sector enterprise in terms of operating capacity as well as in terms of power generation, and its portfolio includes both solar as well as wind power assets. Let's look at the kind of capacity that the company has. They've installed nearly 3.3 gigawatts, 5.9 gigawatts is under construction, and they have 10.8 gigawatts in the pipeline. So overall, they currently have a portfolio of 20 gigawatts. Now in FY26, they are planning to add capacity of nearly 11 gigawatts. By FY27, they plan to commission nearly 20 gigawatts, and in FY32, they plan to commission nearly 40 gigawatts. So by 2032, largely they will have nearly 60 gigawatts of renewable capacity. In fact, in addition to that, in the next 6 to 9 years, 14 gigawatt of pumped hydro capacity will also be commissioned. Now, let me quickly take you through all of the IPO details. The IPO opens today, that is November 19th. It will close on November 22nd. The price range is between 102 to 108 rupees per share, with the total issue size of 10,000 crores, which is entirely a fresh issue. In addition to that, they've also raised 3,900, out of the 10,000 crores, they've managed to raise 3,960 crores from anchor investors, and this includes notable foreign institutions like GIC, Abu Dhabi Investment Authority, among several others. It also includes some domestic institution names as well, which includes LIC, among several other mutual fund houses. Largely, nearly 7,500 crores from this fresh issue will be used to pay the debt of NTPC Renewable Energy. And lastly, let me leave you with the valuations. At the upper band, the post-issue market cap would stand at 91,000 crores, and analysts estimate that at this market cap, the company is valued at nearly 16 times FY27 and 13 times FY28 EV to EBITDA.
Okay, thanks for that, Vamakshi. But let's listen into what the management of the company had to tell us earlier on in terms of the targets and the plans that they have for the use of the IPO proceeds.
We have already chalked out programs to go up to 60 gigawatt by 2032, and this is what we had declared almost about 2.5 years back. Today, when the storage prices are coming down, we believe that we will be able to achieve that before 2032 rather than waiting up to 2032.
The proceeds of this 10,000 would be essentially for filling our capital expenditure. It's almost 19 gigawatt in the next 3.5 years. But however, intermittently we may use the proceeds also to, retire some of the costly loans temporarily. But broadly speaking, it is meant for a capital expenditure. The present debt equity is 1.91. But however, we will be implementing all this with a debt equity ratio of 80-20.
To meet the peak requirement and to have the grid stability during the day when there is excess solar. So it's both, there is a combination of that. So there will be huge capex requirement for the storage solutions. We are working on that also. And going forward, there will be another important segment, which is the fourth segment, which is called the green molecule. Going forward, there will be storage solution as well as the green molecule solution, which will be FY27, we will be having 19 gigawatt commission, but that does not mean only 19 gigawatt. There is a work which is going on continuously. And what we intend is that what we had said about the 60 gigawatt by 2032, we should be in a position to commission that before that.
Okay, and with that, it's a wrap on this edition of Trading Hour, leaving the Nifty at the day's highest point with two stocks in the Nifty, HDFC Life and SBI Life, a bit under pressure, but surely mid-cap, Nifty, all trading near the day's highest point. With that, it's a wrap, and a goodbye from myself as well as the team who put this show together. Don't go anywhere. Halftime report up next.
this is something that not just the corporate leaders, but leaders in every area in India, in corporate world, in politics, in NGOs, in bureaucracy, everywhere. And that is putting the interest of the community ahead of my personal interest. If I did that, my personal interest will be much larger in the years to come. That's exactly what we at Infosys followed. In the beginning, none of us had any cars. We all traveled by economy until we were $1 billion in revenue, and that was the time that I was there, and we were $288 million of after tax. Until such time, we all traveled economy, even on international flights. So the point I'm saying is, let everybody lead by example. Prime Minister Modi, who has done a brilliant job so far in terms of accelerating our economy, all of that, may want to look at whether we need more of managers in the government rather than administrators. And to do that, they perhaps may want to look at, rather than the current method of having some, whatever it is, some 3-4 subjects, examination, etc. for the IAS, he may want to look at selecting people from the various management institutes, bringing them into the government. I hope the opposition won't have much objection, like they have already raised. Bring them into the government. First, get them trained at Mussoorie on decision-making under uncertainty, on facing the competition, on creating competitive advantages, on being open-minded to learn from people who have performed better than us, on strategic thinking, on simulation, on workflow management, on project management, and other management techniques. The second thing that we may want to do, because we have, I often used to tell at Infosys, the reward for winning the semi-final is to get to play a tougher game, which is the final. Therefore, the fact that India has tasted success, the fact that India under Prime Minister Modi has done a good job so far, what that really means is this: we, the Indian citizens, must be in a position to play an even tougher game, a more difficult game, a game that will gladden the heart of every Indian. And to do that, one of the things that we may want to look at is, instead of becoming general administrators, we may want these management trainees that are trained at Mussoorie to be allotted to specific functions.
Stocks are a wide swathe of green, with advances far outnumbering declines. Realty and auto are the big gainers, even as financials, FMCG, healthcare lag. The mid-caps outperformed by a wide margin.
Sources tell CNBC-TV18 that the government is leaning towards scrapping the windfall gains tax, as it hasn't yielded much revenue, made industry unhappy, and has been hindering output expansion.
NTPC's Green Energy IPO, 10,000 crore rupees IPO issue opens for subscription today, following a near 4,000 crore mop-up from prominent anchor investors. The renewables major has an implied market cap of about 90,000 crores at the offer price.
Finance Minister Nirmala Sitharaman brushes aside concerns on growth slowing but calls for more affordable interest rates. She adds that the government is committed to taking steps to keep the economy on the growth path.
The government has cut dividend payout to 4% from 5% of net worth of public sector companies, while also tightening criteria for buybacks, issue of bonus shares and stock splits.
Good afternoon, you're watching Halftime Report here on CNBC-TV18. I'm Hormas Patakia, Mangalam Malu is with me, and finally we see some green on the screen and a very dark shade of green as well. Some relief coming in for the bulls. 23,750 is where the Nifty is, near the highest point of the day. The metals continuing, well, the metals are continuing to be in the green, but leading the gains today are the auto stocks, the IT names. The broader markets are doing well for themselves, and the Nifty Bank too, trading with gains of over 500 points. So good going for the markets, and it's been a while since we said that the mid-cap index is up 1,000 points after saying for days that the mid-cap index is down 1,000 points. So good going for the broader markets as well.
Extremely good going for the markets, especially given the sort of decline that we've seen for the last 8 trading sessions. Everyone on the street was hoping for some sort of recovery coming by, and that recovery has definitely come by. From oversold levels, we've seen a near 300-point recovery from yesterday's close for the Nifty. It's conquered the 200-day moving average. It's extending its gains 1,000 points in the mid-cap index. It's important the Sensex gone up by 1,000 points as well. And the Nifty Bank is up around 1%. What's interesting, however, is that overnight we did see the Nasdaq cut its 4-day losing streak and end about 0.6% higher. And the Nifty IT is actually reflecting that happiness as well, returning that favor. Because yesterday, the Nifty IT index was the top drag on the index, and right now it's the top contributor. So up around 2.5% for that index, even as the Nifty Bank is up around 1% as well. Remember, yesterday the Nifty Bank did bat for the bulls, and now we have IT for the support. And alongside that, we have a lot of these beaten down names which are doing extremely well. So, the nature of the stocks which are moving higher tells you the mood of the market right now, because when there was a decline, we saw all the PSUs, we saw all the defense infra names, all of them take a leg down, and right now it is a bunch of these small cap names, PSU stocks, all of them doing extremely well. In fact, even the financials, if you look at it, we have a bunch of those names doing extremely well, not to mention that Reliance as well from lows has seen some recovery. But it's all about hospitality. At 12:30 we will have Puneet Chatwal speak about the outlook for the next few years for Indian hotels. But before that, let's talk about Lemon Tree Hotels, the first guest on our show today. The second quarter results, they were good. Why were they good? Because there was increased utilization of the Mumbai Aurika. The EBITDA margin also was good, limited by the 8 crore rupee renovation expense. So had it been for the underlying business, the company, it's done extremely well in what is a seasonally weak quarter for the hospitality sector. And more importantly, we enter into a seasonally strong H2 for the hotel industry as well. Patanjali G. Keswani, the Chairman and Managing Director of Lemon Tree Hotels, joins in to discuss these numbers and more. Mr. Keswani, thank you so much for joining in. And we've understood for the last couple of quarters, the expansion in utilization of Mumbai Aurika and the renovation that you are doing for a lot of your rooms has actually impacted the performance. But despite that, the underlying trend remains strong. So to that extent, I would like to ask you, the second half of this year, how does that look, especially when it comes to finishing the renovation and increased utilization of the Aurika?
So I think second half will be much, much better than the first half, both from the occupancy perspective and from the average room rate perspective. Aurika will do much better in Q3 and Q4 than it did in Q1 and Q2, because we were still in the midst of churning our segments, our customer segments in that hotel. As far as renovation goes, we were renovating about 25% of our inventory. And most of those rooms have come back except the Keys portfolio, where we will continue to renovate it for the next 18 odd months till we complete the entire portfolio of Keys, which is about 1,000 rooms. So we've tried to keep the rooms open and the cities where there is maximum demand and highest pricing power. And those will obviously now reflect in our P&L and revenue for H2.
Mr. Keswani, good afternoon. Thank you so much for joining in. If you could share the occupancy levels as well for Orica, how were they in the second quarter and what are the trends that you have seen in the first month and a half for this current quarter as well? And if you could share a number for what you expect to end the year with.
See, in H1, we did about 60%, which is about 340 rooms in Orica, Bombay. And in H2, we will be north of 60%, which is basically north of 400 rooms. Now, exactly what that number will be, I cannot comment on, but it will be, as I said, much higher occupancy than in H1 and also a higher room rate.
Right. So, you said that H2 overall will be much, much better than H1. Would you hazard a guess as to what that much, much better would look like when it comes to the numbers itself?
See, normally, depending on the hotels that one has in the portfolio, seasonality can be as much, can have an impact of as much as 60-40 winter-summer. But because we have many hotels in business destinations and so on, where the seasonality is a little less, we have more, typically we have 55% in winter and 45% in summer of our revenue. Okay, which means 1.2. But I reckon this year it will be closer to 1.3, which means whatever we do in summer, we should do about I shouldn't say 1.3, I'd say 1.25 to 1.3 times that revenue in H2.
Right. So first half you've done about 550. I just multiply that by 1.25 or 1.3. You end up with anywhere between 1,200 to 1,500 crores on the top line. With improved margins as well. Yes, go ahead.
That's a very wide range. So I would not be, I would say we would do about 700 crores in winter, plus minus. So, which means 1,250 odd crores, maybe even 1,275.
And what about the operational performance? Because now the renovation expense is mostly done. You have increased occupancy. So I believe the delta there would be probably more than this 1.2, 1.3 that you're talking about.
Yes, operating leverage is obviously such that your costs are fixed in winter and summer. In fact, some of your costs come down in winter because your power and fuel expenses are not quite so much because it's not so hot. So most of the incremental revenue will flow into your EBITDA.
If you could share levels as well for margins, Mr. Keswani, you ended the first half at around 44.5. Would you expect to remain at those levels by the end of the year, or do you see an uptick? Maybe north of 50.
Yeah, in winter.
Interesting. And I wanted to also ask you about your management fees. For the second quarter as well, your management fees went up by around 32%. What do you expect? Do you expect that to trend northwards as well in the second half? Is there a targeted number that you have for the full year?
See, it's like this. I expect management fees, excluding our Fleur hotels, that is third-party hotels, to be between 65 to 70 crores this year. But because we have signed a whole lot of new hotels, without getting into a quarter by quarter or half year by half year growth, my broad expectation is that in the next 2 to 3 years, we will be 2.5 to 3 times this number, which means we'll be between 150 to 200 crores of management fee income from third-party hotels, excluding the Fleur portfolio, which we also manage, where we are the largest shareholders.
And Fleur would be how much? Because this quarter as well, Fleur did about 13.5 crores in terms of fees. So now that we have 150 to 200 crore coming in from your own third-party hotels, Fleur, how much could that be?
No, we have third-party hotels are not owned by us. So what I said is in the next 2.5 years, the hotels not owned by us will give us fees of 150 to 200 crores. And by then I expect Fleur would be also in that zone, 150 to 250 crores.
So roughly
basically the two put together would be 350 to 400 crores of fees.
Got that. Thank you so much for joining in, Mr. Keswani. We'd have loved to have a longer conversation with you, but we'll leave that for some time in the middle of the quarter, where you'll have more details on how the third quarter has been panning out as well, just before we move into the holiday winter season as well. For now, we'll be happy with 1250 crores on the top line, 50% plus in terms of margins, and expected nearly 350 to 400 crores coming in from management fees, including Flirt, over the next couple of years. The stock holding up well in the green. With that, we take a short break, come back. On the other side, we'll get you an exclusive conversation we had with Peter Elbers, the CEO of Indigo Airlines, on the sidelines of the CNBC-TV18 Global Leadership Summit.
Governance system, agriculture, defense and manufacturing, infrastructure, whatever it is. And then they have to spend the required number of years, 20 years, 30 years, 40 years, etc., like it happens in some of the developed nations, so that they do become subject matter experts and they can find solutions to us.
Mr. Jindal, over the next 5 years, by 2030, you talked about how very few players are actually investing. There's a private capex challenge. How much is JSW across the group going to be investing in India? How much will you invest outside of India?
In terms of numbers?
Yes.
So, it's not very easy, but
given the demand visibility.
Yeah, so we have made a very ballpark number that between now and 2030-31, fiscal 30-31, we would be investing close to $70 billion in India and maybe $2 billion outside India. Are not yet the factory of the world. Let us first become the factory of the world, and then we should open up our doors for competition. Let there be no tariffs, nothing. I mean, United States, even after, let's say, 100 years or 150 years of developed nation status, even today they have tariffs. Europe is putting tariffs, right? And we are saying that we should open up. Then we will kill our manufacturing here. We are not a great manufacturing country in any case. Today, our manufacturing GDP is only 17% of our GDP, right? And we must get to 25-30%, what China is. But if you open up and we become liberal, then we will kill our industry.
So you talked about tariffs. Donald Trump says tariffs is the favorite word that he has in the dictionary, and he has promised that he is going to go full throttle as far as tariffs are concerned. What is that going to mean? We don't know the quantum, we don't know what finally will happen, but given the threat and what he's done in his previous term, what will it mean?
No, what Donald Trump is, in my opinion, he's very clear. He is a very clear-headed guy, whether right or wrong, but he has a clarity of thought. And he says that for me, America is first. I want to build America. I don't care about the world. For me, America is the world. And therefore, I want my industry to grow. I want America to grow, American industry to produce goods. It's not that Chinese should supply to me and then I will consume. I don't want to become only a consuming country. I want to produce and consume. So therefore, I want to put tariffs. Yes, tariffs do make you let's say lethargic. You become more uncompetitive to an extent. So therefore, you have to gradually bring down the tariffs to become competitive. But you have to allow the kid to grow up before you start running the race. So
let me throw that argument back to you. You said you have to allow the kid to grow up. So where are we, sir? Haven't we adulted yet as far as Indian manufacturing is concerned?
Not at all. Not at all. That's what
Teenager or preteen?
Preteen.
Preteen?
Yeah, we are just kind of 4-5-year-old.
Welcome back. Now on the sidelines of CNBC-TV18's Global Leadership Summit 2024, Indigo CEO Peter Elbers told CNBC-TV18 that they are confronting enormous pressure on supply chain but have managed to turn the corner now. Our colleague Madiha caught up with him and spoke to him on the loss that it reported in the second quarter, the supply chain issues and the grounding of the aircrafts and the current situation that is prevalent. Listen.
There's a couple of factors. First, we came out of COVID, and indeed, Indigo rushed out of COVID. And, you know, I joined in the summer of 22, right after COVID, and we've been able to expand and build on that. And that led to 7 quarters of very solid profits, helping us to deal with the losses of COVID. I think a few things came together in the second quarter, additionally a weaker quarter. The weakest quarter of the year is that Q2. Secondly, for us, we have been confronted with the enormous pressures on the global supply chain, and that has led to a significant number of planes on the ground for Indigo. We've taken a lot of mitigating measures to deal with that. We had extended leases, we took a few leases, we took a few older planes back. That has enabled us to keep our growth, to keep serving our customers. But of course, there's a price tag to it. So that all sort of accumulated in that second quarter. What we have seen now is we've turned the corner. The number of planes on the ground gradually will start to come down. The season, of course, with Diwali, Q3 is always a different thing. So actually, for us, it was also a moment where we turned the corner in terms of number of planes on the ground.
Yeah. You mentioned AOGs. So how many aircraft currently are on ground and how many are operational?
You know, the worst today, Indigo has a little over 400 planes. I mean, back to one of your earlier questions, 400 planes is a lot. But looking to the large airlines of the world, we still have a way to go. And again, if we are 27, India is going to be the 3rd largest economy in the world. That requires planes. So that is sort of justification for our fleet order. So today we have a little over 400 aircraft. In the worst point in time in Q2, we had in the mid-70s in terms of number of groundings. That's an enormous number. I think a lot of airlines in the world would have been really into a bad shape because of that. I think at Indigo we have managed actually quite well at the price, but we've managed quite well. That number has gone down. Today we're sub 70, so we're somewhere in the 60s, and we expect that number to go down gradually, and by the end of the year it should be really below 50.
All right, interesting conversation there with Peter Elbers. What we'll do is take a short break, come back, get your trading ideas on the other side. A lot would want to know whether this dip is worth buying into or this recovery is worth buying into or selling into. We have Sachidanand Utekar of Trade Bulls joining in after this short break.
Absolutely, in manufacturing.
Yeah.
Because we, you see, China, if you open up the records and see, China in 1990, what kind of protectionist China were? In 2000, what was their protection levels? And what they are today? Today they are opened up because they become the factory of the world. I wanted to export steel in 98, 99 to China. I was not permitted to do that because China had tariffs. They removed the tariffs, but now today we have 0 tariffs on steel. Chinese steel, which is surplus, they are nearly 60% of their capacity is surplus capacity. So it comes via Japan, Korea, Vietnam, Malaysia to India at 0% duty.
Let me ask you for your comments, wearing your former Cisco hat, on what we're likely to see happen on the infrastructure side, on the chip side, with the wars that are currently underway in the industry. How much are we likely to head into a phase of significant consolidation? Is that something that you believe is just a question of timing? It's not if, it's when.
Well, it depends on the 3 categories that you covered. Let's start with semiconductors. I happen to be very close to everyone from NVIDIA to AMD to Broadcom to others in terms of the industry overall. All of those are very active in terms of consolidation, movement into AI growth, and candidly, all of them are very active in terms of investing in the India and U.S. corridor. I don't think you'll necessarily see a consolidation there. I think you will see challenges to NVIDIA evolve because clearly, if you want to know how the AI is going, it's much like Cisco when Cisco was the leader in networking. If you want to know how the internet was going, just watch Cisco's growth to 60 or 70 or 80% per year. NVIDIA is the bellwether in terms of the industry, but others are going to focus on it. To your question about cybersecurity, you're right. It is set up for consolidation. I was just with a customer advisory board yesterday, interestingly enough, with Pindrop, talking about the deep fakes, and the 20 customers there said, John, we have an average of 50 cybersecurity companies in our environment. They don't talk together. That one's probably set up in terms of more of a consolidation. I hope to play a role there in terms of my startups. For people in the room, if you want to have a safe future, become an expert in AI and cybersecurity. The two of them will come together in terms of resolution. In terms of your big question, Shireen, I think this might be the first time ever when you go from mainframes to mini computers to PC, client servers, to the internet, to the cloud, and now to AI, where the prior generation might actually produce half the leaders in the new technology. That's not occurred before, but I think with the hundreds of billions of dollars that Microsoft and Google and Amazon and Apple and Meta are putting in, they will be a force here, and then I think you will see some of the players in the room, hopefully some of mine as well, also become a force. So for the first time, the large traditional players, maybe 2 or 3 of them will really make this transition and be in leadership roles. And again, I think it's the startups that are going to light it up. For those of you in the room, regardless of your industry, manufacturing, government, healthcare, you've got to have a AI strategy and foundation. And as investors for FDI others, they're going to say, where are you on your AI implementation? Where are you in terms of driving your productivity at 7?
Doing extremely well for the markets. 305 points for the Nifty, 1,000 points for the mid-cap index, 1,050 for the Sensex, and Bank Nifty up around 529 points as well. So if you just take a look at the way the markets have moved and talk about the way the F&O system is positioned right now. Strong recovery from yesterday's lows. The Nifty is done well. Nifty Bank, you have to have the Nifty IT index come up as well out there. That's the key driver for the markets in today's trading session, and broader markets have done a lot better. So even as the Nifty is up around 1.3%, look at the mid-cap index is up 1.8%, and small-cap index a step higher by about 2% as well. And that's reflected in the way the market breadth has moved through the course of the day as well. 2,100 stocks advancing for about 300 stocks which are declining, which tells you that through the course of the day, the red and green lines have been far apart and only widened as the day progressed. So let's see where that ends as well. All of this gives confidence to the bulls. What also gives confidence to the bulls is that the Nifty has surpassed the 200-day moving average and is now comfortably above it. And the Nifty IT index, which was under pressure yesterday, has surpassed the 50-day moving average as well. Along with that, a lot of short positions in the system calls for further up move in the markets because of short covering. And that's what we've seen if you look at the futures plate of both the Nifty as well as the Nifty Bank. This is the November futures that I'm talking about. That comes up for you on the screen. You see the Nifty futures on November has seen an open interest decline of almost 80,000 contracts. Nifty Bank November futures comes up for you. That too has seen a decline of almost 80,000 contracts, telling you there is short covering in both Nifty as well as the Nifty Bank futures. And add to that, the India VIX is lower. So you have short covering taking place in index futures, lower India VIX telling you that there is more put writing and unwinding of calls. That's exactly what's playing out. 23,500 call writers were very active yesterday. Now they're covering their positions. 23,600 call writers who were extremely active yesterday, again covering their positions, causing further up move for the markets. And on the other side, we have 23,600 and 23,700 put writers equally active, taking the support higher back to that 200-day moving average of the Nifty at around 23,550 itself. On the way up, however, for the market to sustain its up move and see further short covering, we have to cross past that 24,000 mark. Why do I say that? Because the call writers at 23,900 are still active, and that's something we'll keep an eye out on. And tomorrow we have the binary event of the Maharashtra elections as well, so we'll keep an eye out on all those things. Fin Nifty will be the index to watch out for. It's the last weekly options expiry today. It is at 23,430. Where are the options placed? 23,450 and 23,400. So after this 175-point move that we've seen, maybe the Nifty Financial Services will not move beyond this range of 23,450 to 23,400 itself. One stock I'm watching out for was the stock of yesterday, will perhaps be the stock of today as well, with a down take of almost 1%, is IGL, may enter F&O ban, so keep an eye out on that one.
Well, call it holiday cheer, call it short covering, to each their own, isn't it, Mangalam? Thanks a lot for that. Let's pose that question to Sachitanand, the taker of Trade Bulls as well. Sachitanand, good afternoon. Thank you for joining in. Would you read this as the start of a sustained recovery on this index, or would you use this bounce to reduce your positions?
Good afternoon, almost. Good afternoon, Mangalam. I think clearly there has been a change in sentiment. If you look at last couple of trading sessions, the Nifty was challenging that support at 200-day exponential moving average, which is placed at 23,500. Now, this particular support is significant because it is also the moving average support plus the declining channel that we have been observing on the daily scale. The pattern support is also placed there. So we were chasing this particular fall, and I think this is the last leg of within this particular channel pattern, which was showing some signs of exhaustion. There was a positive RSI divergence, which is also a good sign that market was losing its momentum on the downside. So I think this particular move, which has been primarily led by short covering, may extend, and the level to watch out on the higher side is placed somewhere close to around 24,080 on the higher side. The floor is very well set at 23,600 now. So until unless we don't see the Nifty trending below that 23,600 mark, the trajectory or the bullish momentum may just continue and push the Nifty higher towards 24,080. When it comes to Nifty Bank, the challenge is at 51,300. Before that, we don't see any major hurdles. But the support at 50,500 is still not that very confident. So I think Nifty Bank may remain range bound, but the move in Nifty could extend towards 24,080.
All right, Sachit Anand, thank you so much for joining in, sharing with us your views on the index. But if you could quickly put in your specific stocks as well, due to paucity of time, very quickly.
Two calls, both on the long side. Coforge, it has been one of the strongest stocks within the IT pack. It is still showing a continuation pattern. There's a bullish flag formation which has broken out. The pattern is indicating a target of 8460. From a trading perspective, we may see an immediate swing towards 8330, and that's why we are recommending building long positions with a stop loss at 8140. The other stock is HDFC Bank, clearly one of the strongest leaders within the Nifty pack. Even here, if you look at the way it has responded to that 1700 support, it looks like a higher bottom in place, and that's why we believe that keeping a stop loss at 1708, one can still chase momentum. The immediate trend target is placed at around 1840, but from a momentum perspective, we may see this move quickly, scaling towards 1780.
All right, Sachi, thank you so much for that. We take a short break, come back on the other side. We discuss pharmaceutical space. Amit Shalke of JM Financial joins in from the sidelines of the JM conference to talk about the Indian healthcare sector. Stay with us.
Here, which I think you can with AI. 2025, some predictions. I think you'll see 2025 be the year where AI crosses the chasm. Everybody talks about it today, but if you talk to the average person in India or the average person in America, it is not affecting their day-to-day activity, either at work or otherwise. By the end of 2025, I think we will see it in a broad level at all of our, both of our countries and in all of our business and personal lives. It's going to move with tremendous speed and excitement. Disrupt, or you're going to be disrupted.
What do you think is the state of the theatrical business right now, Karan, and where do you think it's going to go? I mean, we do talk a lot about phases within this business, and you have your ups and your downs. We're probably in a cycle right now, which we've never really been in before, where the bigger films are doing bigger business than they've ever done before, and films that might not have done this business before COVID are going through the roof. And then there are some films that come and go, even with very big stars. So it's clear that the audience seems to be becoming very discerning about that trip to the theaters. What do you think we need to do as a content industry to be able to?
I believe we have to read the room. We've got to read the room as filmmakers. You have to know that today there's a lot of content available at, on streaming services, but there is still a huge desire for a community watch, to go to the cinema. So you have to understand, please let's make the high concept films, the films that draw you to cinema halls immediately, not the films that you have access to, on a daily basis on a streamer. So besides the tentpole films, it's the high concept films or the films made sensibly, because the star cast really today is not just the only driving force, it's the trailer. It's the very first impression. So we have to, I always tell filmmakers, this may sound like a sales pitch, but plan your trailer. If a film is giving you a great theatrical trailer, it's going to give you a great theatrical opening. Anything generic is going to slip through. Anything been there, done that is not going to work. So you have to plan your first unit. It has to be a unit that makes sure that an audience is going to say, I booked my ticket, I'm going to go see. And that is happening. As we speak, we've had a great 2 years. According to me, there have been some thunderous numbers as well, like you said. We've touched the 600 crores. We've never done that before. We've done that. And we also have touched 100 crores with a completely new cast. A creature film with a new actor called Abhay Verma has done 100 crores. That is the power of theatrical audiences. We just have to give them what they truly want. We have to read the room, which we have to start assessing within ourselves.
Are not yet the factory of the world. Let us first become the factory of the world, and then we should open up our doors for competition. Let there be no tariffs, nothing. I mean, United States, even after, let's say, 100 years or 150 years of developed nation status, even today they have tariffs. Europe is putting tariffs, right? And we are saying that we should open up. Then we will kill our manufacturing here. We are not a great manufacturing country in any case. Today our GDP, manufacturing GDP is only 17% of our GDP, right? And we must get to 25-30%, what China is. But if you open up and we become liberal, then we will kill our industry.
So you talked about tariffs. Donald Trump says tariffs is the favorite word that he has in the dictionary, and he.
Welcome back. Now shifting focus to the pharma sector, JM Financial in their recent note has preferred stocks like Dr. Reddy's, Aurobindo, Ipca Laboratories, JB Chemicals and Pharma as their top picks. To discuss more on these and the sector outlook, Amey Chalke, the pharma research analyst at JM Financial, is joining in from the sidelines of the JM Financial India conference. Amey, good afternoon. Thank you so much for joining in. How would you summarize the quarter gone by for these pharma companies, right? Because every company has a unique identity of their own. Everybody has issues of their own. How would you summarize the quarter gone by, and what's the road looking like for the second half of the year?
Yeah, hi. Thank you for giving me an opportunity. So, quarter has been fairly, all the companies have fairly done well, at least in the pharma sector. And most of the companies have reported beat on the street's numbers. So going ahead, we remain positive on the outlook of the pharma sector, led by the strong earning momentum these companies have, at least for next 2 to 3 years. However, at the same time, we believe that investors should remain cautious about the product concentration risks in most of the large cap companies particularly. And obviously we like Dr. Reddy, Aurobindo and Sun Pharma on account of one, obviously the product concentration risk is likely to be lower on beyond FY26, and the structural tailwinds which are there, which could keep on driving the earnings growth beyond FY26. And also the valuations on the core multiples are much more attractive compared to the other large caps.
All right, as we speak, as on cue, after some decline yesterday, some of the pharmaceutical stocks have been coming back. Among the top Nifty gainers is Dr. Reddy's with a gain of almost 3%, and it is among your top picks as well. Over the last couple of conversations that we've had with the pharmaceutical companies, two stood out. One was Glenmark, was among the big gainers in yesterday's session, and the other one is MedPlus. There were a bunch of large trades on that one. The management assures that for now the shareholding pattern is likely to stay stable, and they are fairly positive on the way they would go ahead and increase their share of revenue coming in from private labels. I wanted to know if you track either of these and you have a view on them.
Unfortunately, I won't be able to comment on both these names as we don't cover and we are not allowed to speak on those names.
All right, no problem. And otherwise, is there any stock that you like in particular more than the others that you've given in your top picks?
We favor Dr. Reddy's. It is benefiting from Revlimid opportunity, like everyone knows. Companies likely to generate more than 15,000 crore free cash flow led by this opportunity. And they are reinvesting this opportunity in adding EPS accretive businesses. And at the same time, there are several levers which are there, like the biosimilar launches, GLP-1 product opportunities. They are also developing their CDMO business. Consumer business is also getting enhanced going ahead. It is expected to become $1 billion in 2 to 3 years timeline. So there are several triggers going ahead. At the same time, the valuation on the core multiples is one of the cheapest among all 6 large caps. So that's why we like Dr. Reddy's, and we have around more than 8,000 target price on the name. Yeah.
What about IPCA, Amey? You have mentioned that it is one of your top recommendations as well, and there was a lot that was expected from it considering the acquisition that it did with Unichem, and you are also mentioning that the synergies are yet to fully materialize. By when do you expect that to fully happen? Because it's been a while, right, since the acquisition took place, and it's almost time now for the numbers to be delivered.
Yes. So if you have seen post-acquisitions, the gross margins have moved up. So they have partly realized the synergies. The gross margins have moved up almost 4% since the acquisitions. You have also seen how the profitability for Unichem has also improved post-acquisitions. However, there are several things which are yet to play out, like they are going to see a cross-pollination across geographies. They are also taking the benefit of US product portfolio, where IPCA would be launching a lot of products through Unichem's front end. So there are a lot of these synergies are expected to play out over the next 2 to 3 years, and that is not yet priced in my view, at least on Street's numbers. And that's why we remain bullish on IPCA, because of all these structural tailwinds which are likely to drive almost 25 to 30% earning growth over the next 3 years.
What about JV Chemical and Pharma? You know, I remember the management joining us multiple times here and saying that the opportunity for them lies more in expanding their branded portfolio and their India business itself. But the overhang out there is that of a possible deal. Would you weigh in on all these parameters and then give us your call on the stock?
So structurally, the business has changed since the new management has came in. It has started delivering really good growth on the India as well as ex-India business. So if you have seen before the new management came in, the growth used to be sub 10% across all geographies. But now, since the new management and the KKR has came in, they have delivered almost 18% growth over the last 4 years. And we believe even if anything changes on the promoter front, the management is likely to continue, and this the earning growth and the top line growth for the business is likely to continue for next 3 years as well. So the company is on the right path, and investors should benefit from that, in my view.
Do you have any estimation of the timeline of this? I mean, KKR holds stake. How long are they likely to hold it? Is there a fund life, etc. that is? And the probability of it being bought up by some strategic or maybe another financial institutional investor itself?
It's at present anybody's guess that what is going to happen with the KKR stake. It won't be right from my part to comment on the same. Yeah.
All right, Amey, thank you so much for sparing time and joining in. Wish you good luck for the conference going forward as well. That was Amey Chalke of GM Financial. Time for a short break. Up next, we get to an exclusive conversation with Amit Agarwal, the CFO of Raymond, on the sidelines of CNBC-TV18's Global Leadership Summit. Stay tuned.
Promise that he is going to go full throttle as far as tariffs are concerned. What is that going to mean? We don't know the quantum, we don't know what finally will happen, but given the threat and what he's done in his previous term, what will it mean?
No, what Donald Trump is, in my opinion, he's very clear. He is a very clear-headed guy, whether right or wrong, but he has a clarity of thought. And he says that for me, America is first. I want to build America. I don't care about the world. For me, America is the world. And therefore, I want my industry to grow. I want America to grow, American industry to produce goods. It's not that Chinese should supply to me and then I will consume. I don't want to become only a consuming country. I want to produce and consume. So therefore, I want to put tariffs. Yes, tariffs do make you, let's say, lethargic. You become more uncompetitive to an extent. So therefore, you have to gradually bring down the tariffs to become competitive. But you have to allow the kid to grow up before you start running the race.
So let me throw that argument back to you. You said you have to allow the kid to grow up. So where are we, sir? Haven't we adulted yet as far as Indian manufacturing is concerned?
Not at all. Not at all. That's what
Teenager or preteen?
Preteen.
Preteen?
Yeah, we are just kind of 4-5-year-old.
Really?
Yeah, absolutely. In manufacturing.
Yeah.
Because we, you see, China, if you open up the records and see, China in 1990, what kind of protectionist China were? In 2000, what was their protection levels and what they are today? Today they are opened up because they become the factory of the world. I wanted to export steel in 98, 99 to China. I was not permitted to do that because China had tariffs. They removed the tariffs, but now today we have 0 tariffs on steel. Chinese steel, which is surplus, they are nearly 60% of their capacity is surplus capacity. Yeah. So it comes via Japan, Korea, Vietnam, Malaysia to India at 0% duty.
Today, the automobile industry, and same for Wipro, the IT industry is going through a lot of disruptions. AI is the biggest disruption, and in EVs, the technology is a major issue. Nobody knows where we will finally go. You've often said that this is a moment of reckoning for the automobile industry. The battle is between the established mainstream auto players and how they embrace the new technology and the startups, or upstarts, as you call them. So who's winning and what's going to define who wins this battle? And who lasts for the next 75 years?
So there are 3 terminologies here. There is startup, then there is a word which I like to call most of them, which is upstart, and then us, the winners or the champions, right? So I must explain what is the difference in my mind between a startup and an upstart. In my mind, startups are those who have a build strategy. They build technology, they build brands, they build products, they build consumer experiences, they build employee satisfaction, they build a strong top line, but they also build a strong bottom line. Upstarts are those who don't have a build strategy. They have a burn strategy. They burn technology, i.e. their batteries. They burn brands by reducing price every month. They burn products in their factory, in the truck, at the dealership, on the road. They burn employee relationships with 50% attrition. They burn consumer relationship with poor service. This is burn strategy. So this is upstart versus startup. Now, as far as startups and champions are concerned, they are the same actually. The only difference between...
Welcome back. Now on the sidelines of CNBC-TV18's Global Leadership Summit, Amit Agarwal, the CFO at Raymond, said that all their businesses are growing very well and the company is seeing good traction since the beginning of the festive season. My colleague Shilpa Ranipeta spoke to him about the growth outlook, the festive season demand, and how is the wedding season shaping up.
I think we are all headed for the Viksit Bharat in 2047, which is our mission from the Prime Minister Modi ji. And we completely believe that in all our businesses which we have, be it the lifestyle, which has been the clothier for 100 years to the men, be it the real estate or the engineering business, which is the Make in India. I think all 3 businesses are firing very well, and we see a significant growth across our businesses as well as to contribute to the nation's journey.
Right. How do you view the current, economic consumer sentiment scenario, and a lot of talk about a slowdown in urban discretionary demand, urban demand in general, especially led by metros, right? So how are you viewing the current scenario? Are you also seeing that on the retail front for you?
See, if you would have asked me this question, let's say 45 days back, I would have echoed exactly the same sentiment.
Okay.
But I think since the beginning of October, what the Diwali, the Dussehra, and the ensuing wedding season, what we are seeing, I think the consumers are flocking to the stores. Everybody, there is a lot of jubilation that I want to buy, spend money. And we are seeing a good traction now, at least for the last 30-40 days.
Right.
And let's see that it continues.
And the wedding season, you hope that will be a bumper for you this time? What's the kind of growth that you're expecting from the wedding season?
So wedding season, what we cannot say right now, because it is just the people are starting to shop. You know, since yesterday the wedding day has started, auspicious day. But I believe that what we have seen, that the year on year at our distribution secondary level, at our TRS stores, there has been around 14-15% growth compared to last year.
Okay.
So that's something which is very heartening.
The management of Raymond there on the sidelines of the Global Leadership Summit. Time for a short break. On the other side, Manisha Gupta joins in with Sandeep Bajoria, the CEO of the Sunwin Group. Stay tuned, we'll be right back.
Wipro and Bajaj, or a so-called startup, is that we are startups with a story, because we've been around for long enough to have built a story. I just told you a little bit about my story. Rishad just told you a little bit about Wipro's story. So a legacy company, I mean, they try to imply that legacy means old, you know. And the point is...
Sounds very good, does it, Rishad?
No, but there are some startups which are also not born yesterday. They are 5, 10, 15, 20 years old themselves. तो ठीक है यार, हम लोग बुजुर्ग हो गए, लेकिन तुम्हारा बचपन कब तक चलेगा, you know? So you can't keep calling yourself a startup forever. So a legacy company is nothing but a startup with a story. And frankly, the best of both worlds happens when companies like ours dedicate 10 to 20% of their resources, in my opinion, to have a startup within itself. The Freedom CNG motorcycle, the Chetak electric scooter, the E-3-wheeler, electric 3-wheeler we are making, this is nothing but a startup within a legacy company, and this is how you carry your company from your present activities into the future. So that's my definition of upstart, startup and champions. But if you give me another 30 seconds, I want to share with you what Piyush Bhai once told me in this regard, because these startup wale are very kind of intimidating because they are from the IITs and the IIMs and all that. हम लोग तो ऐसे मतलब backyard में पड़े हुए लोग हैं.
And they say that they put ice cubes in their water to drink.
Yeah, like we have oats for breakfast, but that's a different story. But I will share with you a quote that Piyush Bhai told me in this regard, and this is what I would like to say to these upstarts. And the quote is like this: फर्क बहुत है आपके और हमारे तालीम में. फर्क बहुत है आपके और हमारे तालीम में. आपने उस्तादों से सीखा है, हमने हालातों से.
I want to understand from you, what is the aspiration now on the EV side? I mean, you've got this joint venture that you've inked with MG. Take me through what we should expect in the next 5 to 10 years as far as JSW's EV ambition is concerned.
So the idea is that to give the consumers a very good product, very good quality at affordable price in the EV spectrum. And I believe that JSW can do it extremely well.
Okay, so that's the proposition, but what does the roadmap look like? What are the numbers that you're targeting?
Numbers is in next 5 years, I would like to, idea is to produce 1 million cars.
And 1 million cars in the next 5 years?
Next 5 to 7 years, yeah. By 2030, let's say, 1 million cars should be on the road of JSW, whether it is MG or not MG, but under the JSW umbrella.
That is one of the aspects of Mr. Jindal. You know, it's almost a blow-hot, blow-cold relationship with China, isn't it? I mean, you just talked about all the reasons why we should not do business with China. And through the COVID period, you were very clear we shouldn't do any business with China. But now you're doing business with China. You've inked a joint venture for the electric mobility space with a Chinese company. So do you believe that there is a need to be pragmatic on how we engage with China?
No, absolutely. With any country. In fact, even Pakistan, for that matter, we should be pragmatic.
To deal with Pakistan?
We should be pragmatic.
Yeah.
We should not say that no, nothing doing. So when I said we should not.
Welcome back. Joining us on the show now is Sandeep Bajoria. He's CEO at Sunwin Group. Mr. Bajoria, thank you for joining us. And soybean continues to be quite in headlines because of various reasons. But I want to start with on what it is Maharashtra elections this week now, tomorrow rather, and farmers are going to be an important sector within this. With the way the prices have been and a high crop, not just in India, but globally as well. These statements coming around from BJP promising 6,000, Congress promising 7,000, while the MSP is at 4,892 or thereabouts, and the price is at 4,200. How are you looking at all of this maths?
Manisha, this is election time and rally time. So everybody's trying to be one up on each other. And as we saw, farmers' distress is there because of the soybean prices in Maharashtra. That MSP is 4,892 and they are not even getting MSP. Although government through its NAFED is trying very hard to procure seeds from farmers, but because of the higher moisture, it's becoming difficult for NAFED to procure because moisture content was 12, 14, 15. But now only 3 days back, government has relaxed the moisture content thing from 10 to 15. So that's going to help NAFED to procure now strongly. And that is at the support price, what is existing today, 4,894.
Sure.
What we saw was Congress party demanding 7,000 rupees for soybean, and Prime Minister in last week in the rally in Vidarbha said we will give 6,000 to soybean. So what Prime Minister says is more weight than anybody else. There's no question about it. But 6,000 when? This season or next season? That is not clear, number one. And number two, meanwhile, yesterday the statement came from Mr. Shivraj Singh Chauhan, our Minister for Agriculture, that they'll give a bonus of 5,000 rupees per hectare on soybean. So that amounts to something around 400 to 450 rupees per quintal on the seed. So that means if 4,892 is MSP and they give this kind of a bonus, then farmers should be able to get 5,392 or something. That should be the right way if NAFED start procuring properly, and if the Union Ministry of Agriculture giving this special bonus of 5,000 rupees per hectare, then ultimately farmer will get that. But it's a long way. We'll have to see in next few days how things go ahead. And there's a lot of confusion because of this. And meantime, there's one more demand which has been kept pending with the Union Minister, Shri Amit Shah, who is also Minister of Cooperation and who is the chairperson of the group of ministers, that oil meal export should be incentivized properly, and there should be at least a 10% incentive on oil meal export to take care so that depressed meal prices can be addressed. So I believe that also matter, the interministerial committee, that matter would be taken up this week, I believe. And let us hope some decision on that comes. Because see, what is happening is, ultimately, if you give MSP high price to farmers, good enough. But ultimately, you have to keep the economic wheel running.
I get your point, Mr. Bajoria, because you can't make a standalone policy. Your point is well taken that all policies need to be interconnected in some way, especially when it comes to that crop. I also want to get your sense on if all that is being promised is not given in this season, but the next season, how does that change the economics of farming in Maharashtra and India?
See, I believe farmer definitely is to some extent will remain disappointed if they are not able to get good price this season. And for next season also, if it's incentivized and they say, okay, then probably farmer, but seeing is believing. That's more important, I believe. The farmer will really see that this 6,000 rupees announcement, whatever notifications required are put into place. And I think the Kharif MSP for next year will be coming out by March or April. So they will see, and accordingly they will sow, and they will think how much sowing we should be doing.
So, Mr. Bajoria, the statement from PM, until there is no notification in that sense, you're saying it doesn't hold any validity on ground, right?
No, I mean, once PM says it has got all seriousness into it and the ministries are going to act on it, there's no question about it. But there is a slight confusion whether when PM has said whether it amounts to this season or next season. Okay. That is what it is. And however, I'm confident the government through NAFED is seriously going to do something for the farmers, and they will strongly procure at MSP. And 5,000 rupees per hectare bonus also will come, which Union Minister Agriculture has announced. I think this will help farmers, but ultimately you need to get this seed crushed and meal exported. So for that, export incentive to the meal is very, very important. I think that also should come this week. Then some kind of a movement in the cycle will be seen, or otherwise confusion confounded.
All right, Mr. Bajoria, thank you so much for sparing time and joining us this afternoon. Manisha, thanks a lot for joining in as well. With that, it's a wrap on this edition of Halftime Report. Business Lunch takes the action forward.
With China when Galwan happened, because I was very clear that we cannot deal with an enemy state. Pakistan, for that matter, is an enemy state.
Yeah.
But still, if we work properly, over with a control mechanism, we should open up and do business. Because
with Pakistan?
Even with Pakistan.
Okay.
Because a very poor neighbor will always hurt us. So therefore, we should think. We should have a long-term, but this is not a foreign policy discussion that we are having. But my point is that with China, we should, because China has already developed this technology on electric vehicles. Today, 60% of their new car sales are electric or new energy. India, we have 2%. And this is the way forward. We import all our fuel for the cars. All petroleum products are imported, 85–90% is imported. So it's in our interest that we transition ourselves to a technology which is domestic, which is local technology, local.
So bring the technology in from China, but manufacture in India.
Exactly, absolutely. Because technology exists in China, we must develop it over time in India, but we must bring the technology and develop the products in India.
That you believe, Mr. Murthy, that you would like Indian entrepreneurs, young entrepreneurs to focus on as we move forward?
Well, first of all, let me say that the entrepreneurs of today are so much smarter than I ever was. I mean, look, the gentleman, Harsha from Swiggy, he says he will deliver food in 10 minutes in this environment where I took 1 hour and 25 minutes to come from Santa Cruz West to this place. He is a magician. He is a magician. He is a remarkable guy. Therefore, we must all salute him. We must salute him not because he may be able to do or he may not be. That's not the issue. Even to have such an audacious vision, even to have such an audacious aspiration, target, that itself is fantastic.
But let's talk a little bit about the journey to the IPO and to listing day itself. The last few days looked quite difficult, didn't they?
Oh, Shireen, thank you for having me. Indeed, I think we're now taking all a sigh of relief that the stock is up, 10 to 12%. But it's not been easy. From the time we went on the road, Zomato, which is the closest comp, I think was down about 8 odd percent. The market was down 5.5%. There was the US election, there was China stimulus, so a lot outside our control. And I think what we did well was we priced it right, where we knew we had enough book, and we had a high quality book, a good balance between domestics and foreign, breadth and depth, and people who really understood the story and not who were looking to flip on day one, but also just to long-term holders. And I think the proof of the pudding came actually.
Stocks are a wide swathe of green, with advances far outnumbering the declines. Realty and auto are big gainers, even as financials, FMCG and healthcare lag. Mid-caps outperform. Sources tell CNBC-TV18 that the government is leaning towards scrapping the windfall gain tax, as it hasn't yielded much revenue and made the industry unhappy and has been hindering output expansion. NTPC Green's Energy's 10,000 crore rupees IPO opens for subscription following a near 4,000 crore rupee mop-up from the prominent anchor investors. The renewable major has an implied market cap of about 90,000 crore rupees at the offer price. Finance Minister Nirmala Sitharaman brushes aside concerns on growth slowing but calls for more affordable interest rates. She adds that the government is committed to taking steps to keep the economy on the growth path. The government has cut dividend payout to 4% from 5% of net worth for the public sector companies, while also tightening the criteria for buybacks, issue of bonus shares and stock splits. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala in the Mumbai News Studio. Look at the markets today, a pretty day coming in for the markets. We're seeing the green across screen. Whether you look at the Nifty, that's trading with good gains as of now as well. Almost near the day's highest point is what we're looking at the Nifty trading at, up 1.3% in trade. 23,750 levels is what the Nifty is holding on to. Sensex 2 holding on to gains of almost 1.3% in trade that we're watching out for. Other than that, let's look at what we're seeing in terms of the mid and small cap. The broader markets, that's where the outperformance is coming in from as well. Nifty mid cap holding on to gains of 1.8% and small cap holding on to gains of almost 2% in trade is what we're watching out for from the broader end of the market. All sectors trading in the green. We have Nifty IT, media and auto. These are the top sectoral gainers in trade today. Let's look at some of the gainers in terms of the Nifties that we're watching out for. What is pulling up the Nifty today? We have HDFC Bank that's performing well. We have Infosys, TCS, M&M, ITC and even Reliance, the heavyweight, is performing well. So surely all these performing well, supporting the markets in terms of the up move that we're seeing. One segment that we're seeing a bit of a pressure coming in is SBI Life, HDFC Life. So these life insurance seems like a bit of a pressure there. Other than that, we have SBI, Hindalco and ICICI Bank, which are trading a bit on the lower side and on the flip side and a bit in the red. But yes, that's how the market is looking like. Not a bad day coming in, a lot of gainers and a lot of green on the screen today. But today we'll start the Business Lunch show by focusing on the big news maker. The Finance Minister Nirmala Sitharaman, who played down concerns over a potential slowdown in the economic growth. Speaking at the annual SBI conclave in Mumbai, she said that there is no reason for undue concern and India remains in a strong position. She also believes that there needs to be more conversations to discuss the inflation and the interest rate dynamics. Listen in.
Let me assure you that the government is fully aware of the challenges posed by both domestic and global factors. There is no cause for undue concern. India's economy remains resilient, underpinned by strong macroeconomic fundamentals. FDI inflows have demonstrated healthy growth in FY25, reinforcing global confidence in India's economic potential. Our foreign exchange reserves comfortably cover 11.8 months of imports and exceed 100% of external debt, underlining the strong net buffer in the Indian economy. The government is closely monitoring an evolving situation. We remain committed to taking all necessary measures to ensure that India remains fully and firmly on course to become the third largest economy in the world.
How concerned are you about inflation and what is the view as far as interest rates are concerned? Do you expect a cut anytime soon or do you believe on account of where inflation is at this point in time, the cut perhaps is going to be further pushed out?
This is a question which I'm sure every journalist would love to ask. And Shireen leads the bandwagon. I respect her for asking me this question. I will certainly try to give an answer. Global markets don't go by your demand and supply ups and downs. They want a consistent flow of pulses to come into India. So complex issues, but very much affecting the common man. So inflation gets actually very, very volatile because of the supply-demand constraints. Equally, I think what is important is when you look at India's growth requirements, and you can have so many different voices coming out and saying the cost of borrowing is really very stressful. And at a time when we want industries to ramp up and move building capacities, bank interest rates will have to be far more affordable. So I'm putting as much what Shireen asked me as a reply back to you, saying these are our requirements if we have to make Viksit Bharat not just an aspiration but as a reality. So we need to have a lot more conversation on this, and I would stop at that.
Okay, and the finance minister also raised concerns about insurance mis-selling, emphasizing its contribution to higher borrowing costs for customers. She urged banks to focus on affordable lending rates and not the burden customers with needless insurance products. Listen in.
Trust should be built by the way you offer your portfolios, by the way you offer your service, and by the way you look at each customer's requirement without clubbing them into one class, particularly in the context where banks facilitate the distribution of insurance products. I wish to say this for due consideration of the bank's boards. While this model has significantly contributed to improving insurance penetration across the country, it has also raised concerns about instances of mis-selling, and I would say added or contributed in indirect ways of increased cost of borrowing for the customers. So banks will have to look at it with a lot more emphasis on their core banking activities and not burden customers with insurances which they don't require.
Okay, and because after this comment, we've seen SBI Life and HDFC Life today a bit under pressure. Seems like that's something that spooked the market, because for SBI Life, HDFC Life and these life insurance companies, bank assurance is something that is a major part of their sales that comes in from there. So yesterday, HDFC Life is down 3%. At the day's first point, similarly for SBI Life. But let's move on and shifting gears. The government is likely to discontinue windfall gain taxes, and sources have told CNBC-TV18 that the Prime Minister's office asked Petroleum and Revenue Department to finalize the contours of the issue, to issue the relevant notifications to discontinue the levy. Timsi Jaipurial joining with us with details on that front. Timsi.
Well, after almost over 2 years of existence, the windfall gains tax levy could soon come to an end. That's what sources are indicating to CNBC-TV18. What we are picking up is that the government at the top has decided to discontinue with this levy, and a decision, a formal decision, a formal notification for the discontinuation of windfall gains tax levy could come soon as by end of December or middle of December. Sources indicate that the Prime Minister's office has asked Petroleum Department and Revenue Department to finalize the contours to issue a relevant notification to discontinue this levy. Remember, this levy, that is the windfall gains tax, was levied from 1st of July 2022, and some of the reasons behind this discontinuation is that the average crude price was not yielding much taxes. The industry was unhappy with the levy, and the levy was having an impact on the production levels, and thus the country now wants to enhance its production levels of crude oil, because of which this discontinuation decision has been taken. Let's see how soon a formal notification is issued. Where are we actually in terms of the total collections? All of this are likely to coming in together with the announcement of discontinuation, which could be as soon as within December itself. Let's see. As and when it comes, we'll keep you updated. Back to you.
Thanks so much for that, Timsi. But on that note, we'll slip into a very short break. Don't go anywhere. More news and updates on the other side.
And once the anchor book got oversubscribed by high quality names, we knew we were prepared for a jittery market. I think, did I expect it to open positive? I think that's even better. But I think we had played it right to make sure that, we left enough money on the table.
That decision to leave enough money on the table, and I think this has been one of the big lessons as far as the recent IPOs are concerned, getting the price right. I mean, we've seen the debacle of something like Paytm, for instance, and, you were investors there as well. That decision to get the price right, to put enough on the table, how hard is that conversation with founders? How hard was that conversation with Harsha?
So I think, like you said, I think when you've seen stocks not do well in the past, then the conversation becomes easier. I think if Harsha was the first tech IPO going public, maybe it would have been harder, but Harsha is an exceptionally long-term thinker. He's made money for investors all throughout. So I think with Harsha, it would have been easier. But generally with entrepreneurs, I think it's been easier because now it's quite clear. You are stopping your journey with private investors. You're starting your journey with public investors. And if you don't have their confidence, then that's going to play out, in different ways over the next 10 years. Their confidence will be less. They will give you less room for error. And so now the formula is quite fixed. Let's leave some money on the table. Even if you get diluted a little bit more upfront, I think over the 5-year period, we'll all be much happier.
Well, let's talk about Swiggy and your confidence in the bet that you've decided to make, and you didn't participate in the OFS. Is that on account of the fact that you believe that there's significant headroom for growth from here on?
I think there is. I think, look, there is very few times in a country and in an investing professional's career are you going to see such a large platform being created, right? When you have both food delivery and Instamart, when you have $5 billion+ of GMV, when you're touching 100 million+ consumers, when the repeat of orders is that high, and India is only becoming richer, more urbanized, and the product market fit becoming only stronger, we think Swiggy has a long way to go. Obviously, execution is important. There is competition, Zomato, Zepto, but I think the market is large enough. The product market fit is very strong, and that's why we didn't do any OFS, because we think there's a long way to go for Swiggy.
And you're holding 8% off it, so that's a sizable chunk.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times.
Welcome back. You're watching Business Lunch on CNBC TV18, and let's move on to a CNBC TV18 exclusive that we have for you all. A large business group is eyeing stake in PSP projects. Let's go across to Vivek Iyer, who's joining in with us. And what is he understanding in terms of from the sources as well? Vivek, good afternoon. What is happening on this front?
Well, good afternoon. Well, we understand a very interesting deal is likely to take place as far as the Indian EPC, that is the engineering, procurement and construction space is concerned. The Adani Group, remember, which recently acquired majority stake in an EPC company, ITD Cementation, is now looking to add heft as far as its EPC capabilities are concerned. We understand that the company is in advanced talks and advanced stage of negotiations to acquiring stake and a controlling stake in PSP projects. We understand that the Adani Group is in advanced stage to go ahead and acquire a little over 60.1% stake in the company, and this will be done from the current promoters. Now remember, given the fact that a 60% stake sale from the promoters will actually go ahead and trigger the open offer rule, and we understand Adani Group is prepared to go ahead and announce an open offer to acquire an additional 26% stake from the current shareholders. The current market cap of the company currently close to 2,800 crores, so indicating that close to 75% stake will, a little over 80% stake in fact, will change hands as if this particular deal goes through. We reached out to both the Adani Group and PSP Projects. The Adani Group didn't comment on our queries. The PSP Projects is yet to respond to our query, but this will be an interesting deal if it goes through, given the fact that the Adani Group in the last 3 months is looking to add significant capabilities as far as the EPC part of the business is concerned.
Absolutely, Vivek. Surely an interesting one to watch out for if this goes through. PSP Projects as of now is trading with gains of almost 13-14% in trade. But let's move on, and the Indian aviation sector is what we're focusing on because it has achieved a historic milestone on November 17th, recording more than 5 lakh passengers departing across the country in a single day. Madhya is joining with us to give us more details on this record achievement in the aviation sector. Madhya, good afternoon.
Afternoon, Winnie. Yes, 5 lakh air passengers in a single day. That's a historic milestone, and it followed several days of record-breaking passenger numbers that started from the 8th of November, which had seen 4.9 lakh passengers. This surge in air travel was largely driven by festive season and the long weekend. 17th November, remember, was a Sunday when people returned from their respective destinations. These passengers were flown on 3,173 flights, and around 70% of these flights were operated by Indigo, which commands a 63% market share. But October was indeed a great month for airlines, airports and hotels in general, as 3 major Indian festivals, which is Dussehra, Dhanteras and Diwali, fell in October, allowing people to make travel plans. Now, what also encouraged travelers is the ticket sale by various airlines. Post-Diwali, airlines launched fare sales that spurred bookings, leading to an uptick in both fares and the load factor as demand continued to rise due to the festivals and the long weekend. Now, Mumbai International Airport said it handled over 4.42 million passengers in October, which is of which 3.16 million were domestic and over 1.2 million were international. But while we celebrate the increase in air travel, it is important to note the challenges too. Congestion at major airports has led to flight delays, people missing connecting flights that add to operational costs for airlines. Additionally, October and November saw a spate of hoax bomb threats that caused diversions and increased expenses for airlines, further impacting their profitability.
Okay, Madhya, thank you so much for that update there on the aviation sector. But moving on from the aviation sector to the sidelines of what happened at the Global Leadership Summit, we did have Debashish Panda, the chairperson of IRDAI, and he says that listing would be a natural progression for the large and mature insurers. On the issue of GST removal on health and term life insurance, he says that he is waiting for the government to take a call. So let's listen in to what more he had to say.
Listing would be a natural progression. No? Once you achieve the scale, size, or the age, you got to list the company, and it should happen. Listing also brings in a lot of benefits in terms of better disclosures, more value for the policyholders, more value for the investors. It would enhance the customer confidence. It would, even open up access to raising more capital, and it would support growth, innovation. So all of that follows with the listing of a company. And we are in engagement with the industry that once, the criteria of either the age or the scale criteria, and we are nudging them to go for listing. And I expect that you will see in the coming months and years more companies, going for listing, or at least preparing that roadmap. I think that we'll be able to react when it happens. But typically, these decisions will happen at the government, considering that whatever cut happens, if it happens, then the benefit passes on to the customer, right? So obviously, it could be implementation of the new GST rates sans the ITC, which is the input tax credit. Then the entire benefit passes on to the customer. So, it'll be good for the sector in the sense that maybe a big impetus for health and life term. So, however, I'm sure the government will take a decision in the overall interest of the public and also the economy.
Okay, let's move on. And the Competition Commission of India has imposed a penalty of over 210 crore rupees on Meta for abusing the dominant position. Meta has also responded disagreeing with the CCI's decision. Parikshit is joining in with us to tell us more on this front. Parikshit.
This comes as a big setback to Meta in India. The Competition Commission of India has imposed a 213 crore penalty on WhatsApp and Meta for violating its dominant position in the market. Now, this dates back to a 2021 privacy update by WhatsApp, which, according to the Commission, compelled users to agree to a precondition that they will be able to use WhatsApp services only if they agree for their data to be shared by WhatsApp with other Meta companies and Meta products for advertising purposes. The Commission noted that this was violative of the competition law and customers cannot be forced with a policy which says take it or leave it. WhatsApp and Meta have also been given directions to remove any such policies and preconditions from any of their products in India. They have also said that in case there's any sort of a condition, users must have an opt-out option, and there must also be a tab where they can review any decision that they have made in future. Meta has put out a statement saying they do not agree with the Competition Commission and they are likely to appeal against this order.
Okay, thank you so much for that, Parikshit. But on that note, we're going to slip into a very short break. But after the break, we'll talk about the state of Maharashtra as it readies itself for the elections tomorrow. We get you all the details on the other side.
TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business
of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Maharashtra elections this time stand out as one of the most unpredictable in recent history. The political landscape is charged with uncertainty and no one can confidently predict the outcome. Both the ruling Mahayuti alliance and the opposition bloc that's
Thanks for staying tuned into Business Lunch on CNBC TV18. But let's talk about Maharashtra, because Maharashtra votes tomorrow and it will be important to see how the voters cast their ballot. Most importantly, since the fall of Uddhav Thackeray-led government in the state. Sandhya is joining in with us with more details on this. Sandhya.
So these are undoubtedly one of the most unpredictable, uncertain elections in the recent times. Nobody knows for sure what exactly is going to happen. Even poll pundits this time are being extremely careful before, making any forecast. Now, what exactly has happened in the last few days as far as the election campaign is concerned? The ruling Vikas Aghadi has cornered the ruling the opposition Mahavikas Aghadi has actually cornered the ruling dispensation on issues like farmer distress, unemployment, Maratha reservation, Dharavi development and the breaking of Shiv Sena and NCP. On the other hand, the ruling dispensation is, depending on welfare schemes like Ladki Behan and infrastructure development for people to vote for them. Now, there are certain things both the sides are suffering with. It's cross-nomination, it's infighting, there is uncertainty because when the nominations were filed and even till the date the nominations were supposed to be withdrawn, till then there was no certainty who is going to contest the elections from where. So as I said, extremely uncertain and unpredictable elections, and the counting is going to happen on 23rd November.
Absolutely, Sandhya. Thank you so much for that update there. But with that, it's a wrap on this edition of Business Lunch on CNBC TV18. Thank you so much from myself as well as the team who put this show together. Don't go anywhere. Your Midcap Radar up next.
Unique challenges making the contest intense and volatile. The opposition has centered its campaign on issues like inflation, unemployment, farmer distress, Maratha reservation and the redevelopment of Dharavi. They have also used the breakup of Shiv Sena and the NCP as a key talking point to attack the ruling coalition, especially the BJP. Meanwhile, the Mahayuti, comprising the BJP, Eknath Shinde's Shiv Sena and Ajit Pawar's NCP faction, has focused on welfare schemes such as Ladki Bahen and infrastructure developments, and these are the issues they are seeking votes on. We also saw BJP leaders using slogans like "Katenge to Batenge" despite opposition from many state-level BJP leaders themselves. Another slogan used by BJP was "Ek hai to safe hai." The campaign of both MVA and Mahayuti has been clouded by internal challenges like cross-nomination, infighting and uncertainty over the chief ministerial candidate. There will be an NCP versus NCP battle on 37 seats and Sena versus Sena on 51 seats. Also, both Mahayuti and MVA will witness what they call a friendly fight on multiple seats. Mankhud, Shivajinagar, Ashti, Katol, Morshi, Dindori, Shrirampur are some of the seats. Certain seats like Worli, Mahim, Baramati, Kopri Pachpakdi and Shivdi are gaining attention as crucial battlegrounds. These constituencies are likely to see fierce competition with prominent leaders on both sides striving to secure voter trust. Mahayuti's welfare schemes like Ladki Bahin could play a key role in deciding the outcome. For both sides, the influence of rebel candidates will be important as they could tip the scales in closely contested seats. The possibility of post-election realignments cannot be ignored, adding another layer of intrigue to an already unpredictable contest. With both sides facing internal and external challenges, the stakes have never been higher.
Your 70-hour comment has gone viral and you're not going to be able to live it down anytime soon. Any change in thinking on that one, or do you believe that you were just grossly misunderstood?
No. First of all, I don't believe in work-life balance. The only way we can show our appreciation for all these wonderful things that are happening is by our working out. Frankly, I was a little bit disappointed in 1986 or something when we moved from 6-day week to 5-day week. I mean, I was not very happy with that.
What is work-life balance for you?
No, to me, I think giving time for family, for health, and work, all three are very important. I think to be successful at work, one has to work hard. But I think you can offer an array of menu to employees.
So has the menu widened over the years? I mean, from when you took charge to where it is today, has the menu widened significantly?
I think the offering has completely changed. You're being much more purposeful as a company. You're being looking at all these other aspects that I described, in addition to just focusing on outperformance.
Sagar, let me ask you the same question as well. How are you dealing with this culturally? What has been the change on your menu to keep employees happy?
I feel like there is no right or wrong in these things.
Yeah.
It's not our place to enforce what we think is right or wrong on the people who work with us.
Yeah.
For me, for example, I don't think of work-life balance. I think more of work-life harmony, right? Because I'm always working when I'm not at office.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Urmas Fatakia. A good day for the bulls. It's a bounce back that we're seeing after 7 consecutive days of fall. What is the last 1 hour looking like? We'll see. But for now, it's steady on the markets.
8th time lucky, if you could call it that, for the Nifty, and the broader markets are doing the same as well. Let's take a look at the top headlines at 1:30 this afternoon. Stocks are a wide swath of green, with advances far outnumbering the declines. Realty, consumer durables and autos are the big gainers, even as metals lag. Mid-caps are outperforming.
PG Electroplast zooms more than 9% after the company signs an agreement to become an EV manufacturing partner for Africa's Spiro Mobility.
Zee Entertainment surges over 8% after Puneet Goenka steps down from his post as managing director. However, he'll continue as the CEO of the company.
Vari Energies is under pressure after reporting muted Q2 numbers. Profit, which surged nearly 15% on a YOY basis, was aided by other income.
And Suzlon has climbed in a 5% upper circuit following an upgrade from Morgan Stanley. It has upgraded the stock to an overweight from an equal weight rating earlier and cut its price target though to 71 rupees a share.
Okay, it is a lot about the small caps and the mid caps today. It's a bounce back that we are seeing. All the sectoral indices, they are in the green. We talk about Nifty, it's up around 300 points. The small cap index is up around 2%. We do have gains coming in for the mid cap index as well. That one is up around 1.7%. So all across the board, there is a green looking screen. But again, it's been very volatile, Urma. So we do not know whether that would remain the case by the end of this trading session. But after 7 days of consecutive losses, there is some recovery on the way.
Well, something was in the offing, right? Something had to give after 7 days of fall, some support coming in. And signs were evident from yesterday's trading session itself, right? We recovered 100 points from the lows of the day. And now that we are heading into a midweek holiday tomorrow, courtesy of the voting in Maharashtra, there is some recovery on the screen. The Nifty and the Sensex both at the highest point of the day. The day, though, today belongs to PSU names. We'll get to that in just a bit. But to describe all the movers in the broader markets, Vamakshi is joining in this afternoon. Vamakshi.
Well, Hormas, it's green across the screen, and on that note, let me first start off with some of the top gainers on the broader indices. We have Zee Entertainment, Apar Industries, Jyoti CNC. Remember, the management joined us. Positive commentary out there. The stock is up nearly 9%. Triveni Turbine and Kirloskar Brothers are some of the other stocks that are surging in the trading session today. But on the flip side, we do have a couple of losers. Hunasa Consumer made it to the list yesterday. It continues to trade nearly 10% lower. Thermax, Carborundum, as well as CE Info Systems or MapMy India are all down and out in the trading session today. But the list of movers movers is far greater. Let's also look at some of the insurance stocks because the FM has advised the banks to deter from selling insurance and instead focus on core banking, and resultantly all of these insurance stocks are down anywhere between 2 to 3%. There are some stocks that are gaining in the trading session today, and these gains are being driven by very strong volumes as well. We have Acom Drugs in focus up nearly 5%, Schneider Electric also up nearly 5.8%, Delivery as well as EID Parry are some of the other big movers. But apart from that, there are some stocks that are buzzing on the back of news flow. Suzlon Energy in focus, the stock is locked in the upper circuit since morning, and that is because Morgan Stanley has upgraded its rating on this counter, and PSP projects to surging nearly 11.37% higher, and that is because sources are suggesting that Adani Group is in talks to buy nearly 60% stake in the company. So those were some of the movers in the trading session today.
Okay, all right. Thank you so much, Vamakshi, for joining in. As always, it's a good time to welcome Shrikant Chauhan from Kotak Securities for a technical check. Shrikant, this bounce back that we are seeing, do you think it is something that will sustain? What are the next levels we are watching out for on the Nifty?
Yeah, good afternoon, Sonal. Good afternoon, everyone. I think, market is holding well above its important levels like 23,500, 23,300, where it has having support of option statistics as well as 200-day simple moving average. And when looking at the broad base activity in the market, I am of the view that this particular recovery looks like sustainable, and we can see the levels of maybe 24,000. Where the market is having next leg of resistance of 20-day simple moving average. So I'm of the view that in case if we see any correction during the day or maybe tomorrow, we should look for adding some position, because now this pullback to continue up to 24,000 on the minimum side, and in the best case scenario, we may even see the levels of 24,500. That's the overall view. Bank stocks recovered very well from the lows. Bank Nifty is also, IT index is also showing good amount of strength. So if both these indices are going to support the market, I think we are going to see sizable pullback in the near term.
So in light of this pullback, what are the stocks that you're recommending, Shrikant?
See, PSU banks are doing really well, and when there was recovery in the market some few days back, we saw good amount of buying attraction in almost all the PSU banks, and now they are forming higher bottoms. So while looking at the entire setup of PSU banks, we are of the view that Bank of Baroda should do well, which is currently trading around 242, 243. From here, the stock can move to the levels of maybe 255 to 260, 65 in the near term. So broadly, I am of the view that it is heading for 265. We can keep a stop loss for creating any long positions somewhere close to 234, 233. And the other stock which we like is National Aluminium. Nalco, it is doing really well. It is forming higher top, higher bottom, and volumes are also increasing whenever there is a break of swing high. So at current levels around 244, 245, it's a buy with a target of 260. And here also, if there is any long position, then we can keep a stop loss around 233.
Okay, all right. Thank you, Shrikant, for joining in today with all those technical bets. With that, we'll slip into a short break. Gaurav Jogani from JM Financial Institutional Securities will join us to discuss the latest trends from the footwear industry. Stay tuned.
I'm always available for family when I'm at office as well. So I don't think of it as a clear line where
it's not siloed.
It's not siloed where post 6 p.m. you don't pick up work calls, or when at 2 p.m. you don't pick up family calls, right? Like it's that's how I think about it.
Yeah.
There's nothing right or wrong, but I always think of it as making sure that the people who I surround myself with, the people who work together with close colleagues, are all people who are extremely passionate about what they do.
Let me ask you, how are you dealing with this, and what have you changed, if anything at all?
The new generation is very well informed. They're very, very clear in terms of what they want. I think their preferences are very different. They have a very unique view on the world. And I think companies will also have to adapt in terms of whether it's their employee policies or their way they target those customers. I think we'll all have to evolve, and at Torrent we are evolving. For instance,
so what's the big change that you've made?
So for instance, our employee policies have a great focus around work-life balance. We are one of the few entities in Gujarat that has a 5-day work week since a while. We also encourage work-from-home policies. We are moving towards situations where our female employees are given a lot more support to be able to continue to contribute meaningfully, but also to take care of their family affairs. Even on our leave policies are far more liberal than what they used to be.
For us, how do we make jobs more interesting and not just a job, but something people are passionate about, want to do? And I think that it's going to be a constant balance, I think, of priorities, where you talk about work-life balance. I think in my case as well, I think it's not so much work-life balance, it's more balancing priorities at a given point of time and giving the flexibility to people to do that. But I agree with Sagar that at the end of the day, you want people to be invested, you want people to be committed, but at the same time, you don't want to kind of be overbearing. It should come naturally. But
Absolutely.
I think to do that it's not easy, and I think we will all have to change quite a lot. I don't think we've changed as much, but I think it's also a calibration.
एक तरफ अदानी जी खड़े हैं, धारावी पे निशाना है, महाराष्ट्र की जो धन है उस पर निशाना है, मुंबई के नेचर को चेंज करने का लक्ष्य है, और दूसरी तरफ हमारे किसान, मजदूर, युवा जो एस्पायर कर रहे हैं, जो सपना देख रहे हैं, जिनका सपना हर रोज महाराष्ट्र की सरकार तोड़ रही है. तो ये लड़ाई है. ये है नरेंद्र मोदी जी का.
Welcome back. Now let's shift focus to the consumer retail segment, particularly footwear, where the industry is seeing some major trends shaping up. And a latest report from JM Financial says that there has been an increase in demand for sports and athleisure footwear, a higher demand for premium products, and a lot of other trends that it foresees in the future. Now, to discuss more of this, we are joined by Gaurav Jogani, the Director of Consumer Discretionary at JM Financial. Gaurav, good afternoon. Thank you so much for joining in. You've highlighted 4 key trends in your report which are likely to shape up for the future. The one that I wanted to highlight, though, is the premiumization trend. What has caused the shift from mass market to premiumization, and do you feel that most of the incumbent players would have to make a shift to the premiumization bit in order to remain relevant and have their market share intact?
Yeah, hi. Good afternoon, everyone. Thank you for having me. The premiumization shift is on account of 2 counts. One, if we look at the past couple of years, there has been an increase in the GST rates for below 1,000 rupees segment, and which has increased from 5% to 12%. So there is a natural shift. There has also been an increase in demand for the sports and athleisure segment, which eventually lands up into the premium and the mid-premium kind of a segment. So that is also leading to that shift. Now what we believe is that to remain relevant, most of these guys have to offer consumers products which are more relevant to the sports and athleisure category, given that the formal segment is kind of steadily declining at a gradual pace. So that is the reason why we feel that the higher the premium segment for a particular company, the better it is. And in addition to that, if they are more casual and athleisure products, still better than that.
Okay. Gaurav, so this is what's happening with the premiumization bit. I just want to understand, how big is the organized market currently? What kind of growth trends are we looking at in the organized market itself? Because you did say that the change in GST rates did lead to some demand shifts as well, right? So what rate are we looking at this particular segment growing?
So the overall, if you look at the organized segment for the footwear, it would be around 35 to 36% odd. The organized segment is expected to grow at around 12 to 14%, anywhere in between that. Whereas the overall footwear segment we expect to grow at around 7 to 8%. And this will largely be driven by prices and not by volumes.
You know, Gaurav, you have mentioned that you are expecting the footwear segment to grow at a 12% CAGR, the organized footwear to grow at a 15% CAGR. Can you share some of the tailwinds that you have highlighted that would lead to this kind of growth going forward?
See, the tailwinds being one, if you look at today's India per capita consumption, it's just only 2 pairs per consumer. We expect this to steadily increase to maybe 2.5–3% going ahead, and this would be driven by increase in the per capita consumption by the increasing in income. Second thing would be also see nowadays people prefer for multiple footwears. They have a separate footwear when they go out. They have a separate footwear for the sports thing. They have a separate footwear for their in-home consumption as well. So the two things that will largely drive this growth will be one, the higher per capita consumption and the higher increase in the incomes from all of these guys.
So these are some of the tailwinds. Are there some risks? Because there was a point in time when the entire industry was facing a lot of pressure. Whenever we had conversations with the management, they said there are still certain things which need to be addressed. So what are those risks to the growth forecasts that you have?
So the risk, I would say, one is, the timing difference. So, for example, if we recap to the last year most of them, kind of have reported muted growth rates. And one of the reason was the year before that, wherein there was COVID tailwinds. People came out of COVID. So the demand was kind of preponed. So that was one factor. The other bit is if your product doesn't remain relevant. So, for example, if there is a higher demand for sports and athleisure segment, however, your product portfolio is more accustomed to, the formal kind of a footwear or maybe more semi-casual kind of a footwear, I think that could be another risk. Third is, I think, the recent risk with the BIS implementation. So, government has implemented BIS from the 31st of August 2024. Now, this BIS implementation would, entail that there would be no imports outside of India from those vendors who are not BIS registered. So in that case, if they are not able to make alternative arrangements or they are not able to get, the sourcing right, that could, in the interim impact the growth rates in the near term.
Gaurav, you have initiated coverage on 3 of these footwear players, Campus Activewear, Metro Brands and Bata. But I wanted to talk to you particularly about Bata because you have a neutral stance on the stock.
Yeah.
And since you spoke of premiumization, Bata has been the one that has been moving towards this premiumization trend from what it has been traditionally known as a mass market player. But the stock has just flattered to deceive. It's been an underperformer for a prolonged period of time. What would it take for Bata now to finally start delivering in terms of share price returns?
So see, one is the top line growth. That is very imperative. So if you look at the last 3 to 4 year CAGR, that has been only 2% top line CAGR for them. One of the bigger impacts for them has been the decline in the sub 1,000 rupee segment. So as you talked about premiumization, the 1,000 plus rupee segment has grown for them even in this quarter at around 7% plus, whereas the sub 1,000 rupee segment has declined by 25%. So unless and until they are able to drive growth in that sub 1,000 rupee price point segment, which constitutes around 30% of the overall sales volume for them, the growth could be anemic. And because it's a high leverage model, unless and until that top line comes in, the profitability would also remain impacted. So I think bottom line would be they need to drive top line growth, and the top line growth will be a function of how they drive growth in the mass segment.
Okay, so mass segment continues to be the focus point, right? Because right now better growth is seen in premiumization. What makes you like Metro Brands and Campus in this case? What are some of the triggers that you think will lead to the upside that you have been penciling in?
So see, Metro Brands, I'll specifically talk about. One thing that they are doing right is, one, they are brand agnostic. They have this unique EBO channel wherein they not only sell their own brands, but they also sell third-party brands. Now, what this allows them to do is that they are able to sell those products which are in higher consumer demands. For example, during COVID times, we saw a higher demand for the sports kind of a footwear, and they were, able to sell those kind of footwear through their stores. The other bit is they are also now tied up with a few good brands like Fila, which is again on the sports and the athleisure side. And very recently, they have also started to open Foot Locker stores, which will give access to the consumers to the premium sneaker kind of a brands, which they were, otherwise not able to have access to. And in addition to that, they are also being robust on addition of stores. So they are practically adding 100 to 125 stores each year. So a combination of all these things again is, driving growth for Metro. And we believe that, that could drive around a 15-16% kind of a top line growth for them and a higher profitability growth given the operating leverage benefits. Now coming to Campus, the past 1 year has been impacted for them because they have gone for this realignment of the distribution channel wherein they are getting the distribution act right, as well as they are now focusing on the open footwear segment, which they were not focusing earlier. They have also now introducing more more value price points, which will help the consumer, to interact with their brand and draw more footwear per person from their brand itself. So a combination of all these things is helping Campus.
All right, Gaurav, thank you so much for sparing time and joining us this afternoon to take us through your views on the footwear market. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned.
ये देखिए, एक है तो सेफ है. ये इसमें एक है तो सेफ है. ये नरेंद्र मोदी जी की महाराष्ट्र सरकार की स्ट्रेटजी है. हम आपको ये दिखाना चाह रहे हैं. मुश्किल खुलता है ये पकड़िए. ये देखिए, एक है तो सेफ है. देख लीजिए. और ये स्ट्रेटजी का लक्ष्य देखिए, एक है तो सेफ है. धारावी का मैप है, ये भी दिखा दीजिए. दूसरा पोस्टर. ये 1 लाख करोड़ रुपए का धंधा चल रहा है. ये आप देखिए, हमारे प्रधानमंत्री जी और अदानी जी एक साथ खड़े हैं. एक है तो सेफ है. और ये लक्ष्य है. तो उन्होंने अपना नारा दिया है. हम उनका थोड़ा नारे को आपको समझाना चाहते हैं.
धन्यवाद राहुल जी.
अच्छा, उनका जो स्लोगन, मेन जो स्लोगन है, एक है तो सेफ है, वो मैंने इतनी अच्छी तरह आपको दिखाया है, उसको समझाया है कि एक है तो सेफ है. एक कौन है? एक नरेंद्र मोदी जी हैं, अदानी जी हैं, अमित शाह जी हैं. सेफ है तो कौन सेफ है? अदानी जी सेफ हैं. कष्ट किसको होगा? धारावी की जनता को होगा. नुकसान किसका होगा? धारावी की जनता को होगा. जो हिंदुस्तान की स्मॉल और मीडियम इंडस्ट्रीज हैं, जिसका एक चिन्ह धारावी है, उसको एक व्यक्ति के लिए खत्म किया जा रहा है. तो लड़ाई यही है. नारा उन्होंने दिया, हमने आपको समझा दिया. इस इलेक्शन का नारा मोदी जी ने दिया है और बिल्कुल सही नारा है. एक है तो सेफ है. सवाल है, सेफ कौन है? सेफ किसका है? एक कौन है? ये सवाल.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.
Welcome back, and PG Electroplast is our mid-cap spotlight of the day. The stock has hit a new high as its arm, PG Technoplast, has announced a foray into EV manufacturing. Upasna has more details on this. Upasna.
Well, the company is in focus today. As we can see, the stock is clearly buzzing high towards the highest point of the day. Well, the company says that the company's wholly owned subsidiary, that is PG Technoplast, forays into electrical vehicle and lithium-ion battery assembly. Well, the company signed a definitive agreement with Spiro Mobility to become exclusive manufacturing partner for manufacturing of EVs of Spiro Mobility in India. Now, PG Technoplast will be setting up manufacturing facility for electric vehicle and lithium batteries and other related components, while Spiro Mobility shall be responsible for research, development, marketing, sale and distribution of the EV product, is what the company has highlighted. Mind you, Spiro Mobility has the highest fleet of electric motorcycles on roads in Africa, is what we know from the press release. So all in all, it's a much positive news for the company, and we can clearly see the stock buzzing trade today on the back of this foray.
9.5% higher is PG Electroplast. Upasna, thanks a lot for that update. But as I mentioned at the start of the show, the day belongs clearly to PSU names, and after a very, very long time, and after a fall of almost 35 to 50% from their peak, some of the PSU stocks are finally seeing a rebound. Pull up IRFC and that will come up on your screen. That was the top gainer on the PSU index. Remember, IRFC starts trading in the futures market as well later this month. 5% higher for IRFC. Cochin Shipyard 2, which has halved from its peak now, is also up another 5% in today's session. We'll tell you more about these PSU stocks on closing bell. But the other important update, though, is that the NTPC Green Energy IPO, the retail portion of that, is fully subscribed. The IPO is open for subscription today at 24% overall subscription so far. 102 to 108 rupees is the price band. And lastly, pull up Akam's Drugs as well. That stock is now in an upper circuit of 5%, and that comes after a 10-day losing streak when it has lost almost 35% during these 10 days. So now the stock is finally in a 5% upper circuit as we speak. But with that, it's a wrap on this edition of Midcap Radar. From Sonal, me and the team that put this show together, thank you so much for watching. MF Corner on the other side.
देश भर के लोग सांस नहीं ले पा रहे हैं। आप स्टबल बर्निंग का फार्म फायर का डेटा देखने जाइए तो ये दिखता है कि चाहे राजस्थान हो, वहाँ पे स्टबल बर्निंग हो रही है, चाहे हरियाणा हो, चाहे उत्तर प्रदेश हो, चाहे मध्य प्रदेश हो। और केंद्र सरकार क्या कर रही है? अगर इस पूरे देश में एक राज्य है जिसने स्टबल बर्निंग की, पराली जलाने की घटनाओं को कम किया है, वो पंजाब है। एक एक राज्य में पंजाब, हरियाणा, मध्य प्रदेश, उत्तर प्रदेश, राजस्थान, आज हर जगह पराली जलाई जा रही है। और केंद्र सरकार हाथ पे हाथ धरे बैठी हुई है। आज पूरे नॉर्थ इंडिया को एक मेडिकल इमरजेंसी में धकेल दिया गया है। चाहे दिल्ली हो, चाहे चंडीगढ़ हो, चाहे राजस्थान में जयपुर हो, बीकानेर हो, भोपाल हो, पटना हो, लखनऊ हो, आज देश भर में AQI वेरी पुअर, पुअर, सिवियर, सिवियर प्लस, रोज सेंट्रल पोल्यूशन कंट्रोल बोर्ड रोज एक डेटा निकालता है कि किस शहर का कितना पोल्यूशन का लेवल है। आप कल शाम 4 बजे तक इस डेटा को देखिए तो देश भर में, पूरे नॉर्थ इंडिया में सारे शहरों का डेटा वेरी पुअर, सिवियर, सिवियर प्लस।
I want to talk about the big transformative idea that's quite literally shaking up the world. Donald Trump and the impact and implications according to you.
I think pretty transformative, Donald Trump, and has changed the perspective of how we're going to run the world as we go forward, or how he is going to run the world as we go forward. And as was mentioned, 66% of global market cap is US. We just got to make sure that America does not make the rest of the world irrelevant. And that's one of the challenges we must all live up to. Therefore, however small our market share, we need to grow it much faster than what we have in the past. And Shireen, as you think about transformation, I think if you look at America's power, it is essentially 3 things. One is military, second is finance, and third is creativity.
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. Today we'll focus on the current trends when it comes to investments in mutual fund industry by Gen Z. We'll try to understand how Gen Z should begin their investments, the categories they generally look for, what have the trends been, and more with Nilesh Verma, who is the product head and AVP mutual funds at Zerodha, who is joining us now on the show. A little later on the show, we'll discuss saving habits of young Indians with Pardhar, the VP at Angel One. So just stay tuned for that conversation as well. But Nilesh, let me begin with you. Thank you so much for joining us on CNBC-TV18 today. And, that's the next trend. Everyone hopping on to the Gen Z bandwagon, be it the mutual fund industry or the wealth advisors as well. So what are the current trends when it comes to investments by Gen Z? Which asset class are they liking mostly? What is the split looking like?
Firstly, thanks for having me on the show. And so the asset class allocation, right, is a function of the investment acumen of their trusted source, right? I was recently reading a article by my colleague Bhuvan, which is titled as Virtues of Youthful Stupidity. So as per in that article, as per the WF report, it quoted that there is almost like since 2020 to 2024, the investment pattern of Gen Z, like the number of investors that are coming in has doubled, and almost 50% of the current new investors in mutual fund schemes are the Gen Z investors. So if you see, investors are of 2 types. One, those who do their research, their learning, and use that knowledge and invest. And the second ones are who read the content available out there, right? So right now there is a burst of a lot of content out there. Everyone wants to just do what their friends are telling them or what they're learning from here and there, right? So their decisions are not always right. They can make mistakes. And right now in Gen Zs, we are seeing that, and not only Gen Zs, it's a normal investment pattern where, people learn from doing mistakes. And once they become more mature investors, when the ticket size is also increases, right? Because currently the ticket size is small. Once that increases, I think they become more serious investors. And the investment patterns or the asset allocation or, the investments that we are seeing boom in currently is most of them are investing in equities and in mutual funds. In mutual funds, they are liking categories such as index funds and, gold funds. We have seen a lot of inflow, small caps. So, yeah.
Okay, all right. So there is no definite direction that we are seeing here. Of course, there's a lot that's going on as chatter in the society as well. But within mutual funds, you spoke about gold and small caps that they like. Is there a specific category that they like, a sector that they're looking at? What are the trends suggesting?
So we have seen a huge inflow in, equity schemes and in index funds, especially also thematic funds as well. And thematic schemes having EV exposure, right, has been an eye catcher for these investors, as what we have noticed.
Okay, so EV continues to be the big theme, not only for the industries in general who are getting on and investing there, but even for Gen Z who are looking at themes via EV where they can invest. But are they going largely for riskier investments? Is this a trend that you're seeing? Or is it a mix? They are putting it into safe bets as well, and it's a mixture. They're risk averse and risk takers as well.
So I think that's a normal generic investment pattern. We cannot here generalize whether Gen Z are liking more of riskier investments or everything, because right now they are in a journey where they have just started. Their ticket size is small and they are learning on how to invest. So they are trying their hands on each and every financial asset available over there, right? It cannot be generalized. So they are investing in, say, they are trying their hands in crypto. They are trying their hands in IPOs. IPOs are a big boom right now. Then equity investments is somewhere, derivative investments, like everything is being tried on. So I think once they will invest, they will learn from their mistakes and whatever is happening. I think in the future they'll become more mature investors, and we'll have to in future look at Gen Alpha on how they are, their perseverance is there.
Yes, generations are changing so fast that we are hopping from millennials to Gen Z to now Gen Alpha. But what about the debt category, Nilesh? Is it not a cool investment for Gen Z?
I wouldn't say that debt category is not uncool or is cool for Gen Z investors, because if you see, debt category is what, like low risk, low return. And if we see these Gen Z investors, right, they are someone like who are high risk, high returns, and they want to, like get benefit out of it at an early age, right? So it's something that I don't think so. It's something that they wouldn't be exploring right now. But yeah, once they become more mature investors and they learn about, portfolio allocation in a way where they are able to think about the futures, the investment pattern, I think it can be looked at that point of time, but not wrong.
Okay, all right, take that point.
Yeah.
And how should they go about starting investments? Is it a good time? Because we've been seeing a lot of volatility.
So I think to enter the markets is always a good time. It's never, we can't say that is it a good time or it's not. Being a stable investor and putting in money every time, because it's for your own future, right? So small contributions right now is a monthly or a weekly SIP of 1,000 rupees also will help them, because Gen Z has, they have time frame of around 30 to 40 years right now to plan their own retirement, right? So right now they can take a lot of risk. They can choose between investments, and it's always a good time. So yeah.
It's always a good time, but just of course the kind of volatility that we've seen and the correction that we've seen poses the question if it is still the good time, but take that point. Last question before I let you go, Nilesh. Any fund recommendations or any category that you would suggest a Gen Z should start or continue investing in order to reap the benefits of the investments they're making today?
So index funds are something that we would suggest, and gold, obviously. So maybe the Zerodha Gold ETF FOF has recently started, so that is a good scheme. And yeah, any of the index funds, I believe, is a good call right now.
Okay, all right, take that point. Thank you so much, Nilesh, for joining in today with your take on what the investment scenario looks like when it comes to Gen Z. And as you said, now we have to look at Gen Alpha. That would be the generation taking forward all these investment avenues that we are talking about. Thank you so much for joining in today with that take. With that, we'll slip into a quick break. On the other side, Pardhar, the VP at Angel One, will join us to discuss Angel One's report on the saving habits of young Indians.
look at these three important things, which gives the Trump power to the United States, let's ask ourselves each a question about how India has got to transform for the future. So I'm literally taking on from where you have said. So let's look at military power.
Okay.
It's the most powerful defense power in the world, which is United States. And if you look at India on a relative basis, if India has to transform, our percentage of spending on defense as a percentage of our GDP is not growing.
The second thing is what I learned from Mahatma Gandhi, that is leadership by example. If you want austerity in your company, you, the leader, show austerity. If you want punctuality in your company by every employee, you come to the office first. Then you don't have to give big speeches. So I think I can go on and on the issue of leadership by example, but I think we in the corporate world must embrace leadership by example. The third thing that I would talk is, this is something that not just the corporate leaders, but leaders in every area in India, in corporate world, in politics, in NGOs, in bureaucracy, everywhere. And that is putting the interest of the community ahead of my personal interest. If I did that, my personal interest will be much larger in the years to come. That's exactly what we at Infosys followed. In the beginning, none of us had any cars. We all traveled by economy until we were $1 billion in revenue, and that was the time that I was there, and we were $288 million of after tax. Until such time, we all traveled economy, even on international flights. So the point I'm saying is, let everybody lead by example. Prime Minister Modi, who has done a brilliant job so far in terms of accelerating our economy, all of that, may want to look at whether we need more of managers in the government rather than administrators. And to do that, they perhaps may want to look at, rather than the current method of having some, whatever it is, some 3-4 subjects, examination, etc. for the IAS, he may...
Welcome back. You're still tuned into MF Corner, where we focused on the mutual fund investment trends with Gen Z. Let's now focus on saving habits of young Indians. There's a recent report by Nielsen and FinOne by Angel One that shows that 80% of millennials and Gen Z save 20 to 30% of their monthly income, and nearly 4 in 5 individuals primarily save money to invest for financial securities. To understand more about the contours of this report and more, let's discuss it with Parth Dhar, the Vice President, New Growth Opportunities at Angel One. Parth, good afternoon. Thank you so much for joining in. Well, it's a very interesting report. I just wanted the key takeaways. What stood out for you? How many people did you sample here? And what's the biggest takeaway?
Thank you for inviting us, Sonal. Excited to share some of the insights that we have uncovered over the past few months. So FinOne is an educational initiative by Angel One that primarily works with young Indians to educate them more on financial planning, some of the investment assets that they are going to scout for, and charting their journey better. We recently did this survey to understand this user better, their savings habits, their investing habits, their preferences. The data partner for this survey for us was Nielsen. We surveyed about 2,000 folks and got qualified results for about 1,650, if I remember it correctly. The data, actually the user data actually spans across various demographics, income brackets, and spans the age group of 18 to 35. So it covers people in college, people who just started earning and are in the early phases of their career. So Gen Z, as well as some of the younger millennials. I think one of the biggest data points as far as saving habits is concerned that was shocking for us, of course. A lot of folks consider Gen Z to be probably reckless in their spending and investing habits, but a lot of them are consistent savers, right? 80% saving about 20 to 30% of their monthly income. And remember, early on, their incomes are not as much as what you would expect them to be. So a significant portion is already going into expenses. So that was a very heartening data point that we uncovered. One of the other things that people also often focus on is goal-based saving, that I would want to save for a car or for a trip or for some of the other materialistic goals that probably we consider to be important for this age group. However, the data shows that most people actually invest for a sense of financial security in the future, as well as to fund future investments. So it is extremely forward-looking and a very financially mature take that people are already aware of these things way before. We can't really compare between how it was, I think, and a generation earlier. Also, another interesting data point for us that we uncovered was even the folks that are 30 above identified that they first started investing at the age of 20 to 25. So right out of college when their early incomes and early careers started. So some of these trends on savings were very interesting. Most people identified themselves as consistent savers. They had very hygiene checks when it comes to maintaining separate bank accounts. They understood the fact that they needed to keep investment options and even savings diversified across. So yeah, I think more to speak about. Happy to answer pointed questions.
Oh, no, yes, absolutely. Because, the idea was not that, that maybe Gen Z is not saving enough, maybe they are spending recklessly. So this report does suggest that that's not the case. They are very, very mature with their investments. So let's delve deeper into this. What are some of the, I would say, features, or I would say the factors that impact their investment choice? Is there some number to that?
Yes, of course. I think when it comes to investments, the biggest thing that we covered was the fact that why I would want when it starts for a particular person. So one, of course, they're starting off early, which is that 20 to 25. About 40% of folks start when they are in that early zone of their career. One, that means they get exposure to information and these asset classes way early than probably their earlier generation did, right? In terms of asset classes and their ranking, we asked everyone what is the most preferred investment asset class that they look for. And surprisingly enough, or not surprisingly enough, stocks came out as the top choice. About 45% of the audience rated stocks as their number one investment first choice, followed by mutual funds, which I think came out about 25%. I think then we delve deeper into the reason why they would actually look for a particular investment class. The top two reasons came out to be flexibility along with higher returns. So yes, there is a direction that they are actually looking at chasing higher returns as opposed to lower risk. And yes, the flexibility of, say, for example, lower ticket size or an SIP sort of, and on that front, liquidity as well. That as an asset class, because stocks are liquid as opposed to some of the other folks on that particular list, that became a top choice for these folks.
Okay, so they are looking at flexibility and high returns. That's neck to neck, according to the data that you have provided.
Right.
So now that you've said, because it's a different era, we are not comparing it with how the earlier generation invested as well. That time there was a lot of real estate, a lot of physical assets as well. Now that's changed, become very digital. What are some of the sources from where they are getting all this education? We have been in an era of this big social media boom. What are some of the go-to places for young Indians?
Got it. Overwhelming answer, one platform, YouTube. about 62% folks actually reported that YouTube is their preferred choice as far as gaining access to financial information is concerned. The other as well largest platform came out to be Instagram. So these are not mutually exclusive numbers. Instagram came at about 50 odd %. Even if we assume an overlap between YouTube and Instagram, that's just social media, I am pretty sure that that will cross 75% of the total number. Yes, people seek information from their first degree network, from their friends, from their trusted advisors and family, along with some of the online education portals that have come up as initiatives. One such initiative is something that we run at FinOne, where we're trying to provide information free of cost, verified and authorized to young Indians.
Okay, all right. So YouTube, Instagram, financial influencers, they continue to rule the roost here. What does the, in the sample size that you had, did you have a split between males, females, and the age that you had seen earlier? Is that data available? Just wanted to understand female investing patterns. Is there some trend that we're seeing there as well?
Well, not specifically. We will deep dive in subsequent reports on that particular front. But yes, there was a healthy ratio of male-female split across about, I think, 70 to 30% that we maintained as far as this demographic is concerned. The deeper insights when it comes to unlocking insights at a gender level, at a tier demographic level, or even at an income bracket level is something that we will disseminate in the subsequent reports that we are going to publish.
That is a different conversation than we'll have altogether. But Parth wanted to understand that when we come to the idea of investments and, looking at flexibility and returns, we need to review the investments that we have made as well. How often is the young Indian doing that? Or they invest and they forget it and it's for a long-term period that they plan these investments?
No, I think they're fairly active on that front, pretty evident in the data. About 53% review their monthly financial situation and even goals, whether they're tracking towards it or not, monthly. So that's a majority that does it monthly. They're about, I think, about 30 odd % or covering about 90% view it actually quarterly, and then about a 10 odd % that looks at it at an annual level. So very actively tracking using automated investment apps where you're able to park money or be able to set up SIPs or even able to track your portfolio. And they've taken to online and digital platforms vehemently. A majority of them actually have started using that.
Okay, very interesting. So they are basically looking at reviewing the investments they have made as well. Other than stock investments and mutual fund investments, are they looking at other classes? There's so much coming up now, right? We are talking about Bitcoin, seeing that big rally. There's real estate, there's gold. Are they interested there?
I think can't really comment on certain other investment areas along with market factors, as you were probably hinting to. But yes, relatively as opposed to a stocks mutual fund, then followed by savings or FDs, which are fixed income assets. Real estate or a bond, sort of an investment asset class, ranks a little lower. Could be one of the reasons tying back to higher returns, to be honest, along with flexibility. Could be lack of information. We are not very clear on it, but I think just because they're probably much more exposed and educated about the investment classes of stocks and mutual funds, and then identify sort of diversification. I think that became a natural choice.
Okay, all right. And of course, we mostly talk about stocks and mutual funds because, as you said, gives more flexibility. The returns have been different as well. Not saying always higher, but yes, this is a category which everyone speaks about very often. Parth, a pleasure speaking with you. Thank you so much for joining in today and giving us all those insights and a sneak peek on what goes inside the minds of young Indians when it comes to investments across asset categories.
Thank you. Thank you, Sonal, so much. Hope to speak and uncover more insights in the future.
Okay, all right. That's the word coming in on where young Indians are investing, how they're saving, and a lot more. But that's all we have on the show today. Stay tuned for Closing Bell to take you through the last hour of trade.
Selecting people from the various management institutes, bringing them into the government. I hope the opposition won't have much objection, like they have already raised. Bring them into the government. First, get them trained at Mussoorie on decision-making under uncertainty, on facing the competition, on creating competitive advantages, on being open-minded to learn from people who have performed better than us, on strategic thinking, on simulation, on workflow management, on project management, and other management techniques. The second thing that we may want to do, because we have, I often used to tell at Infosys, the reward for winning the semi-final is to get to play a tougher game, which is the final. Therefore, the fact that India has tasted success, the fact that India under Prime Minister Modi has done a good job so far, what that really means is this: we, the Indian citizens, must be in a position to play an even tougher game, a more difficult game, a game that will gladden the heart of every Indian. And to do that, one of the things that we may want to look at is, instead of becoming general administrators, we may want these management trainees that are trained at Mussoorie to be allotted to specific functions in the public governance system: agriculture, defense, and manufacturing, infrastructure, whatever it is. And then they have to spend the required number of years, 20 years, 30 years, 40 years, etc., like it happens in some of the developed nations, so that they do become subject matter experts and they can find solutions to us.
Mr. Jindal, over the next 5 years, by 2030, you talked about how very few players are actually investing. There's a private capex challenge. How much is JSW across the group going to be investing in India? How much will you invest outside of India?
In terms of numbers?
Yes.
So, it's not very easy, but
given the demand visibility.
Yeah, so we have made a very ballpark number that between now and 2030.
Taiwan index is holding on to gains of around 0.5%.
Supports come in at about 23,189.
Last two sessions, it's been showing that it wants to put in a bit of a fight.
Bank interest rates will have to be far more affordable.
90 points, so 23,500 plus, 77,570 or so on the Sensex.
One place to look at is China, because they do have a lot of powder dry, which they can use to stimulate their economy.
QE percentage has reached a 68%, January to October.
A dark green on the screen after a really long time.
And its portfolio includes both solar as well as wind power assets.
And not burden customers with insurances which they don't require.
Good day for the bulls. It's a bounce back that we're seeing after 7 consecutive days of fall.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far, and it has been a good day, a strong day, and in the green for almost all of the session. Actually, it has been in the green and no looking back really. We're off the day's highest point, but still looking pretty solid. This is Closing Bell. We're coming to you as always from the CNBC-TV18 Multi-Role Studios. It is also the last hour today, and as we go into that holiday tomorrow with Maharashtra elections. I'm Prashant. With me, my colleague Nigel. Nigel, hi. Afternoon.
Well, it had the ingredients, right, of having a good trading session, and until now, it's lived up to that. So going into the state election, expecting, some kind of optimism, as is it will be a bouncing back from bombed out levels.
Absolutely, and looked very oversold, and the bounce materialized, and I think that there was a tailwind of sort of better cues from overnight as well. I mean, it was a mix of things, but now, of course, I mean, with one day's reversal, when you talk to people and the excitement's maybe not too much, but slight excitement is back. The common chatter is if with a little bit of selling pressure, the market can reduce selling pressure, but still a sell figure, the market can do this. What can happen if that number, that FI sell figure goes down even more? So that's natural. I mean, it's, markets dictate the mood, and the mood is right there at this point. Well, just some levels really. So we're exactly at the 40 hourly exponential moving average, which we put out in the morning as well. Actually, now as we start, we've come off a little bit from there. So 23,748 is that hourly average. The high is about 23,780. So 23,750 to 23,780 becomes that range, which I mean, ideally, if we close above it, then you basically open up the room all the way to about 24,100 or so. So we'll see what the last hour really gets us. Nifty Bank, the last I checked, is trading above the 40 hourly, which is 50,828. Okay, we're exactly there, 826 at this point. Again, I mean, a close above this will be nice. Next resistance comes in at about 51,260. Auto, real estate, and IT are the top movers that we've got going as far as sectors are concerned. So lots of auto stocks, again, sold off quite aggressively. Names like Hero, Mahindra is another one which we'll talk about in some more detail. Real estate, IT, of course, 2%, 2.5% cut yesterday, and a bit of a comeback today as well. But as I said, I mean, you've got polling tomorrow, and tomorrow evening you've got the exit poll results. And to be frank, I mean, it's not as if markets are going to be by the edge of their seat waiting for what the exit polls throw. It's not that Maharashtra state elections are not important. It's just that exit polls, at least this year, have had a pretty dismal record of predicting what the actual outcome is going to be. So, it'll matter, but I think it'll matter to a lesser degree as compared to what we saw during Lok Sabha elections, or actually even during the Haryana elections as well. So that's, of course, only day after tomorrow. Tomorrow is a holiday. Nigel.
Well, I think we've got an important conversation that's lined up. Sapna's in conversation with Mr. Pandey, the DIPAM secretary. So let's cut across to that conversation. Sapna?
In conversation with the DIPAM and Finance Secretary, Mr. Tuhin Kanta Pandey. He wears many hats. He's also additionally in charge of DPE, that is Department of Public Enterprises, as well as DOPT. For today, as of now, thank you so much for joining us, sir, giving us time once again. Just wanted to check up with you, sir, on the latest CPSE capital restructuring guidelines which have come out. What is the intent of the government, and is it correct that this review, the basic template, has actually been revised after 8 long years?
Yes, I think it's basically an update after the experience of 8 years, taking into board the new realities, the new valuation systems which have emerged in case of CPSEs. Also, the fact that we had issued certain interim advisories which have also been consolidated, plus providing, the objective of our main objective of providing operational and financial flexibility while giving, due returns to the minority shareholders.
Okay. So now, if I look at it from the point of view of dividend payouts, for instance, some relaxation is visible there, against the 5% net worth, it's now 4%, a tad lower than the earlier regime, and also you have done away with the net worth criterion for CPSE NBFCs. So that's one aspect. You can elaborate on that, sir. But apart from this, have some of the conditions been tightened, quote unquote, as far as your stock split, share buyback and bonus shares are concerned? Could you clarify?
Let me come to the dividend part. Dividend is basically the minimum guidelines, not the ones which they would be capable of giving The boards are independent and they may give more than that as well. In some cases, even the minimum guidelines they may not be able to fulfill. But there, we have a system of, granting exemptions to them on their request. In the minimum guidelines, there were two conditions. One was the net worth, another was the payout of the profit. So you have 30% of the profit, PAT.
That remains unchanged.
That remains the same. The other condition was that there were two conditions, whichever was higher, 30% of PAT or 5% of net worth, whichever was higher. We have made it 4% of net worth instead of 5%. And the reason is that some of the CPSEs do have their own business plans in terms of capex, in terms of growth, where in their net worth condition sometimes creates a problem. So we have made it clear that, in that case, we will slightly relax it to enable them, sort of more resources for their internal generation so that they would be able to pull into for their growth. The other part was in this case of CPSCs, which are NBFCs, in the nature of NBFCs.
To name a few, sir?
For example, PFC is there, REC is there, IREDA, IRFC is there, HUDCO is there. In these CPSCs, capital is basically the raw material. They don't manufacture. They are basically capital. Their net worth is used to again raise more money and also lend. Now, net worth is important in terms of capital adequacy and other regulatory requirements. So therefore, essentially they are high net worth companies. And if you have a percentage of net worth also as an added condition, and we are saying whichever is higher, sometimes, we would be asking them to give more dividend than what is necessary, and rather their money capital could also be used to, lend more. So in any case, that also is advances our objective of giving them operational and financial flexibility.
Okay, all right. We'll keep cutting back to Sapna's and when we get some important sound bites on some of the crucial pending divestments as well. But let's take stock of the market. As Prashant mentioned, it's a good trading session, though we have come off a little bit from the top. And it had the ingredients of being a good trading session. The dollar index was weaker overnight. You had the FI net sell number as well was relatively lower. The good news today for me is that the Nifty has made a higher high and a higher low as well. That's not happened in the last many trading sessions. So that's one positive point to clutch onto. The Nifty Bank, well, that's been showing signs of the last two sessions as well. It's not pulled back. In fact, last two sessions, it's ended in the green. So that gave you a sense that the Nifty Bank wanted to put in a bit of a fight, as you also on that wrap I'd mentioned earlier today as well, that the Nifty Bank wants to put in a fight. And in fact, now the next reference level for the Nifty Bank on the upside is the 20 DMA that comes in at around 51,400. On the downside, it's around 49,800 or thereabouts. The best part today is that the advance decline ratio is solidly in favor of the number of stocks that are advancing. So at the start of the trading session, it was nearly around 7 to 8:1. That's come down to around 4-5:1, but that's still very, very positive. So your portfolio will be feeling very, very good as well. We have Bharat Forge. That's a stock that you should keep an eye on. I think they're talking about advanced towed artillery gun system. They're in conversations, I think so, and they're looking to bag an order. So that's one of the reasons, I guess, that the stock has moved to the high point of the day. We should get that up back for you on the screen in just a bit. There it comes. They have contract negotiation procedure underway between the company and the Defense Ministry for ATAGS. The full form comes up for you, Advanced Towed Artillery Gun System. So the street likes that. But how do you position yourself? Final hour of trade coming up. Nifty Financial Services Index plays out its final weekly expiry. Mitesh is with us. Mitesh, it was coming. It was coming. It came. Finally, some green on the screen. When we talk at around 2:30 p.m. on a day-to-day basis, kicking the can down the road, hoping for that bounce. But you were clear yesterday. Cut your shorts. This is not the level to short the index. Where do we go from here?
I think, Nigel, that's the way to approach trading. Good afternoon, because we will not know what point the markets will reverse. But what you can, possibly do is make a guess, which is, backed up by some kind of statistical numbers, moving averages, oversold levels on indicators, etc. And I think what was very clear was the extreme oversold reading means that a bounce back was due. Now, I was looking at a bounce back on Thursday evening as well. It didn't happen. Sorry, on Monday as well, it didn't happen, I think, and then today it happened. So difficult to guess these kind of things, but the good thing is that the bounce back has happened, and now it's not looking like it will slow down very soon. So while the bounce backs tend to be choppy, I think what is important is that the Nifty now holds about 23,620, 625 zones, which is roughly about 70 odd points lower. And if that happens, then I think, this could possibly see some continuation on the upside. And 23,850, broadly 850, 880 is my zone where I think the Nifty will head towards in the next 2-3 days. There will be, as I said, some, bout of volatility. So be prepared for that. But as long as we are not breaking 23,620 on an hourly closing basis, things should be at least up in the short term. Having said that, the stock calls that I have a buy on granules with a stop at about 539 for targets of 570. That's, actually it broke the level of 540, which is an important pivot, and then came back and captured it again. So I think in the short term, that could be a bit of positive for the stock. And the second stock, which I have on my list, is a buy on Indigo, which it's come on the buy list after a long time. Indigo is a buy with a stop at about 40.35 for targets of 41.50.
Okay, all right, Mitesh. So we'll monitor that, and thanks for those trades as well at this point. So 23,620, I think, the hourly level that Mitesh mentioned. So hopefully we stay above it and go home with these gains. Well, let's talk about PSU stocks, right? I mean, they are weaker in trade. In fact, Nifty PSE has seen a fall of about 20% from its peak on the 1st of August. Some of the factors, and just to sort of summarize and put things in context, Hormuz is here. Hormuz.
It's been a while since we spoke about PSUs, right? And they're back in the reckoning in today's session. Some bit of relief coming in from the lower levels. Almost every constituent of the PSE index is currently trading with gains of anywhere between 1% to even 5% for stocks like Cochin Shipyard or IRFC. And most of these names have corrected anywhere between 30 to 50% from their respective record highs that they had made in the month of July and in the month of August. Now, there are plenty of factors behind this fall, right? There was earnings pressure, lofty valuations. Some of them have run up too fast, too soon. And that showed up when the earnings eventually began to catch up, particularly in the first quarter. Now, if you look at the railway PSUs, take a look at this. IRFC, IRCON, RVNL, RailTel, all of them down anywhere between 35 to 50% from their respective record highs. And most of them had made their records in the month of July. The same goes for the defense PSUs as well, barring BEL, which is the latest Nifty entrant, is down 15% from its peak. But there are names like Bharat Dynamics, there are names like HAL. Bharat Dynamics is almost halved from its record highs. HAL2 is down around 30%. The shipbuilders at one point of time were the toast of the street. There's almost every single day they would move up 7, 8, 10%. But look at the fall that they've had from the peak. Mazagon Dock down 30%. Both Cochin Shipyard and Garden Reach have halved from their peaks that they had made in the month of July. Now, there's been recent developments as well. You just heard the DPAM secretary on the capital restructuring norms that have come up on the bonus issue and the stock splits as well. Mazagon Dock has recently announced a stock split where it will split one share into two, and NMDC 2 will issue 2 bonus shares for 1. So PSUs are back in the reckoning, at least some bit of relief coming in from lower levels. But of course, it is now time that the earnings finally began to justify the up move in the price.
No, absolutely. Hormuz, thank you very much for that. I think Yash is also standing by. And we're going to just talk about one more space here. And that is the life insurance space. If we can have names like SBI Life, HDFC Life, Max Life, LIC, there is some pressure. Otherwise, sort of up and up kind of a day, life insurance and insurance stocks are seeing selling pressure. Yash is standing by.
I think let's go across to Sudeep first.
We have Sudeep with us. Go on.
Yeah, we'll get Yash back to explain that to us why exactly, some of these insurance names are under pressure after the commentary that came in from the finance minister as well in terms of bank insurance. So for the time being, let's get it in. Sudeep. Hi, Sudeep. Good afternoon. Good to see you in. We had my colleague Hermes that was just telling us about how these PSU stocks have seen a sharp correction, but now they're gradually bouncing back. There are a few very good themes out there. Some of them run ahead of themselves. Some of the defense themes, railway themes. Any particular PSU stock that you like?
Well, I do like quite a few of PSU stocks, Nigel. And you're absolutely right. There are good pockets amongst PSUs, but unfortunately, most of them have run quite a lot. And at some level, the valuations were looking really rich. some bit of correction is par for the course, and I think that has happened. Look at a company like a Mazgaon Dock. I think, fantastic company, great performance. Even look at Q2 numbers, it was fantastic numbers. But of course, the valuation at above 5,000 per share was looking really rich. Now around 4,000, for a long-term investor's point of view, with the kind of corporate action they're talking about, it should be good for a long-term investor. I'm not saying 4,000 is the right price. Maybe a little bit of more correction can make it realistic, but it's a good company and one can look at. Amongst other defense companies, I like the defense electronics space, and BEL in that space stands out as a fantastic company. The valuations are not cheap. But again, from a long-term investor's point of view, this can definitely be looked at. The other pocket of PSU, which I have been liking for last 1.5 years, has been the power sector. I think there is a structural positive momentum in the power sector, and that's going to continue for the foreseeable future. The way the power demand has gone up, the way the power companies are performing, the way the leakages have been plugged, I think the entire ecosystem is benefiting from that. So an NTPC, of course, there is an IPO going on of the NTPC Green Energy. Whether it's some of the other power ancillary power equipment manufacturing companies like BHEL. I used to kind of dislike BHEL because of subpar performance on a continuous basis. But last quarter the performance did surprise the market, and if this continues, I think BHEL also can be looked at sheerly on the base of the fact that the number of orders they're getting, the kind of opportunity they are sitting on is huge.
Okay, well, Sudeep, just hang in there. I want your thoughts on life insurance companies as well, because I was saying earlier, stocks are lower, and this is after the finance minister's comments, basically urging, trying to dissuade banks from selling insurance products, asking them to focus on their core banking business. Banks are a large part of the distribution channel for insurance companies. Yash is here with the worry and what is keeping stocks under pressure. Yash.
Well, Prashant, all life insurance stocks secularly are lower in today's trading session, and that, as you rightly pointed out, has happened after finance minister's advice to ask banks to deter from selling insurance and focus more on their core banking operations. Now, important question is, how does it impact insurance companies and their business? As you said, insurance companies get a large portion of their business from the distribution channel of various banks through bancassurance distribution. And in a situation where that distribution channel comes under threat because of any external reason, that large portion of business gets threatened in the interim period. Now, we've done a simple analysis in terms of which insurance companies could get impacted the most and which could get impacted the least. SBI Life Insurance gets impacted the most because of this advisory from the finance minister. ICICI Prudential Life and LIC both are relatively, the least vulnerable companies when it comes to this particular advisory on the bancassurance channel. Why SBI Life gets impacted the most? The company receives 60% of its business or premium from the bancassurance channel, largely the State Bank of India. Now, for a company of the size of SBI Life Insurance, it is very difficult to shift from one distribution channel to another distribution channel. And in the interim, the fear is that business could get impacted in the transition from one to another. Also, because the distributor is State Bank of India, which is a public sector bank, it will be easier for the government to direct the course or the direction of business at State Bank of India, and that could also hurt the business. LIC, least impacted, gets only 4% of its business from bancassurance channel. ICICI Prudential Life gets 29% business, but ICICI Bank is not selling any of the large premium products for ICICI Prudential Life Insurance. They only sell term life insurance products, which are very low premium products, and hence business won't get much impacted. For Max Life, it receives 52%, right. HDFC Life 65%.
All right, Yash, thanks very much for that. Sudeep, I mean, it's not a directive, right? I mean, it's just the FM urging. But of course, markets pay attention when the government speaks. Your thoughts on your thoughts on stocks, as you heard Yash explain. Banks are an important channel.
Absolutely right, Prashant. See, a couple of things. One is, as you rightly said, this is not a directive. This is just a FM urging banks from more, I would say, mis-selling of insurance products. If you're rightly selling a product, I don't think there should be any problem. The problem is when the mis-selling happens, and that does happen. So the government's efforts, IRDAI's effort in controlling mis-selling is welcome. But I don't think this channel is going to go away. It's a bit of a premature and I think overreaction as far as the market is concerned. Bank assurance is a very, very well-established channel, and it will continue. And look at the entire life insurance space. We have been positive. IRDAI is talking about allowing 100% FDI in insurance. I think that's a big, big positive, which may or may not happen, but that's the direction in which we are moving. IRDAI also rightly feels that significant amount of capital needs to come in the insurance space, and that's the reason why they want to open up insurance. So I think these are very positive developments. Insurance penetration by any yardstick is significantly low. So the well-established players in Indian market have a long, long runway. So I'm positive in spite of this fall, what we are witnessing today. I think it's a great space to be in from a long-term investor's point of view. And, by and large, I think, you can go and pick up LIC. I think they have started performing well, and a lot of parameters are indicating improvement and future performance as well. I do like SBI Life. I don't know what is going to happen with this bank assurance thing, which is being talked about, but otherwise SBI Life also is a good bet.
Okay, all right. Sudeep, what about Honasa? Out of nowhere, the stock is down 20%. The numbers were disappointing, and it's down another 10%. More than it's not a company-specific issue. It hurts investors. When these sort of instances take place, because it was way above the IPO price. Now it's way below. But do you find value at these levels of 265, or do you think things are too murky? You'll wait for things to clear out, let the management come clarify, and then you'll take a fresh call?
Well, absolutely, Nigel. I think I'll wait. Things have suddenly gone south in a big way. And the problem is in their core Mamaearth portfolio. They need to do something. They need to improve distribution as well. So there are a lot of issues which needs to be clarified and explained by the management. Let things settle down. I think there are many competitors and many other products which are competing for the same space. So unless things are clarified and things are suitably amended or suitably addressed, I think it's better to stay away. So I'm not going to take a call whether after this 20-30% correction, this is the right price to pick up or not. Let's wait.
All right. We were just, that's the view on Honasa. And you were talking about, I think, LIC earlier. LIC came to the market at about 872. I just checked. Stock's at 900. So it's basically gone back to, and of course the high was up north of 1,200 rupees. As Sudeep said, second quarter numbers were very strong. There were, I think, a couple of upgrades as well, but really has struggled. From the lows, of course, it's still up quite a bit, because after the listing, it fell down to about 550 odd levels. But from the highs also now, it's come off a decent bit. Sudeep, thank you very much for joining us. Good speaking with you. Thank you for your time. We'll take a quick commercial break here. We'll have Nikhil Ranka with us from Nuvama Asset Management. We'll talk more markets with him on the other side.
Fiscal 3031, we would be investing close to $70 billion in India and maybe $2 billion outside India. Are not yet the factory of the world. Let us first become the factory of the world, and then we should open up our doors for competition. Let there be no tariffs, nothing. I mean, United States, even after, let's say, 100 years or 150 years of developed nation status, even today they have tariffs. Europe is putting tariffs, right? And we are saying that we should open up. Then we will kill our manufacturing here. We are not a great manufacturing country in any case. Today our GDP, manufacturing GDP is only 17% of our GDP, right? And we must get to 25-30%, what China is. But if you open up and we become liberal, then we will kill our industry.
So you talked about tariffs. Donald Trump says tariffs is the favorite word that he has in the dictionary, and he has promised that he is going to go full throttle as far as tariffs are concerned. What is that going to mean? We don't know the quantum, we don't know what finally will happen, but given the threat and what he's done in his previous term, what will it mean?
No, what Donald Trump is, in my opinion, he's very clear. He is a very clear-headed guy, whether right or wrong, but he has a clarity of thought. And he says that for me, America is first. I want to build America. I don't care about the world. For me, America is the world. And therefore, I want my industry to grow. I want America to grow, American industry to produce goods. It's not that Chinese should supply to me and then I will consume. I don't want to become only a consuming country. I want to produce and consume. So therefore, I want to put tariffs. Yes, tariffs do make you let's say lethargic. You become more uncompetitive to an extent. So therefore, you have to gradually bring down the tariffs to become competitive. But you have to allow the kid to grow up before you start running the race.
So let me throw that argument back to you. You said you have to allow the kid to grow up. So where are we, sir? Haven't we adulted yet as far as Indian manufacturing is concerned?
Not at all. Not at all. That's what
Teenager or preteen?
Preteen.
Preteen?
Yeah, we are just kind of 4-5-year-old.
Really?
Yeah, absolutely. In manufacturing.
Yeah.
Because we, you see, China, if you open up the records and see, China in 1990, what kind of protectionist China were? In 2000, what was their protection like?
Okay, welcome back. 180 points. So we're at about 23,630. So coming off, and there's a bit of a sharp downtick, which you can see, which has emerged just in the last couple of minutes or so of trade. Maybe just take a quick look at where this is coming from. I think Reliance perhaps is the reason. RIL is, if you can pull the intraday up, it's seen a sharp and is going down as we speak. So from 1265 odd levels at about 250 or so. We've basically given up 10-12 bucks, but that's RIL and it's the largest weighted name. And that's the reason why it's showing up on the Nifty in a pretty stark way as well. So that's the picture. By the way, ICICI Bank is another one which is coming off. The intraday should tell you the same story. Maybe SBI as well. So actually, these are the three names, but Reliance more than the other two responsible for the slight dip that we're seeing. Nikhil Ranka is now with us. He's Chief Investment Officer, Equity Alternates at Nuvama Asset Management. Nikhil, welcome to the show. Thanks for joining in. Nikhil, by the way, was, at least as far as I can remember, one of the first, when he joined us back in September, to flag off the risk of movement of money to China and how the market here could see some FII outflows. I'm not sure, Nikhil, we've spoken after that, or have we once in between? But I remember that pretty clearly. So are we at the end of it now? So just to complete that entire point.
So good afternoon, Prashant and Nigel. And thanks for having me on the show. We haven't spoken, so we were cautious on the markets September end, and we had highlighted this risk at that point of time that India may see some sort of FII outflows due to reallocation to China. Now what we have done is we went back in time, Prashant, and looked at the history of deep market corrections. And we found a very interesting data point that every 2 years, Nifty does have a 10% market correction for whatever be the reason. So if you look at 2016, there was this Brexit referendum. 2018 was Ireland FS crisis. 2020, you had COVID. 2022, you had the Russia-Ukraine war. And now 2024, we again have, because of FI outflows, this 10% fall. So the short point I'm trying to tell here is that it's market's own way to flush out the excesses and weak hands. But then what you have to also see is every time we have seen this sort of deep correction, over the next 12 to 15 months, markets have gone and made new highs. Now, if you look, juxtapose valuations and positioning along with this deep correction, today, when we are looking at FY26 numbers, we are basically looking at an EPS of 1250 on the Nifty, and we are trading at 19 times FY26 earnings. The moment, 9 months, 12 months down the round, we will roll over to FY27. this 1250 EPS will look more like 1400. And then if you apply a median multiple of 20 times to that, the fair value of Nifty will come closer to 28,000 levels. And if you look at the positioning, the FI ownership on NSE 500 is now closer to 16%, which is almost a 12-year low. So therefore, my sense is that this is the time that one has to be courageous and get excess liquidity deployed in the markets and be patient for 6-9 months. Investors will get rewarded for their patience. If the index itself will give you 15-17% returns over the next 12 months, individual stocks will give you far higher returns, 25-30%. And therefore, we are now completely changing our stance, and we feel that this is the time to be courageous, go out and buy the markets.
Good to hear, Nikhil. I just request you to stay with us. Earlier you were sounding a little bit cautious. Now you're saying we've got that pullback. It's the time to be courageous, put some money on the table, and in fact, play out the next 12 to 15 months or so. Nikhil, request you to stay with us for the time being. We just need to move and change focus. Focus on Indian hotels, actually. The company has announced a 2030 strategy at its Capital Markets Day event today. Mangalam caught up with the MD and CEO of Indian Hotels, Mr. Puneet Chhatwal, started by asking him about the company's margin aspiration. Let's hear him out.
When we started or embarked on the journey of Aspiration 2022, nobody believed we'll do 25%.
Yeah.
Then we came to Ahvaan 2025 when we communicated 33. That's the first time the discussions came, you can do 35. Why don't you communicate 35? I think in a high growth company, you have to be very prudent while communicating margins. And this time, we're saying 350 to 700 and a majority of that growth coming in new brands with a combination of capital light and capital heavy. The management will make all possible endeavors to deliver good, healthy, industry-leading margins. Now, whatever that industry-leading is in 2 years, 3 years, 5 years, I hope we are the leaders. And that's what we can promise. But it was more prudent to promise doubling of margins coming from 16. Now at 33 last year, we can't say it will be 66.
Obviously.
Right?
No, so you said you will be industry leading. Even at your levels right now, you are industry leading. In fact, by the industry, it's not only India, but globally as well. So from here on, are there more downside risks to the margin? If yes, then where do they settle?
I don't think. I think the sector per se has had a great learning through COVID.
Right.
This is the only sector that worked besides the airline sector with zero revenue. So if you work with zero, you, I think, have learned a lesson for your life. And I think that is why you see when companies are announcing results on a global platform, doesn't matter whether it's a global major, regional major, top brands, everyone is reporting very healthy margins because they have got a very nice grip on the costs. So the question of downside for me doesn't arise. I think especially for India, where India stands today, 5th largest, next year 4th largest, in 3 years from now 3rd largest economy, I think it's the beginning of a boom period for hospitality, tourism and leisure sector.
Let's talk about the 700 portfolio that you will have by the end of 2030. From what you have right now versus what you will have in when it is 700, how much of that will be Taj? How much of that will be Claridge's? How much of that will be Ginger? We're just trying to understand, where the incremental brand share would be, and also the incremental geography share. Currently, you're present in all of the metros. A lot of people are talking about tier 2, tier 3 towns, etc. So if you could give us that portfolio mix.
It's a very good question, Mangalam. I think 60% of our growth going forward will come from the non-Taj portfolio or our traditional properties and selections or in Vivanta. So a lot of the growth will come from our newer brands, especially Ginger, is expected to grow exponentially. We expect to grow rapidly the Tree of Life brand. These are small boutique properties. However, and having said that, we have grown Taj from 50 to 120 in the last 7 years. We have grown Ginger from 46 to 100. So which was the bigger winner is the Taj. And in terms of number of rooms, of course, it will be the Taj. And it has to be the Taj. It should be the Taj because this is the world's strongest hotel brand. It has the potential to become the #1 brand in terms of scale in luxury segment across the globe.
Right.
Number two, it's our biggest cash cow. It is not just a brand, it's an emotion. It gets us the maximum events, whether G20 or weddings or any other event happening in the country. And number three, Tajness is what we are known for, which comes with the core values of Taj, which stands for trust, awareness, and joy.
All right, seeing revenue double by the end of 2030, which is great news. And actually, the stock has been an outperformer. You pull up the chart, of Indian hotels in the last 1 month or so, and you pull up what the mid-cap index has done. It's actually been a big outperformer, and the commentary that's coming out as well is fairly strong. So that stock, in fact, over the last 1 month, it's up 10%. And we'll just plot that mid-cap index or a small-cap index as well up for you. You'll see the way the stock has outperformed. That'll be up for you in just a bit.
Nigel, sorry, just look at the market, which is coming off. It's coming off sharply. And I think the reason is, I'm not sure if this is, we'll have to confirm this, but there are some outlets saying that Ukraine has conducted its first strike using these, long-range cruise missiles inside Russia. I'm not sure. We'll have to confirm this with some credible news sources. But if this is true, then I think this is really bad news. I can't spot it, at least in terms of in terms of any sort of Bloomberg or the FT, etc. But a handle Redbox Global India news handle is carrying it. I'm not sure if this is really true. Remember, just over the weekend, you had news coming in that the Biden administration has allowed Ukraine to use these slightly long-range cruise missiles for strike deep in Russian territory. And we know for a fact, because the Russian president Vladimir Putin has said so in so many words, that allowing Ukraine to use these missiles would be essentially absolutely the red line. And that would mean that Russia is directly in conflict with NATO, and that US has entered into the war and not sort of fighting from behind the scenes. I'm not sure if this is the reason. Yeah, there you go. From Bloomberg, information coming through. And I think that is the reason why the market has sold off the way it has. I mean, from the high point of the day, we've given up all the gains actually.
100 points.
So the high was 23,780, and we're at about 23,540. So 200 points, have come off on the Nifty from the high point of the day. So this is very, very worrying news flow coming through, and this is something which we've been sort of highlighting as well. That is it possible? And I think I remember Christopher Wood of Jefferies saying that Ukraine and Ukrainian President Zelensky would want to accelerate and push Russia and sort of the wider Western Western countries into a conflict, escalate the situation before Trump takes office, because Trump has said very clearly that he wants to end the Ukraine-Russia war. He's called Zelensky the greatest salesman in the world. So this is escalation right before Trump takes charge on the 20th of January. But there is still time for that. And this is really bad news. There were, of course, once this authorization from the US administration came for use of these cruise missiles by Ukraine, over the weekend, I think it was on Sunday, Russia had launched one of its largest strikes against Ukraine, missile strikes against Ukraine, firing some 120 odd missiles. And now, according to Bloomberg, Ukraine has used some of these missiles against Russia. This is a pretty volatile situation as things stand right now. Nikhil is with us. Nikhil, this is, of course, straight out of the blue, and we're just talking about it as it's happening, as we put the news out. Any thoughts at all?
So, there was some news flash on Bloomberg. I had also read that, Prashant, that Russia has allowed to change the doctrine for use of nuclear weapons. But my sense is that a lot of other government heads will intervene in this issue, because use of nuclear weapon is a very serious issue. And my base case will still remain that, nuclear weapons will not be used, because that could be disastrous for the whole world in that sense. So the base case still remains that, some sort of mediation will happen, and the use of nuclear weapons will not be done.
Okay, all right. Got that. We'll have to wait by for further clarification on that front, though for the time being, the markets have come off the top. Nikhil, let's refer to the year end now. The next big trigger is the state elections, with Maharashtra being the big state in focus. What should the market reaction be if we get a favorable verdict with the BJP-led government coming back and holding on to the state of Maharashtra? What would the reaction be? And if in case they don't, then what kind of a knee-jerk reaction should we expect?
So, Nigel, my sense is a lot of bad news has actually got priced into the markets in that sense. And eventually, if you see state elections have had very minor effect on markets in the longer run. It's more the central government that matters to the market. However, having said that, Maharashtra is a big state. And to that extent, there can be some short knee-jerk reaction that the markets can see, but it should be short-lived. I don't think that it will have a very far-run effect on the markets in the longer term, even if there is some loss for BJP in Maharashtra. Given that it's an extended weekend and we will have exit polls coming tomorrow, the markets just wants to go easy into the election results. And if the verdict is favorable, then I think Thursday onwards, the market should be back on its path upwards.
Right, and you said show some guts now, put some money on the table after this correction. If that's the case, what's the top theme?
So, as I said, autos is something, they have had decent correction from the top. We have seen in the two-wheeler space almost a 20% correction. And if you look at the monthly sales that have come out in the festive season was very strong for the auto names. Inventory levels have now reduced to less than 30 days for a lot of these auto names, and valuations are also now very reasonable. The two-wheeler space in some of the names are trading less than 20 times. Even on the four-wheeler space, valuations are 1 or 2 standard deviation below mean. So autos clearly is one of the themes that we will look to buy in this correction. The second theme, as I said, on the banking side, especially if you look at some of the banks which have MFI book as well, even there, given the stress that we have seen on the MFI space, we've seen almost 25-30% erosion in stock values from the peak. No doubt there has been some stress on the MFI space, but if you look at the commentary of management, most of them are saying that Q3 should mark the peak of stress for MFI, and Q4 onwards things will start to normalize. If you put this in context with the fact that most of these names are either at book or below book value, these names could give a decent upside over the next 9 to 12 months.
Okay, all right, Nikhil, we appreciate you joining in. Select themes look good. We'll have to see how the geopolitical issue pans out. And post this recent correction may be part of the bad news, if at all, with regard to the outcome of the state elections as well, is in the price. Appreciate you joining in, wishing you a good remainder of the evening, and we look forward to chatting up with you rather soon. Well, time to slip into a short break. On the other side, Mitesh is waiting for us. He'll tell us about the technical picks, and Nimesh as well is waiting for us. He'll tell us about what he's picking up on D-Street Chatter.
They are today. Today they are opened up because they become the factory of the world. I wanted to export steel in 98, 99 to China. I was not permitted to do that because China had tariffs. They removed the tariffs, but now today we have 0 tariffs on steel. Chinese steel, which is surplus, they are nearly 60% of their capacity is surplus capacity. Yeah. So it comes via Japan, Korea, Vietnam, Malaysia to India at 0% duty.
Let me ask you for your comments, wearing your former Cisco hat, on what we're likely to see happen on the infrastructure side, on the chip side, with the wars that are currently underway in the industry. How much are we likely to head into a phase of significant consolidation? Is that something that you believe is just a question of timing? It's not if, it's when.
Well, it depends on the three categories that you covered. Let's start with semiconductors. I happen to be very close to everyone from NVIDIA to AMD to Broadcom to others in terms of the industry overall. All of those are very active in terms of consolidation, movement into AI growth, and candidly, all of them are very active in terms of investing in the India and U.S. corridor. I don't think you'll necessarily see a consolidation there. I think you will see challenges to NVIDIA evolve because clearly, if you want to know how the AI is going, it's much like Cisco when Cisco was the leader in networking. If you want to know how the internet was going, just watch Cisco's growth to 60 or 70 or 80% per year. NVIDIA is the bellwether in terms of the industry, but others are going to focus on it. To your question about cybersecurity, you're right. It is set up for consolidation. I was just with a customer advisory board yesterday, interestingly enough, with Pindrop, talking about the deep fakes, and the 20 customers there said, John, we have an average of 50 cybersecurity companies in our environment. They don't talk together. That one's probably set up in terms of more of a consolidation. I hope to play a role there in terms of my startups. For people in the room, if you want to have a safe future, become an expert in AI and cybersecurity. The two of them will come together in terms of resolution. In terms of your big question, Shireen, I think this might be the first time ever when you go from mainframes to mini computers to PC, client servers, to the internet, to the cloud, and now to AI, where the prior generation might actually produce half the leaders in the new technology. That's not occurred before, but I think with the hundreds of billions of dollars that Microsoft and Google and Amazon and Apple and Meta are putting in, they will be a force here, and then I think you will see some of the players in the room, hopefully some of mine as well, also become a force. So for the first time, the large tradition.
Welcome back. Well, all those 200-point gains that we were talking about, it's almost, washed away right now because we're up only around 25 points approximately. So it's been a good trading session, but these geopolitical tensions have come back into play. And that's the reason why the markets are looking a little bit nervous. Nimesh joins us to help us out with what he's picking up on D-Street Chatter. Nimesh?
Hi, Nigel. As you rightly pointed out, the fresh geopolitical concerns is something which is the reason why you've seen a sharp 200 points fall in the Nifty in the last half an hour of trade. Nevertheless, there was a good recovery in the first half, and largely because the market looks so oversold across large cap, mid caps and small caps. So maybe that's the reason why we saw a bit of a recovery in the first half of today's market. The good news is that the FI selling intensity has been much lower in the last couple of days, and looks like the large part of the FI selling seems to be largely over. That's the overall feedback from the dealings as well. I guess from the near-term perspective, while geopolitical risk is something to watch out for, the Maharashtra election outcome is going to be equally important as well. We have the results on Saturday, so next Monday is when we'll see a clarity on which way the markets tend to switch. I guess 200 DM is also going to be very crucial from a technical point of view. The good part is that today we've seen an across-the-board recovery in the broader market stocks as well. The portfolio looks slightly better off after today's recovery, but I guess as you also pointed out, the geopolitical risk is something need to keep an eye on for the next couple of days.
Got that, Nimesh. What about individual stocks? What are you picking up?
Well, Nigel, now that the earnings season is almost over, I guess the trend of blocks are going to happen very soon. So I'm identifying a couple of names where there is an expectation of large block deals to come very soon. GET&D is the first name. There could be a large block. Nearly 15% equity could change hands. ZF Commercial, we saw last quarter as well, the promoter sold a large chunk. Again, there is a possibility of a large block coming in ZF Commercial as well. And also in Piramal Pharma, the buzz is that the private equity may sell some large stakes. So these are the few names where there could be large potential blocks in the days to come. The second name is APAC Durables. There was a feedback last week as well that some larger HNIs have sold after the recent rally. There is a large block today. I understand an FI was a seller and some investors were buyers in today's block. So disclosures, if there is any, could be quite interesting in APAC Durables. The third name is Kiri Industries. This is surprising. Overall weak market. This stock has actually outperformed. This month, the stock is up 33%. The volumes are on the higher side. I understand some larger HNI investors are quite active buyers as well. So maybe something is brewing in Kiri as well in the last couple of days. And the last is Trent. We've seen a good recovery in Trent as well in today's market. In fact, post the Q2, there was a sharp sell-off. But at lower levels, I understand a leading domestic mutual fund has been aggressively buying Trent in the last couple of days. And today also there are buy flows. at leading FI desk.
All right, Nimesh, thank you very much for that. So those are individual names coming through. I mean, how the market has come off, right? I mean, an hour back, it was nicely cruising. When we started the 230 at 230, we had, we were near the 23,700 plus minus, and now we're under 23,500. And news, of course, coming in from Russia, Ukraine, which is one of the theaters of war. Which, I mean, was in the backdrop. I mean, the wars continued, has started in 2022 and has gone on for about 2.5 years, but it was fading in the background. But suddenly, it seemingly has entered a pretty dangerous phase, for the reasons that I explained earlier. This is, of course, Bloomberg, which reported that Ukraine has, fired off some long-range cruise missiles with the sign-off from the U.S. administration into the Russian territory. This is, once again, I want to make it clear, news which we picked up from Bloomberg, and Bloomberg in turn is quoting a Ukrainian news service. So just to make it very, very clear, but markets have reacted very sharply, not 200, but almost 250 odd points off the day's highest point now. Is what we've seen. We'll talk more about this. Mitesh is with us with what can one do in terms of trades. Mitesh, very different looking screen suddenly. Your sense?
So I did mention that bounce backs can be choppy, but this choppy was beyond to understand and imagine at the start of the show. But I think the oversold situation still persists, and I still am hopeful that unless until the Nifty starts breaking below 23,400, I think there's again a chance that that could be retested, and we might make one more attempt to 23,750, 850 zones. So I think these are the levels which I'm watching on the upside. With that, I'll take one BTS and one STBT call. Maruti, I think is interesting. So we'll take a BTST here with a stop at about 1,970 and a target of around 11,050-60 can be looked at for tomorrow. And RBL bank is on the negative side. So STBT here with a stop at about 158 for targets of 153.
Okay, all right, Mitesh, thanks a lot for that. Well, time to slip in a short break. As we do that, here's a very mesmerizing performance by none other than PVR's Ajay Bijli and his music band at the CNBC-TV18 Global Leadership Summit. Help me make the most of freedom.
Maybe 2 or 3 of them will really make this transition and be in leadership roles. And again, I think it's the startups that are going to light it up. For those of you in the room, regardless of your industry, manufacturing, government, healthcare, you've got to have a AI strategy and foundation. And as investors for FDI others, they're going to say, where are you on your AI implementation? Where are you in terms of driving your productivity at 7 to 10% a year, which I think you can with AI. 2025, some predictions. I think you'll see 2025 be the year where AI crosses the chasm. Everybody talks about it today, but if you talk to the average person in India or the average person in America, it is not affecting their day-to-day activity, either at work or otherwise. By the end of 2025, I think we will see it in a broad level at all of our, both of our countries and in all of our business and personal lives. It's going to move with tremendous speed and excitement. Disrupt, or you're going to be disrupted.
do you think is the state of the theatrical business right now, Karan, and where do you think it's going to go? I mean, we do talk a lot about phases within this business, and you have your ups and your downs. We're probably in a cycle right now, which we've never really been in before, where the bigger films are doing bigger business than they've ever done before, and films that might not have done this business before COVID are going through the roof. And then there are some films that come and go, even with very big stars. So it's clear that the audience seems to be becoming very discerning about that trip to the theaters. What do you think we need to do as a content industry to be able to?
I believe we have to read the room. We've got to read the room as filmmakers. You have to know that today there's a lot of content available on streaming services, but there is still a huge desire for a community watch to go to the cinema. So you have to understand, please let's make the high concept films, the films that draw you to cinema halls immediately, not the films that you have access to, on a daily basis on a streamer. So besides the tentpole films, it's the high concept films or the films made sensibly, because the star cast really today is not just the only driving force, it's the trailer. It's the very first impression. So we have to, I always tell filmmakers, this may sound like a sales pitch, but plan your trailer. If a film is giving you a great theatrical trailer, it's going to give you a great theatrical opening. Anything generic is going to slip through. Anything been there, done that is not going to work. So you have to plan your first unit. It has to be a unit that makes sure that an audience is going to say, I booked my ticket, I'm going to go see. And that is happening. As we speak, we've had a great 2 years. According to me, there have been some thunderous numbers as well, like you said. We've touched the 600 crores. We'd never done that before. We've done that. And we also have touched 100 crores with a completely new cast. A creature film with a new actor called Abhay Verma has done 100 crores. That is the power of theatrical audiences. We just have to give them what they truly want. We have to read the room, which we have to start assessing within ourselves.
Okay, welcome back. You're with us here on Closing Bell. Markets, of course, got about 40 points on it, off the highs by quite a bit, as we've been of course, highlighting, largely because of the geopolitical escalation in the Russia-Ukraine war. Jay Bala is with us, cmtcashthechaos.com. Jay, good to have you with us here. Thank you for your time. Of course, suddenly the developments take a different trajectory, different speed, and we'll have to watch what comes of it very closely. But purely price action, how would you read it? It was coming up to be a nice, decent bounce. And I think the last time you were on, you were saying we will get a bounce, which then will get sold into. But this has been, 4 or 5 hours worth of a bounce. It's already gotten sold into for external reasons.
Yeah, see, the market structure is such that it's nicely placed for a bounce because the trend line from 2023 low is coinciding with yesterday's low. And there are two possibilities here. This bounce is actually a correction of only the November 6th high to the November 18th low, which means that the low of 23,350 will break really soon. But if it's a bounce that's correcting the larger decline from 26,277, then we have little more room for the bounce to travel somewhere close to about 24,400. So we'll know in a couple of days. But 23,142 is extremely important from a very short-term perspective. If that were to have a break, we are anticipating, this market is saying that there's potential for extension of the move that started from 26,277 to extend much further immediately. Although, even the bounce comes to 24,800, even then we still have much more selling to come through. What we are seeing is just a temporary reprieve, but how much of a temporary reprieve and how much of the move is happening, which is the correction that's happening? Either the November correction, or is it the September-November correction? That's the only question that's here.
Yeah, I was thinking, even before this entire geopolitical issue cropped up, I said Jay is going to come and say it's going to be a good market to short. We came off the top already, but if we break this 23,140 thereabouts that you're talking about, how deep can we go? And I think your view is that the Nifty Bank is going to lead us down. So levels on that one.
Yeah, see, we have been focused on the June 4th low from the 1st of October, so there's no change in that in the medium term. But when it comes to the Nifty Bank, it's ICICI Bank, Kotak, and Indus are the weakest ones. Even Axis is the weakest one. HDFC right now is providing the support. But if ICICI were to break 1346, I think it'll bring the break of 49,900 on the banking index. So on both these names, there is a conditional short. Wait for ICICI to break 1243 and wait for Nifty Bank to break 49,900. Both have potential to drop about 1,100 and 47,000 respectively. So, the next leg of the decline is probably going to be led by bank, and there's an overnight risk. NVIDIA has come to an important resistance, and it's shaping up like it's ready to drop about 50%. I'm anticipating it to drop to about 75, but I don't know if it's not completely clear if it's satisfied the minimum or the maximum potential for it to go upside. We'll know it on Wednesday night, but be watchful of both these.
Okay, what about the dollar index? Where is it headed?
Yeah, dollar index is likely to cool off a bit, but the next 2 days for the dollar index is very important. If you try to take out the high registered 2 days ago, this is about 2 sessions ago, that's about 107 point something and change. If that were to get taken out, we are expecting the dollar index to extend the current leg of the move and travel to 109 more immediately than on a slightly higher time frame. So the high of 107.4, I think that's the recent high. That's very important.
Okay, all right, Jay. Appreciate you joining in. Request you to stay with us, though. We have more to chat with you in just a bit. For the time being, let's wind down the markets. The biggest losers today, the life insurance companies, SBI Life, HDFC Life, both of them very nervous, down 1.5% to around 3%. Metals came in for some profit taking. Hindalco was down close to 2%. Big boy Reliance Industries, that U-turned close to around 3% from the day's top, and that was the one that put a lot of pressure on the index. What did well? Mahindra & Mahindra and Tech Mahindra, both of them up between 2 to around 3%. HDFC Bank, that's trying to hold one end up, but that's only so much it can do, was up close to 2% even in today's trading session. And from the broader markets, a lot of stocks moved around. Max Financial was down 4%, JSPL was down close to 2.5%, Vodafone Idea at multi-month low, so that stock continues to struggle. On the flip side, Mr. Goenka says that he's ready to step down. So we have Z that is flying away up close to 6%. Dalmia Bharat made a good move, 3.5% higher. And Deepak Nitrite as well was up 3.5%. So to sum things up, it was otherwise a good trading session till the final hour of trade, till we got the geopolitical issues that cropped up yet again. And that's the reasoning why we came off the high point of the day. That spoiled the party, so to call it. So hopefully there is better sense that prevails and there is de-escalation when we come back on Thursday. But for today, that was the soap point, and that's the reason why we came off the top. On an average, though, we'll see that the Nifty actually ended above that 23,500 because of averaging of the last half-hour trade. For the time being, I'll tell you what. We'll wrap up on closing bell. You don't go anywhere, though. Markets Forward is waiting for you on the other side.
When there's no restraint in asking me questions. All right. Dil mein mere ख्वाब tere
are not yet the factory of the world. Let us first become the factory of the world, and then we should open up our doors for competition. Let there be no tariffs, nothing. I mean, United States, even after, let's say, 100 years or 150 years of developed nation status, even today they have tariffs. Europe is putting tariffs, right? And we are saying that we should open up. then we will kill our manufacturing here. We are not a great manufacturing country in any case. Today, our GDP, manufacturing GDP is only 17% of our GDP, right? And we must get to 25-30%, what China is. But if you open up and we become liberal, then we will kill our industry.
So you talked about tariffs. Donald Trump says tariffs is the favorite word that he has in the dictionary, and he has promised that he is going to go full throttle as far as tariffs are concerned. What is that going to mean? We don't know the quantum, we don't know what finally will happen, but given the threat and what he's done in his previous term, what will it mean?
No, what Donald Trump is, in my opinion, he's very clear. He is a very clear-headed guy, whether right or wrong, but he has a clarity of thought. And he says that for me, America is first. I want to build America. I don't care about the world. For me, America is the world. And therefore, I want my industry to grow. I want America to grow, American industry to produce goods. It's not that Chinese should supply to me and then I will consume. I don't want to become only a consuming country. I want to produce and consume. So therefore, I want to put tariffs. Yes, tariffs do make you let's say lethargic. You become more uncompetitive to an extent. So therefore, you have to gradually bring down the tariffs to become competitive. But you have to allow the kid to grow up before you start running the race.
So let me throw that argument back to you. You said you have to allow the kid to grow up. So where are we, sir? Haven't we adulted yet as far as Indian manufacturing is concerned?
Not at all. Not at all. That's what
Teenager or preteen?
Preteen.
Preteen?
Yeah, we are just kind of 4-5-year-old.
Really?
Yeah, absolutely. In manufacturing.
Yeah.
Because we, you see, China, if you open up the records and see, China in 1990, what kind of protectionist China were? In 2000, what was their protection levels? And what they are today? Today they are opened up because they become the factory of the world. I wanted to export steel in 98, 99 to China. I was not permitted to do that because China had tariffs. They removed the tariffs, but now today we have 0 tariffs on steel. Chinese steel, which is surplus, they are nearly 60% of their capacity is surplus capacity. Yeah. So it comes via Japan, Korea, Vietnam, Malaysia to India at 0% duty.
Today, the automobile industry, and same for Wipro, the IT industry is going through a lot of disruption.
The market falls sharply from highs on reports of Ukraine strike inside Russia. The Sensex closes in the green, but falls nearly 900 points from the high point of the day.
Insurance stocks come under pressure after the finance minister advises banks to deter from selling insurance and instead focus on core banking. SBI Life, HDFC Life, ICICI Prudential fall anywhere between 1 to 2%.
Well, plenty of stocks and news, though. Mahindra & Mahindra and Suzlon, they rise on positive brokerage notes. CLSA maintains an outperform rating on Mahindra & Mahindra, while Morgan Stanley upgrades Suzlon to overweight. PG Electroplus always rises after its arm announces its foray into EV manufacturing. Hello and welcome to Markets Forward, your go-to show where we aim to get you up to speed with regard to today's trading action and also set you up for the upcoming days of trade. I'm Nigel. With me is Vinny. Hey, Vinny.
Hi, Nigel, and thanks for that. Yes, we have got you all covered for the next 20 minutes with all the big news and key developments on D Street, top corporate voices and events to track ahead. Let's kick off the day by taking you through the market action today, Nigel.
Well, that's
an exciting day, right?
You know, actually, it was a very good trading session. You know, it had the ingredients of having a good trading session. The FIs were selling less. You had the dollar index as well that was weaker. And that's why for majority of the trading session, the bulls felt like they were in control. Unfortunately, towards the end of trade, we had these geopolitical issues that cropped up yet again. And that chart on the screen is telling you the perfect picture, right? We lost our way in the final 90 minutes because geopolitical issues between Russia as well as Ukraine, that came back into play. Now, banks and tech, both of them did well actually today. The Nifty Bank, it ended in the green, though it came off substantially from the high point of the day. At one point of time, it appeared that the Nifty Bank wanted it to make its way closer to around the 51,400 odd mark, but it came off drastically from there. Tech yesterday got smacked. Today it bounced back. So both those two pillars of the market held one end up. The problem was insurance as well as metal stocks. Both of them were under pressure. Insurance stocks will tell you in just a bit why exactly those stocks were down, while metals came in for some profit taking. But the problem, Vinny, today was the advance decline ratio. You know, for majority of the trading session, you had 5 stocks that were advancing, 4 stocks that were advancing. Unfortunately, towards the end of it, it didn't look so great because both those crisscross lines, they came closer to each other. You had still had close to 2 stocks advancing for 1 stock that's declining. I think the good part, though, is that in the near term, maybe the 23,200 odd mark could hold out from a bullish perspective.
Okay, that's how the market is looking like. Last 30 minutes is something that...
Indeed.
It was not that great for the market. But well, here's a lineup of what's up on what we have in store for you today. We start at the top movers and shakers of the day with Hormaz. Well, the stock of the day will be up next, where M&M, Suzlon Energy, PNG Electroplast, and we will give the key reasons of why these stocks were buzzing in trade today. But last and not the least, we will delve into why the key market events to watch out for. What are they for tomorrow's trading session? We'll come back on Thursday, but yes, we'll keep out for the next 2 days the key events to watch out for.
Well, let's get to our first segment then. Hormaz is standing by as always. He's going to tell us all the top movers in today's trading session. Hormaz, take it away.
What a difference 30 minutes make, don't they? Until 3 p.m. we were all for a very good trading session heading into the holiday, but then some geopolitical tensions and we were sharply off the highs. But the day belonged to PSU names, as the broader markets did fairly well for a better part of the session, and almost every constituent of the PSE index ended with gains of anywhere between 4 to 5%. Of course, they've corrected substantially from the highs, so some bit of relief coming in from lower levels. A lot of brokerage commentary came in through the day, and Suzlon was one of the first ones impacted because of it. Morgan Stanley coming in with an upgrade, a 5% upper circuit delivery, where Elara is expecting a 73% upside. Indian Hotels hitting a record high in today's session, and Indigo and M&M too seeing some positive brokerage commentary coming in this morning. There were a lot of stocks in the news as well. PSP Projects at one point was up 12.5% on the CNBC-TV18 news break. Man Industries on plans of selling its unit on the 21st, and that stock was up 6% as well. Z Entertainment, Bharat Forge, GMR, all of them were off the highs of the day after the news of those geopolitical tensions emerged, but had a good day nonetheless. And lastly, some stocks that were doing well on the back of very strong volumes. Honasa was an outlier, of course, another 11% down today after a 20% lower circuit yesterday. Akums Drugs, after a 10-day losing streak, shedding 35% in those 10 days, was a 5% circuit there. Schneider Electric, Apar Industries and Jyoti CNC too having a good day at the office on very strong volumes. Back to you guys.
Okay, thank you so much for that, Hormaz. A lot of stocks today that we were watching out for in trade. Those were the top stocks. And let's move on and bring on board our experts for today. We have Sudeep Bandyopadhyay, Group Chairman at Indie Trade Capital, joining in with us, as well as Jay Bala, CMT at Cash, the Chaos in .com, joining in with us this afternoon. Thank you so much, gentlemen. And, I want to start by just talking about a couple of stocks that Hormaz actually spoke about. When you talk about it, Honasa Consumers, we're seeing that decline coming in here. Is this a concern coming in? Because fundamentally, it doesn't seem like the main business, the Mamaearth business, is doing well. Sudeep, what are you looking at it in terms of Honasa Consumers? Maybe this weakness is something that could continue.
And you're absolutely right. The problem is the Mamaearth products are not doing well. Also, I see a challenge as far as distribution penetration is concerned, and they need to do something quickly about this entire thing. Unless they are able to articulate this strategy and come up with what they plan to do about the future, I think it will be very difficult for the market or the analyst community to reimpose faith in the stock. So in spite of the correction between yesterday and today, I would wait and watch. I don't think I will recommend a buy yet. We'll have to wait for the management to clarify the strategy and advise us what are they going to do about it before we start looking into it.
I think it's high time they come out and in fact clarify their position, so we'll wait by for that. Got that view, Sudeep, but let's focus on a couple of brokerage notes. First up, Mahindra, that was the top gainer on the Nifty. CLSA is upbeat on the stock. Sudarshan joins us to run us through what the brokerage note had to say. Sudarshan, take it away.
So CLSA has come out with a note on M&M and it has maintained outperform rating with a target of rupees 3,440 per share, implying an upside of nearly 20% from current levels. So CLSA has hosted Rajesh Jejurikar at its India Forum 2024 and Jejurikar's commentary has led to a big buying in the stock and stock has surged today almost 4%. So what has he said? Following a strong demand for SUVs, company's focus is now on transition from entry-level SUVs to mid and premium models as he believes consumers are ready to pay extra 10% for features in passenger vehicles, and example is the recent demand that company has seen for Thar SUV. Till few months ago, Thar SUV sale was around 600 units per month. Now it's more than 6,000 units per month and it sees further upside potential with the 5-door version launch of Thar SUV, and company says consumers are ready to pay extra for petrol and diesel models as they have lower GST rate compared to EV and hybrid models. Talking about the growth for FY25-26, company says new models that company is planning to launch will lead the growth. Also, over the next 12 months, company is planning to launch multiple electric vehicles with 2 EV models, XEV 9e and B6e, to be unveiled this week. Next week. So, considering all these factors, CLSA has maintained outperform rating on the stock with a target of 3,440.
Okay, and Sudarshan, do hang on with us and tell us about Suzlon Energy, because that is also something that was buzzing in trade today. Some commentary that has come in and Morgan Stanley has also given some outlook here.
That's correct. So Morgan Stanley has come out with a note on Suzlon Energy and it has upgraded the stock to overweight from equalate but has cut the target to rupees 71 per share from rupees 78 per share. It says after a steep decline the stock has seen from a 52-week high that it had hit in September, it's a good time to accumulate the stock. So what's the rationale behind Morgan Stanley's overweight rating? It says business moat and growth opportunity for wind OEMs remains strong and company is going to be beneficial of India's energy transition, and it has 5.1 gigawatt order backlog to be executed in next 24 months. It expects market share to improve to 35 to 40% by FY27 from current level of 25% in FY24, and India's wind additions will drive 32 gigawatt orders over FY25 and FY25 to FY30. As far as estimates are concerned, it continues to hold its assumption of 7.15 gigawatt of sales volumes over FY25-27, but it has lowered FY25 wind turbine generator EBITDA margin by 50 basis points to 8%, but has maintained FY26 and 27 margin assumptions.
Okay, all right. Thanks a lot for that, Sudarshan. Well, Sudeep, any view on either of these two names? Mahindra & Mahindra as well as Suzlon. Suzlon actually has seen a sharp correction from the peak, but now it seems a couple of brokerages are upbeat. Your take?
Well, I think both are looking good, definitely. M&M, we have been positive for quite some time. And we wanted the tractor business to turn around and deliver the numbers which were being talked about. I think that also finally has started happening. And, the way the rural income and the rural consumption is moving, we are pretty confident about the tractor business going forward as well. The SUV was always doing well and have been, producing good set of numbers. Their foray into EV also is on the cards and they have already announced. So fundamentally, from a long-term perspective, M&M does look good. As far as Suzlon is concerned, there's a significant tailwind and the performance is definitely improving. So again, that can be looked at.
Sure, that's the word coming in there, but Suzlon and M&M. But Jay, what's your view on the technicals for both M&M as well as Suzlon Energy? Anything exciting looking here? And, given that how Nigel was also right now mentioning that Suzlon has corrected a bit, is it the right time to enter this one? Okay, Jay, I think you are on mute. If you could just unmute yourself.
All right. I think we'll get back to Jay in just a bit and get his view on Mahindra. But for the time being, my colleague Yash is waiting by. Life insurance companies were under pressure today. Finance Minister has urged banks to deter from selling insurance and instead focus on core banking. Yash, break this up for us. And who gets hit the hardest?
Well, Finance Minister's statement on asking banks to deter from selling insurance and focus on their core banking operations was, the culprit today behind the move on insurance stocks. The reason being that insurance companies, particularly life insurance companies, get a very large portion of their business through the distribution channel of banks for their insurance products. We've done some analysis which shows that SBI Life could be impacted the most if pressure comes from the government asking banks to focus on their core banking operations over insurance. ICICI Prudential Life and LIC are the two companies which could be least vulnerable to any movement as far as Finance Minister's statement is concerned. Why SBI Life gets impacted the most? It gets 60% of its business from bancassurance channel, primarily through the distribution of State Bank of India, and it becomes very difficult for the company of the size of SBI Life Insurance to shift from one distribution channel to another, and in the interim the business could get impacted because of this particular move. Another reason being SBI, of course, is a PSU bank. It gets easier for the government to decide the direction at State Bank of India when it comes to business operations, so that also becomes negative for SBI Life. LIC only gets 4% of its business from bancassurance, so largely insulated. ICICI Prudential gets 29%, but ICICI Bank only sells small ticket insurance products for ICICI Pru Life, like term life insurance products, and not the large premium products. Hence, business is largely insulated. Max Life receives 52%, HDFC Life receives 65%, but from private banks as distribution channels. So we don't know if government statement would decide the business opportunity which these banks see through these two insurers. But large impact on SBI Life Insurance, minimum impact on LIC as well as ICICI Prudential Life Insurance.
Okay, Yash, thank you so much for that update there. But Jay, coming to you, and let's talk about these insurance names, right? SBI Life and HDFC Life. Today we have seen a fall, but not only today, in the last 1 month, both these stocks have seen a bit of a correction. SBI Life down almost 11%, HDFC Life 8-10% down as well in the last 1 month. What are you inferring from this, and would you be looking at any of these names?
See, I've been advocating to going to cash on most of the portfolio holdings since October. So that strategy still remains. So SBI Life, HDFC Life, and ICICI Pru, all of them are in a very short, in a short-term downtrend, and they're quite weak. Most of the bounces that are looking, there'll be corrective moves, and further selling is due. That's a trend for the overall market too. Whatever bounce that's coming to, it's going to be a temporary reprieve, nothing major. If you look at the bellwether stocks like Reliance or ICICI Bank or the banking index, most of them are pointing to further sell-off likely to come through. But we could have a short-term reprieve in most of these frontline names.
All right. Wanted your view on PG Electroplast as well. That stock was buzzing in trade. The stock hit a fresh 52-week high. Its arm announced its foray into EV manufacturing. Upasana joins us to help us out with that piece of news. Upasana.
Well, the stock remained in focus today as company's wholly owned subsidiary, that is PG Technoplast, forayed into electric vehicle and lithium battery assembly. While the company signed a definitive agreement with Spiro Mobility to become an exclusive manufacturing partner for manufacturing of EVs of Spiro Mobility in India. Now, PG Technoplast will be setting up manufacturing facility for electric vehicles, lithium batteries and related components, while Spiro Mobility shall be responsible for marketing, sale and distribution of these EV products, is what the company has highlighted. Mind you, Spiro Mobility has the largest fleet of electric motorcycles on the road in Africa, is what the company has also highlighted in their press release. So all in all, a positive news for the company, and stock remained in focus today on back of this.
Got it. Thanks for that, Upasana. Sudeep, any view on this name? Everyone thought after it doubled, it was done. Then it tripled. Then it's up 4 times. The last 5 years, it's been an absolute blockbuster of a stock. Has it run its course, or do you think this news gives it further wings?
Well, it definitely gives them further wings. I think, we have seen what has happened with EV companies, and, when you get into this space, I think there is a lot of traction left. I believe that with the kind of internationalization of their business which they have achieved, they have a good potential going ahead with their new proposals. We'll have to wait and watch. I think it's not a cheap stock. So if you have a little aggression in you, if you're a little aggressive investor and you are willing to wait for some time, it's not that it'll move up very fast. But if you have 1 year plus kind of a time horizon in mind, maybe you can look at this.
Okay, 1 year time horizon. Maybe we can look at PG Electroplast. Jay, what's your view in terms of PG Electroplast and your trading ideas?
Yeah, we can comfortably wait in PG Electroplast, and it's gone from $2 in 2020 to $675 today. So, it's not because of that. The price structure is pointing to price exhaustion of today's high. So, there's a good possibility that we're likely to see about 145 in a few months' time, or maybe some sort of a deep correction. But the trend is quite strong in the long term, but we need to allow for the correction to come through. I have a short call on ICICI, but I will wait for 1243 to break through tomorrow. And once that's taken out, I'm anticipating ICICI Bank to drop to somewhere close to 1100.
Got it. All right, gentlemen, appreciate you joining us, giving us a view on all these stocks. Thanks, Jay. Thanks, Sudeep, as well. Wishing you all a good midweek break, and then, in fact, we see you post that. Well, for the time being, slip into a short break. On the other side, we'll get all the top corporate voices that joined us during the course of the day. We'll also prepare you for the next trading session. Don't go anywhere.
The biggest disruption, and in EVs, the technology is a major issue. Nobody knows where we will finally go. You've often said that this is a moment of reckoning for the automobile industry. The battle is between the established mainstream auto players and how they embrace the new technology, and the startups, or upstarts, as you call them. So who's winning, and what's going to define who wins this battle? And who lasts for the next 75 years?
So there are three terminologies here. There is startup, then there is a word which I like to call most of them, which is upstart, and then us, the winners or the champions, right? So I must explain what is the difference in my mind between a startup and an upstart. In my mind, startups are those who have a build strategy. They build technology, they build brands, they build products, they build consumer experiences, they build employee satisfaction, they build a strong top line, but they also build a strong bottom line. Upstarts are those who don't have a build strategy. They have a burn strategy. They burn technology, i.e. their batteries. They burn brands by reducing price every month. They burn products in their factory, in the truck, at the dealership, on the road. They burn employee relationships with 50% attrition. They burn consumer relationship with poor service. This is burn strategy.
Welcome back to Markets Forward on CNBC-TV18. Now let's take you through the top corporate takeaways for the day. And first up, let me start with Hyundai. Now the company says that the festive season momentum is continuing even in November, and the company will grow in low single digit in FY25, in line with the industry. Management adds that SUV's contribution to overall volumes will increase, and management also tells CNBC-TV18 that the hydrogen would and could be a game changer to meet the energy needs of the country, and the company has committed to rupees 100 crore investment to Tamil Nadu government for hydrogen project.
Next up, MedPlus expects 1% improvement in margins over the next few quarters and 1% volume growth every month in the private labels going forward. On the store count, the management tells CNBC-TV18 that 400 to 450 net store additions will be done in FY25 and 600 in FY26. Finally, the management of Jyoti CNC Automation says that the margins will be maintained at around 25 to 27% band for the coming fiscal. They add that they're adding nearly around 10,000 machines per annum capacity, which will be operational in the next 2 years. The company is also looking at further order inflows in the EMS segment, which can contribute 20 to 25% of the total top line in FY26. Well, before we wrap up on the show, let's set you up for the next trading session. Well, Vamakshi joins us to help us out with all the key market events we need to be tracking. Vamakshi, over to you.
Well, absolutely, Nigel. It's a midweek holiday for all of us, so definitely a truncated week coming in. But apart from that, there's a lot of important cues to watch out for. First up is the UK CPI data that will be released tomorrow. Apart from that, the US crude oil inventories data is also expected to come through. Now, coming to the next trading session, that is November 21st, we will be keeping an eye out on the initial jobless claims that come through from the US markets. As far as stock-specific cues are concerned, tomorrow, TARC will be considering fundraising via NCDs. UPL, a board meet is scheduled tomorrow to determine price, entitlement and dates for the rights issue. And there are some other important cues to watch out for as well. Keep in mind that a part of SEBI's F&O norms will come into effect from November 20, that is tomorrow. And the ASEAN Defence Ministers Plus meetings is expected to be held in Laos from November 20th to November 22nd.
Okay, thank you so much for that, Vamakshi. But with that, it's a wrap on this edition of Market Forward on CNBC TV18. Thank you so much for tuning in. And don't go anywhere. More news and updates after the break.
This is upstart versus startup. Now, as far as startups and champions are concerned, they are the same actually. The only difference between a company like Wipro and Bajaj or a so-called startup is that we are startups with a story because we've been around for long enough to have built a story. I just told you a little bit about my story. Rishad just told you a little bit about Wipro's story. So a legacy company, I mean, they try to imply that legacy means old, you know. And the point is...
Sounds very good, does it, Rishad?
No, but there are some startups which are also not born yesterday. They are 5, 10, 15, 20 years old themselves. तो ठीक है यार, हम लोग बुजुर्ग हो गए, लेकिन तुम्हारा बचपन कब तक चलेगा, you know? So you can't keep calling yourself a startup forever. So a legacy company is nothing but a startup with a story. And frankly, the best of both worlds happens when companies like ours dedicate 10 to 20% of their resources, in my opinion, to have a startup within itself. The Freedom CNG motorcycle, the Chetak electric scooter, the e-3-wheeler, electric 3-wheeler we are making, this is nothing but a startup within a legacy company, and this is how you carry your company from your present activities into the future. So that's my definition of upstart, startup and champions. But if you give me another 30 seconds, I want to share with you what Piyush Bhai once told me in this regard, because these startup wale are very kind of intimidating because they are from the IITs and the IIMs and all that. हम लोग तो ऐसे मतलब backyard में पड़े हुए लोग हैं.
And they say that they put ice cubes in their water to drink.
Yeah, like we have oats for breakfast, but that's a different story. But I will share with you a quote that Piyush Bhai told me in this regard, and this is what I would like to say to these upstarts. And the quote is like this: फर्क बहुत है आपके और हमारे तालीम में. फर्क बहुत है आपके और हमारे तालीम में. आपने उस्तादों से सीखा है, हमने हालातों से.
I want to understand from you, what is the aspiration now on the EV side? I mean, you've got this joint venture that you've inked with MG. Take me through what we should expect in the next 5 to 10 years as far as JSW's EV ambition is concerned.
So the idea is that to give the consumers a very good product, very good quality at affordable price in the EV spectrum. And I believe that JSW can do it extremely well.
Okay, so that's the proposition, but what is the roadmap?
Hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines that we're tracking this evening. Ukraine has reportedly struck Russia with a long-range missile just days after US President Joe Biden's approval. Vladimir Putin warns of a nuclear response if Ukraine used Western missiles to hit Russia. Stock markets plunge across Europe and US. Sensex and Nifty snap a 7-day losing streak, but a late sell-off wipes off most of the gains. Mid-caps outperform. The government revises capital restructuring guidelines for state-owned public sector enterprises. mandates companies to pay 4% of net worth as annual dividend against 5% earlier. DPAM Secretary tells CNBC-TV18 that the main objective behind the capital restructuring is operational and financial flexibility. Snapchat's global CEO Evan Spiels says there is hunger in the US for a new vision after the victory of Donald Trump, stresses on the need for the new administration to support entrepreneurship and innovation. That's an exclusive. Meta opposes CCI's 213 crore penalty order for anti-competitive practices, says it plans to appeal against it. The regulator ruled that Meta's 2021 WhatsApp policy update on a take-it-or-leave-it basis is an imposition of unfair conditions. Meta claims that users were not forced to accept the update. Insurance stocks slide a day after Finance Minister advised banks to focus on core banking activities and not burden customers with insurance policies they do not require. IRDA chief warns of mis-selling and says banks should provide right products at the right price. Adani Groups is in talks to buy infra company PSP Projects. Sources say negotiations are at an advanced stage to buy a 60% stake in the company, which is currently valued at over 2,800 crore rupees. That's an exclusive. Air pollution in Delhi and large parts of North India remain near record high levels. All schools and colleges go online. Multiple flights disrupted due to lack of visibility. State's Environment Minister seeks the union government's clearance for artificial rains. India and the UK agree to resume free trade talks next year after Prime Minister Modi and Keir Starmer meet on the sidelines of the G20 summit in Brazil. External Affairs Minister Jaishankar meets his Chinese counterpart for the first time since both nations agreed on a patrolling deal at the border. Maharashtra bracing for a two-way battle as it votes in a single phase tomorrow. After 4,000 candidates in the fray for 288 seats, 38 constituencies in Jharkhand also go to polls in the second and final phase. For the first time, 5 lakh passengers take to the skies on the 17th of November, a record high in India over a 24-hour period. Indigo accounted for 70% of the domestic flights. Gukesh could become the youngest world champion, says Indian chess grandmaster and former 5-time world champion Vishwanathan Anand. Also warns Gukesh against getting carried away by the stellar run he's had this year. Well, the top story this evening in what could be a serious escalation in the ongoing conflict between Russia and Ukraine. Bloomberg is reporting that Ukraine has struck Russia territory with a long-range missile. This comes just days after US President Joe Biden allowed Ukraine to use the long-range missiles to strike the cursed region. This is the region where Russia has deployed soldiers from North Korea. Stock markets across the world, across Europe as well as US futures tumbled today after also marking 1,000 days since the conflict began in Ukraine. As these reports trickle in, a Kremlin spokesperson held a press conference and announced a significant change to the country's nuclear doctrine. President Vladimir Putin has signed a new doctrine which allows Russia to engage in a nuclear response if Ukraine uses Western missiles to strike its territory. Here is the Kremlin spokesperson speaking about the new nuclear doctrine.
It was necessary in order to adapt, to ensure an adaptation of our nuclear vision into realities of the modern day. What is the most striking example of the realities of the modern day? Authority in the White House in the United States takes a decision to use their weapon, American-produced weapons, against the Russian Federation. It's a striking example of new environment around our country. And it makes it necessary for us.
Well, meanwhile, back home, the Wall Street snapped its 7-day losing streak. However, a late sell-off saw the Nifty and the Sensex wipe out most of those gains. The fall was largely due to reports of Ukraine's strike inside Russia. Prashant Nair joining us now with a quick wrap of all the trading action from the day. Prashant.
It was a strong bounce which finally fizzled out. I mean, I think the highlight of the day came in the fag end of the trading session when news of geopolitical escalation out of the Russia-Ukraine war caused the market to take a very sharp dip. I mean, the change on the Nifty and the Bank Nifty will come up. The Nifty sold off 250 points from the day's high. The Nifty Bank sold off about 500 points from the day's highest level. I mean, till that point, things were looking very nice. We were cruising along. And of course, today also was one of the first few sessions where the market was bouncing from oversold levels. But dramatic twist towards the end. Mid-cap and small-cap indices ended in the green, about 0.5% higher, but there also gains were given back from the high point. Sectorally, PSUs came back, and I think top of the list there, of course, is defense as a pack. Real estate and autos were other two areas which did well. On the downside, there was metals, PSU banks, and energy, which was under pressure. Reliance, of course, contributed to a bulk of the pressure as far as the energy index is concerned. Now, I'll come to stocks. So on the Nifty, Mahindra & Mahindra was a top gainer, about a 4% gain. Tech Mahindra, Trent came up as well from sort of oversold levels. It's come off very sharply from its recent high. On the downside, insurers were a sort of stark underperformer after, of course, Finance Minister's comments. You had SBI Life, HDFC Life, which sort of stood out. Hindalco, I mentioned Reliance earlier, and State Bank of India were some of the other notable losers. Broader markets, advances outnumbered declines, although, of course, I mean, the gap was much wider and that narrowed as the market came off towards the end. Z, IRFC, Apar Industries, Triveni Turbine, you had Kirloskar Brothers, Hyundai, which recovered a little bit. PG Electroplast was strong from the morning. EID Parry, we had the management with us yesterday. Acum's Drug, Craftsman Auto were some of the names which stood out on the downside. Vari Energy, big pop yesterday. It saw some profit booking. Honasa, no reprieve. And you had a Max Financials, which is, of course, an insurer along with the larger insurance stocks, which also sold off. I think, tomorrow, of course, is a market holiday as Maharashtra goes to polls and Mumbai votes as well. But I think both politics and geopolitics will be important when we come back on Thursday morning. Back to you.
Right, Prashant, thanks a lot for that. Now, speaking of the markets, the rupee recovered marginally after recovery in domestic equity market and dollar rally stalled briefly in early trade. Rupee gained around 2 paise against the US dollar. Now, oil prices fell after yesterday's rally, which was driven by halted production at a Norway oil field. The fall was on account of investors remaining cautious amidst fears of a potential escalation in Russia-Ukraine war. Brent is around the $72 per barrel mark. Meanwhile, the situation in West Asia continues to remain tense. Israeli forces have killed at least 5 people in central Beirut. This was in retaliation to Hezbollah's strike that killed 6 people in Tel Aviv. Israeli Prime Minister Netanyahu has pledged to continue to systematically operate against Hezbollah, even if a ceasefire deal is reached. Meanwhile, the United Nations Middle East envoy has said that the current conditions in Gaza are among the worst we've seen during the entire conflict. Speaking at the UN Security Council, he added that the entire region is at a grim crossroad. Now, back home, the union government has revised capital restructuring norms for state-run companies after 8 years. The dividend payout rule has been relaxed, but rules governing buybacks and bonus has been tightened. Here is DPAM Secretary Tuhin Kanta Pandey speaking to my colleague Sapna Das on the implications of the new norms.
In the minimum guidelines, there were 2 conditions. One was the net worth, another was the payout of the profit. So you have 30% of the profit, PAT.
That remains unchanged.
That remains the same. The other condition, and condition was that there were 2 conditions, whichever was higher, 30% of PAT or 5% of net worth, whichever was higher. We have made it 4% of net worth instead of 5%. And the reason is that some of the CPSCs do have their own business plans in terms of capex, in terms of growth, where in their net worth condition sometimes creates a problem. So we have made it clear that, in that case, we will slightly relax it to enable them, sort of more resources for their internal generation so that they would be able to pull into for their growth. The other part was in this case of CPSCs, which are NBFCs, in the nature of NBFCs.
To name a few, sir?
For example, PFC is there, REC is there, IREDA, IRFC is there, HUDCO is there. In these CPSCs, capital is basically the raw material. They don't manufacture. They are basically capital. Their net worth is used to again raise more money and also lend. Now, net worth is important in terms of capital adequacy and other regulatory requirements. So therefore, essentially they are high net worth companies. And if you have a percentage of net worth also as an added condition, when we say whichever is higher, sometimes we would be asking them to give more dividend than what is necessary, and rather their money capital could also be used to lend more. So in any case, that also is advances our objective of giving them operational and financial flexibility in order to grow their business.
Well, here's a CNBC-TV18 exclusive. Snapchat's global CEO, Evan Spiegel, has said that there is hunger in the US for a new vision after the victory of Donald Trump. Speaking to Shireen Bhan, Spiegel stressed on the need for the new administration to support entrepreneurship and innovation.
Well, let's talk about what's happening in the US at this point in time. And I remember you did a podcast for the BBC, or you curated one in 2021, I think, and it was about the ideas to reconstruct America. And let me ask you this in the context of what we're seeing happen now with Donald Trump heading back to the White House and, Elon Musk playing the kind of role that he is playing as far as policy making is concerned. How do you see this? Do you believe that this is going to be a transformative period for America specifically? And, what happens in America impacts the rest of the world. How are you reading the changes today?
Yeah, I've always been so interested in, America's progress and some of the big ideas that have come out in American history. Because we're a democracy, we're not sort of centrally planned, but that doesn't mean that there aren't sort of big animating ideas in American history, whether that was, FDR, for example, or Reagan. They both had big ideas that really sort of changed the trajectory of America for decades that followed their presidencies. And so I think it's too early to say whether we're in one of those periods again right now, but I do think there is a hunger in the United States for a new vision, for a new big idea for what the future could look like. And I think one of the reasons why it's interesting, you mentioned Elon Musk, is one of the things America has done really well over the past 250 or so years is innovate. And I think if you look back to the period of time before America was founded, life expectancy was half what it was today. GDP per capita had stagnated for thousands of years. And I think the innovation that has come out of the United States has played a really important role globally. And so I do think it's important that that continues, that we continue this incredible arc of progress that the United States has been a part of, but also countries around the world have participated in, that I think has really been driven by democratic ideals and the idea that great ideas can come from anywhere. And we should really support entrepreneurship and innovation to drive productivity.
Well, you can catch that entire conversation with Evan Spiegel, CEO of Snapchat, at 7:30 and 9:30 p.m. right here on CNBC-TV18. Well, Facebook parent Meta Platforms has opposed CCI's 213 crore rupee penalty order for anti-competitive practices. The company has said that it has plans to appeal against it. The regulator ruled that Meta's 2021 WhatsApp policy update on a take-it-or-leave-it basis is an imposition of unfair conditions on users. Parikshit Luthra joining us now with more details. Parikshit, take us through the CCI order and what the response has been from Meta and WhatsApp.
Well, this is a big setback for Meta and WhatsApp in India. 213 crores as penalty. This has been imposed regarding a 2021 policy update whereby, according to the CCI, users of WhatsApp were compelled to accept new privacy conditions, which meant that any data that they share with WhatsApp during their normal course of usage can be shared with Meta and other products of Meta for advertising purposes. This, according to CCI, was compelling users to accept such conditions without any opt-out or review mechanism whatsoever. This, according to the CCI, is an abuse of the dominant position and a violation of the competition law. So CCI has immediately issued a cease and desist order, which means that WhatsApp and Meta will have to stop such practices in India immediately for all their products. And also what they need to do is to ensure that any further updates should have a modify, review or opt-out mechanism so that in case tomorrow, Meta wants to use the data collected via WhatsApp with any product for advertising purposes. It's spelled out properly, and there is an opt-out mechanism. There is also a review mechanism for somebody who may have agreed to that condition and wants to review his decision as well. So Meta has said this, they do not agree with this order at all, and they will be challenging this. So this is on expected lines. Let's see how this turns out in the courts of law.
Right, Parikshit, thanks a lot for that update. Now, the government has reinstated subsidies for electric three-wheelers under the PM eDrive scheme. This move comes after the annual subsidy allocation for electric three-wheelers in FY25 was exhausted. The Ministry of Heavy Industries has now sanctioned more funds for electric three-wheelers from the overall outlay of the PM eDrive scheme. Now, insurance stocks declined a day after Finance Minister advised banks to focus on core banking activities and not burden customers with insurance policies that they do not require. Yash Jain is joining us now for more details. Yash, what did the FM say and how is it likely to impact the industry?
Well, Finance Minister's remarks advising banks to deter from selling insurance and instead focus on core banking operations could very well threaten insurance regulators' vision of insurance for all by 2047. Let's hear out what the FM said.
I wish to say this for due consideration of the bank's boards. While this model has significantly contributed to improving insurance penetration across the country, it has also raised concerns about instances of misselling, and I would say added or contributed in indirect ways of increased cost of borrowing for the customers. So banks will have to look at it with a lot more emphasis on their core banking activities and not burden customers with insurances which they don't require.
Banks, which are the biggest distributors of insurance products, could be forced to prioritize banking products like deposits, FDs and loans in less than 24 hours from the same SBI conclave. IRDAI chairperson replied to the Finance Minister.
When we buy insurance, obviously this becomes a very easy place for me to access, to understand, and I would expect that the bank, as a customer, would sell me the right product at the right price. So obviously the banker channel is a very useful channel, but of late a lot of ills have crept into the system. I think we all need to sit together, thrash out that so that we restore that confidence, and it should become a distribution model which is low cost. You don't need to run after chasing customers. You have to give the option to the customer, no mis-selling, no force selling.
Insurance stocks ended lower, anywhere between 3 to 5%, a clear reflection of what the Finance Minister's statements could mean for their business. Insurers get a large part of their business from banks' distribution, and hence uncertainty on that distribution creates uncertainty on that large business which they get. Who gets impacted the most and who gets impacted the least? SBI Life Insurance business could be most vulnerable, whereas ICICI Prudential and LIC are expected to be least affected. Why? That is because in the first half of FY25, SBI Life got 60% of its business from bank assurance channel, largely that was State Bank of India. It could be a big ask for an insurer of the size of SBI Life Insurance to shift its business from bank assurance to other distribution channel, and the risk in that overall business could get impacted as far as the interim period is concerned. Also, since SBI is a public sector bank, it would be easier for the government to ask SBI to focus on its core banking operations over insurance products. If LIC is concerned, only 4% of its business in H1 FY25 came from bank assurance, hence it would be least impacted. ICICI Prudential Life Insurance got only 29% of the business from bank assurance and largely from ICICI Bank, which again is not selling large ticket premium products since the last few years and is only selling small ticket premium products like term life insurance, and hence the business would largely remain insulated. HDFC Life gets 65% and Max Life gets 52% business from bank assurance. HDFC Bank and Axis Bank primarily for both of them, the threat from them is still limited, as these are private banks and we still don't know how much a government advisory would impact the business at these banks until and unless RBI also does not decide to take the same line as the finance minister.
Right, Yash, thanks a lot for that. So some concern there for insurers, specifically private insurers. With that, it's time now to slip into a very short break. But coming up, Vishwanathan Anand has a message for Gukesh as he prepares for the World Championship final. Stay with us to find out more.
That you're targeting?
Numbers is in next 5 years, I would like to, idea is to produce 1 million cars.
And 1 million cars in the next 5 years?
Next 5 to 7 years, yeah. By 2030, let's say 1 million cars should be on the road of JSW, whether it is MG or not MG, but under the JSW umbrella.
That is one of the aspects of Mr. Jindal. You know, it's almost a blow-hot, blow-cold relationship with China, isn't it? I mean, you just talked about all the reasons why we should not do business with China. And through the COVID period, you were very clear we shouldn't do any business with China. But now you're doing business with China. You've been a joint venture for the electric mobility space with a Chinese company. So do you believe that there is a need to be pragmatic on how we engage with China?
No, absolutely. With any country. In fact, even Pakistan, for that matter, we should be pragmatic.
To deal with Pakistan?
We should be pragmatic.
Yeah.
We should not say that no, nothing doing. So when I said we should not do business with China when Galwan happened, because I was very clear that we cannot deal with an enemy state. Pakistan, for that matter, is an enemy state.
Yeah.
But still, if we work properly, you know, with a control mechanism, we should open up and do business. Because
with Pakistan?
Even with Pakistan.
Okay.
Because a very poor neighbor will always hurt us. So therefore, we should think, we should have a long term, but this is not a foreign policy discussion that we are having. But my point is that with China, we should, because China has already developed this technology on electric vehicles. Today, 60% of their new car sales are electric or new energy. India, we have 2%. And this is the way forward. We import all our fuel for the cars. All petroleum products are imported, 85–90% is imported. So it's in our interest that we transition ourselves to a technology which is domestic, which is local technology, local
So bring the technology in from China, but manufacture in India.
Exactly. Absolutely. Because technology exists in China. We must develop it over time in India, but we must bring the technology and develop the products in India.
Attributes that you believe, Mr. Murthy, that you would like Indian entrepreneurs, young entrepreneurs to focus on as we move forward?
Well, first of all, let me say that the entrepreneurs of today are so much smarter than I ever was. I mean, look, the gentleman, Harsha from Swiggy, he says he will deliver food in 10 minutes in this environment where I took until.
Now, Indian chess grandmaster and five-time world champion Vishwanathan Anand has said that Gukesh could become the youngest world champion. Speaking to CNBC-TV18, Anand also warned Gukesh against getting carried away by the stellar run that he's had this year. Take a look.
And then if we take Gukesh individually, he's the youngest ever candidate in history. Therefore, he could be the youngest ever world champion in history. He's had the better year. He has outperformed Ding, no question about that. But first of all, matches have their own logic. And so here he'll have to fight from the first game. I expect his opponent's form will improve significantly, when confronted with the reality that he's playing the World Championship. And second, in an individual match, other dynamics take over. So it's very much a struggle that will begin in a few days. And we shouldn't get too carried away with the past results at this point. The funniest story I remember is once when Gukesh had a very, very disappointing result during the Olympiad. I went to cheer him up a little bit. So I went to his room expecting to find him slightly distraught. And within 10 minutes, he was trying to cheer me up. He said, "Why don't we go and play some table tennis? So, I think you're quite affected by this game, sir," and so on. I thought that showed his composure as well.
What did you, if you don't mind, can you share what was the conversation like? What did you tell each other? Because, in such testing times, in such difficult times, it's that word of comfort or that one sentence that puts you at ease. So what is it that you tell each other when things are going south?
Well, I have had really disappointing results, obviously, at some point or the other. And it's taken me a while to get over them. I mean, and the full impact of what I've done hits me. And then, so I tried to go to his room and tell him he shouldn't just wave it away, but, acknowledge that it happened and then try to feel better about it and so on. So I was trying to get him to talk about it. But in fact, his approach was different. He genuinely pushes the past aside and starts again.
Well, you can catch that entire conversation with the 5-time world chess champion at 7 and 10 p.m. tonight only on CNBC-TV18. And with that, it's a wrap on this edition of Business 360. But before we let you go, we leave you with the visuals of a performance by PVR's Ajay Bijli and his music band at the CNBC-TV18 Global Leadership Summit. Take a look.
Come on, guys. गल मिठी मिठी बोल दस कानों विच खोल बजने ने ताशे ढोल मस्ती में तू भी डोल मंदे दे ना तू खोल चाहत के मोती रोल तेरा होता है अनमोल के दौलत से ना तोल सोनी तेनू चांद
5 minutes to come from Santa Cruz West to this place. He is a magician. He is a magician. He is a remarkable guy. Therefore, we must all salute him. We must salute him not because he may be able to do or he may not be. That's not the issue. Even to have such an audacious vision, even to have such an audacious aspiration, target, that itself is fantastic.
But let's talk a little bit about the journey to the IPO and to listing day itself. The last few days looked quite difficult, didn't they?
Oh, Shreen, thank you for having me. Indeed, I think we're now taking all a sigh of relief that the stock is up, 10 to 12%. But it's not been easy. From the time we went on the road, Zomato, which is the closest comp, I think was down about 8 odd percent. The market was down 5.5%. There was the US election, there was China stimulus, so a lot outside our control. And I think what we did well was we priced it right, where we knew we had enough book and we had a high quality book, a good balance between domestics and foreign, breadth and depth, and people who really understood the story and not who were looking to flip on day one, but also just to long-term holders. And I think the proof of the pudding came actually in the anchor book. And once the anchor book got oversubscribed by high quality names, we knew we were prepared for a jittery market. I think, did I expect it to open positive? I think that's even better. But I think we had played it right to make sure that we left enough money on the table.
That decision to leave enough money on the table, and I think this has been one of the big lessons as far as the recent IPOs are concerned, getting the price right. I mean, we've seen the debacle of something like Paytm, for instance, and you were investors there as well. That decision to get the price right, to put enough on the table, how hard is that conversation with founders? How hard was that conversation with Harsha?
So I think, like you said, I think when you've seen stocks not do well in the past, then the conversation becomes easier. I think if Harsha was the first tech IPO going public, Maybe it would have been harder, but Harsha is an exceptionally long-term thinker. He's made money for investors all throughout. So I think with Harsha it would have been easier. But generally with entrepreneurs, I think it's been easier because now it's quite clear. You are stopping your journey with private investors. You're starting your journey with public investors. And if you don't have their confidence, then that's going to play out, you know, in different ways over the next 10 years. Their confidence will be less. They will give you less room for error. And so now the formula is quite fixed. Let's leave some money on the table. Even if you get diluted a little bit more upfront, I think over the team.
Hello and welcome. You're watching Commodity Champions. I'm Manisha Gupta. Well, the global metal stocks have been in focus after China said it will withdraw its 13% export tax rebates for select producers or other products made of aluminum and copper from the next month. Well, the announcement has sparked a sharp rally in the prices of aluminum, which has already surged around 11% so far in this year. China's move is expected to curb the excessive supply of Chinese aluminum abroad. This also comes just months before Donald Trump is set to take oath as the U.S. president. Remember, he has vowed to ramp up tariffs to defend the American industry. Under his previous term in 2018, Trump had imposed a 25% tariff on steel and 10% tariff on aluminum imports, among other import duties as well. This had led to the global base metal index tumbling from 132 in January to 85 in December in the same year. How will the China factor support prices in the future, and what will Trump's return mean for the sector? Joining us now to make sense of all of that is Kunal Shah, Head of Commodities Research at Nirmal Bang. Peter McQuarrie is CEO of Exim Australia, and Dhruv Goyal is CEO at Big Mint. Gentlemen, hi, thank you so much for being with us. And there's just so much happening in this week. China is one part of it, and then we also have seen escalation between Russia and Ukraine, with the US allowing those missiles there. So clearly, commodities is going to be quite a factor there. We have seen dollar index come up a bit. Gold and silver seem to be doing well, and the base metal prices as tangible commodities clearly are in a knee-jerk reaction. Kunal, to you first, and to the Russia-Ukraine factor first, and a lot perhaps is what the markets are anticipating now in this week in sense of statements, paper signings, and action as well. What's your sense on how should metals be dealt with that kind of a background?
Yeah, so on one hand, we have Russia and Ukraine going on the ground, and on markets, we have US and China. So it's been quite evident and quite clear that China wants inflation to come in. China wants to follow the protectionist move. They want to create shortages by cutting the tax rebate. The exporters are not going to export the way they used to. There will be glut in the domestic market in China, but they can always tell their state reserves to buy those purchases and absorb the glut. So this clearly means that metals market are going to be very tight in next 3 to 6 months, because this is just a start. This is a beginning of Trump has not resumed his office. And even before Trump joined and put sanction on China, China has already started to take its own moves. So on the ground, Russia, Ukraine going on, Israel and Lebanon going on, Israel, Iran going on. And in the markets, it's going to be bigger war between US and China, a shift of power. The power battle begins. And China being 50% consumer of commodities and major producer of commodities, China's action will definitely determine the outlook on commodities. And we believe that that is going to be inflationary, and metal prices are going to be going to witness significant upside over next 3 to 6 months time. So there will be shortages in the global market. There will be surplus in the Chinese market, but those surpluses, I assume, will be absorbed by the Chinese state-owned enterprise because their debt have been repacked, or you can say we've seen a debt rollover happening in Chinese state reserve bureaus. So this is going to be push and pull, and metals should benefit from it in a very big way.
And that is something that we already have seen coming in. Metals actually in last 24 hours have done quite well. But this one is to you then, Peter. And well, yes, I will come full-fledgedly to China in a bit. But Russia-Ukraine clearly seems to be like a bigger headline at this point in time. How are you reading into this? And what is your sense on a bigger macro impact that we could see on dollar index and the metals?
Well, I think, Manisha, 106.30 at that US dollar index, building on what Kunal mentioned as far as, the situation in China, domestic demand, what happens as far as moving forward with President Trump's initiatives and how effective he's going to be and how aggressive. One needs to consider what he did in his first term. Is he going to take the gloves off in the second term and be far more aggressive? And that seems to be the general theme that people are hearing. So this impact is going to, I think, set the market in some ways on fire. So I think that there's going to be one thing for sure, probably dynamic volatility across the whole base metal complex. As far as US dollar index, look, you've got to think maybe 108, 109 is capable of hitting. I know that's probably a very, very bullish call from here, but the whole consensus is US dollar is going to take a run up. And if there is any form of hostility, if that really ratchets up, building on Ukraine and Russia, then that's going to cause, I think, much concern. And there's going to be a flight to King Dollar, Manisha.
Peter, 2018, let's take a step back, and that is when we also saw a trade war between US and China, and we saw huge price movement because of that as well. But this time, not just that, and as Kunal was mentioning as well, we have this anticipation already building up, but there already are a couple of wars going on and around the world. We also are looking at renewables coming back in a very strong way. So the world from where it was in 2018 to where we are in 2024 is quite different, would you say? Peter, this one is to you.
Oh, sorry. Yes, absolutely, Manisha. Sorry. Yeah, it certainly is far different. And I think it's far different in so many ways because you've got a changing of the guard. You've got a different dynamic considering the Biden administration versus Trump administration. And I'm not sure whether President Trump, he has a different agenda, I think, as far as what he expects to see on the domestic footprint of America. The drill baby drill mantra, certainly the return of manufacturing, and really, the tax changes and what he's prepared to do, I think, domestically. He's also on the back of COVID. It's a rerun to make America. He wants to turn it into an economic powerhouse, Manisha, from 22 possibly to 25 plus million barrels a day of crude or more. So I think the whole enterprise of the US is something we may not have seen in many, many decades, and that's what his agenda is going to be. Whether he's going to be successful, who knows? This is going to be certainly the apprentice on steroids, Manisha, for him to create what his footprint is, what he's trying to achieve, and we're going to sit here and probably observe it and go, wow, either he makes it happen or he fails dismally, and I don't think he's going to fail.
Oh, well, that is still a couple of months away before he really takes gets sworn in, and things can go a lot of different ways in next 2 months, the way they are moving right now. Dhruv, let me come to you, and let's talk about steel first. And when you look at on a month-on-month basis, yes, we are looking at positive prices there. This is international markets, of course. And when you look at this year until now, it's a double-digit negative that the steel prices are trading in. When it comes to production in China, we've seen numbers grow up there. We've seen steel exports also continue quite strong from China. How are you making sense of all of these numbers?
Thank you, Manisha. So you're right that this year there has been a sharp fall in the steel prices, both in the global market and the Indian market. One of the biggest reasons being that China is very active in exports. If you see their export numbers, it will be crossing over 100 million tons, which will be 8 years high. And the indirect impact that has happened on Indian market is the markets which were being catered by Indian steel makers. Most of those markets are now being catered by Chinese steel makers, and they are very competitive. So this year looks to be very tough for the global steel industry, including Indian steel manufacturers, although demand in the domestic market is relatively good, but definitely the margins are under pressure.
Oh, well, absolutely. Dhruv, what do you make sense of the global macros as well, with the way dollar is moving, with what's happening with US and China? Have you been able to do any calculations on what happened in 2018 and if there's a repeat of that expected in 2024?
Although things would be a little different, what it was in 2018 and what things will look like in 2024. But just one thing which I would like to add on the aluminium front. The same measures were taken on steel in 2021 when the Chinese government had, cancelled all the rebates on steel exports. Again, with an intention that they will probably be able to create some inflationary, issues in the global market. And the second objective was that they would want to cut down the unnecessary or unessential exports of steel, which were contributing to their carbon emissions. But if you see now, the exports have almost increased 30-40%, despite there is no rebate on steel exports. So I agree that in the short term, the aluminium prices will remain on a higher side, but long term looks a little uncertain for us.
Oh, absolutely. Also, how are you looking at the prices itself? Do you see the trend changing anytime soon, or would you feel that whatever China has done until now in sense of policy measures, stimulus measures, isn't really enough?
We think it is not really enough. The problem in China are fundamental. It will take some time for Chinese government to fix those problems because, again, in context to steel, property and construction being the largest consuming sector in China, and they are doing very badly in that region, and that will have an impact on the global steel industry.
Oh, absolutely. China has done a lot of stuff, but not big enough and not enough to ensure that the domestic demand or consumption really picks up. This one is to you, Kunal. And since we were talking about aluminum just a while back, I was reading a report which says that global demand for aluminum, China accounts for nearly 63% of that. I mean, that is how important China is in the whole gamut when it comes to metals. They are still equally important there. But aluminum, and we've seen that one outperform on an year-on-year basis, 16% of gains coming in for aluminum. Would you continue to be bullish on aluminum from these levels also?
I could not hear. I got some interruption, network issues. So can you please repeat your question, Manisha?
Sure. Kunal, I was asking you about aluminum. We are far away from all-time highs, but we are higher on an year-on-year basis. Would you see more gains from here?
Okay. First of all, before we go into the outlook of aluminum, the key ingredients to make aluminum, bauxite and alumina, both these commodities are required to make aluminum. From bauxite to alumina. So alumina earlier used to account for 25% of the manufacturing cost of aluminum. Right now, it accounts for the 50% cost of the aluminum. Alumina prices on Shanghai Exchange have risen from 3,500 tons to today roughly around almost 5,200 tons. So I'm talking in yuan terms. So, well, this is quite staggering move, 40-50% rise in alumina. The cost curve of alumina have shot up significantly currently. So it seems very unlikely that aluminum prices are going to go down significantly from present levels. The maximum downside is 3 to 4%. Now coming to the possible upside. So on the demand side, we are not seeing any big moves. I think the aluminum bullish calls are mainly coming from the supply side issues in the key aluminum producing components, which is bauxite and alumina. There is quite a bit of shortage over there. And it doesn't seem that these shortages are going to be met in next 2, 3, 4 months. So the supply side pretty tight, and which makes a very strong case, that aluminum prices may move up by another 5 to 8% in next 3 to 4 months. And considering what China did recently, cutting the export rebates, it seems that the global aluminum markets are going to be tight now. Here, one more factor comes about the Russia and Ukraine. So in all these things, if the supply side gets tighter from Russia also, then I think it's going to fire. So whatever bullish trend we are seeing right now and we are going to see is mainly because of the supply side more than the demand side.
Okay. Well, yes, that is an area that really seems to be getting under some pressure there. But gentlemen, stay on with us. We'll go for a very short break. When we come back, we'll talk about the opportunities within this space as well, with what's happening in the global markets and, of course, Outlook 2025 on the other side.
Much happier.
Well, let's talk about Swiggy and your confidence in the bet that you've decided to make, and you didn't participate in the OFS. Is that on account of the fact that you believe that there's significant headroom for growth from here
I
on?
think there is. I think, look, there is very few times in a country and in an investing professional's career are you going to see such a large platform being created, right? When you have both food delivery and Instamart, when you have $5 billion+ of GMV, when you're touching 100 million+ consumers, when the repeat of orders is that high, and India is only becoming richer, more urbanized, and the product market fit becoming only stronger, we think Swiggy has a long way to go. Obviously, execution is important. There is competition, Zomato, Zepto, but I think the market is large enough. The product market fit is very strong, and that's why we didn't do any OFS, because we think there is a long way to go for Swiggy.
And you're holding 8% off it, so that's a sizable chunk.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer. A leader.
Welcome back. We're discussing metals in the light of what's happening in the global markets, and that is about geopolitics. That's also about strong demand for renewables, underinvestment into the industry, and then, of course, China and US trade wars. All of that can impact supplies and demand, and, of course, prices going forward. Kunal, let me start with you. And you've already said that aluminum prices in the next 3 to 4 months perhaps could see a downside of 3 to 5%, but an upside of 5 to 8%. Would aluminum be your best bet going forward from here? How are you looking at perhaps a copper or a zinc as well?
I'm more bullish on copper than aluminum from the demand side. See, what has been happening with copper is that as we move into Chinese winter season, I think a lot of smelting capacity is also going to go off. So we've already seen, due to low TCRC charges, a lot of smelters have again started to scale back. So 5% of the smelters have cut their production in last 1 month. So going forward, the supply side is also going to be affected. A lot of Chinese smelters may close their operations. And remember, we are going to see some glut in the domestic market also. So because of that, the smelting capacity. So now smelters are going to shut down. And at the same time, the concentrate markets are in a pretty tight mode. So if you look at the copper concentrate market, that is very tight. The supply side was mainly coming from higher smelting capacity, now going into the demand side. So we have a lot of pockets in the world where the copper demand is growing at a rampant pace. in BRICS, mainly India. If you look at in Africa, if you look at in Indonesia, everywhere, ex-China, there's been a significant demand growth in India. And from last 2 years, have come up with a double-digit demand growth in copper. So we remain bullish on copper. We've seen a good, healthy correction in copper prices. On MCX, I think it is hovering around 798, 800 rupees kind of levels. So 790 to 780 is accumulating range. And I expect copper to, move up at least by 5 to 8% going forward. In all these estimates, we are still not talking about the China's possible fiscal stimulus, which China haven't come up. They have been waiting. That will add fuel to the fire if that happens. So, as of now, the conservative estimate for even copper is 5 to 8% upside from here in next 3 to 4 months. So, copper number one, number two will be aluminum.
All right. Peter, what is your sense when you look at overall base metals as a sector? I mean, everything that we're looking at does sound bullish at this point in time, unless the demand really deteriorates. What odds do you see of that, and what is your sense on prices from here?
Well, building on that, what Kunal said, as far as global demand, it's very, very hot. Some sectors are doing extremely well in the sense of Asia and South America, Africa, and so on. So there's from the demand side, I feel as though the copper, probably, Manisha, it's going to whipsaw, and it's just been that strong barometer. Are we going to test 10,000 again? It was only a couple of months back and you were there, and then all of a sudden it's been sold off heavily. So possibly it's a time, as well as that, that downdraft. We've seen, I think, a consolidation. I wouldn't be surprised to test, the high 9,000s, but we've just got to see what happens over this winter period in the Northern Hemisphere. And really, the time as far as inauguration and what that impact's going to be is from a Trump administration to base metals and to really the whole complex. Really, every commodity is going to be impacted, from agriculture all the way through to base metals. So I feel as though we're going to strap ourselves in. It's going to be strong, relatively strong demand in 25, unless something happens from a geopolitical stance, and that changes really, and what happens globally. But overall, I think we're going to see pretty strong move to the upside, and 25 is going to be a dynamic year for trading.
Oh, well, absolutely. Nobody's doubting that, Peter. But with the kind of moves that we are seeing, would you rather put your money in gold and silver? Because that really seems to be doing quite well. Of course, after that huge profit taking that we've seen from the highs, there seemed to be some consolidation and some people yet again moving back in.
Yeah, absolutely, Manisha. I think it was just that hot air came out of it, was stripped out, and that's not unusual. It's quite normal when you see a raging bull market down to that 25 odd. Now we're at 26.40. If geopolitics, and I'm just seeing this first strike from Ukraine into Russia, this is all going to, I think, magnify the attraction to gold and silver in the short run. If things escalate from there, Manisha, then naturally geopolitical concerns, flight to safety, and yeah, it's still 6 weeks to run till the end of the year, and I think we'll test those highs again, Manisha.
All right. So further gains expected in gold and silver, and of course the base metal prices are also a pick-up on dips in that strategy there. Dhruv, you're looking at ferrous metals more closely, and you've spoken about steel in sense of demand and supply, but I also want to get your sense on prices from here on. Are we close to the bottom? Do you think these are good buying levels, good investment levels, or how are you looking at the scenario playing out from here?
See, Manisha, steel is a little different from base metal. There is a lot of overcapacities in the global market, and as I mentioned that China being the dominant player and their exports are very high, that is depressing the market all over the world. So steel has become a very regional, or it is going to become a very regional commodity, wherein most of the countries are now putting up anti-dumping or some kind of safeguard measures for imports of steel. So it has become a very regional commodity. To answer the question, again from the Indian context, we feel that prices are almost at a bottom level. We do not see a lot of correction from here, although upside will also be limited. But definitely this is a period wherein you see an additional or incremental demand in the last quarter of every financial year. So from a demand perspective, we expect we are quite bullish, but prices we think that probably will remain stable.
Dhruv, I hear it a lot of times when people say that, well, yes, China is doing this, but India has its own market. And you rightly said it, it's becoming very local, very regional as we see from here. But with China really putting out that cheaper steel and India not able to sell outside the country, how are you looking at steel companies in that light? As you said, the margins have been under pressure. Do you see that improving?
So I think this situation is prevailing for last 1 year when China has been exporting very extensively. As I mentioned earlier, that their exports are almost at 8 years high. This year they would be touching 100 million tons. So mills have already, managed their supply chain. So they are, focusing a lot more on the domestic market. Some mills have, cut down their production. Some have shifted their production from flats to long, which has a better margin. So all in all, I think it's a balanced situation for the Indian steel mills. And for India, currently the major market is Europe, which contributes approximately 40-50% of the total exports, which will continue to remain. Although there is an anti-dumping investigation going on Indian cargoes, but which we feel that is a temporary. And if the results come, so exports to Europe will continue to happen.
Dhruv, one more question, and this one is on iron ore. And if I look at the prices from the beginning of this year, we were around 140 or so, just about holding 100 at this point. So clearly double-digit decline coming in for this one as well. Yes, when we started this year, a lot of people were not very bullish onto that one. Some even talked about 90 and levels of 80 as well. Are we going there, or do you think in and about 100 is how we'll end this year?
So we think 100 is a fairly decent level. But if you see in the second half of 2024, there were a lot of supplies which were supposed to come from Brazil and Australia. That was one of the reasons why prices had come down. But after that, there was a stimulus announced by China, and then again it picked up iron ore prices. But we think $90, $100 is a reasonable price. Do not expect to fall very sharply, at least in the short term. But yeah, in the medium to long term, there are additional supplies which are coming from Africa, Brazil and Australia. Longer term will be a different number, but in the short term, $90 to $100 looks fairly decent.
All right, that point is well taken. So gold and silver continue to be your top bet, but when it comes to base metal prices, copper, aluminum could give you good returns as well. And then, of course, it's steel and iron ore, which are not expected to decline much from here, but wouldn't give you much of an upside as well. But as all our experts have already said, there is just so much happening in the international markets, from those wars to those statements, and of course, anti-dumping duties in US and China. Currency would be an important factor to watch out, and so would be renewables. So all of that could make a lot of impact on many of these commodities. Gentlemen, thank you so much for joining in and for that conversation as well. And with that, that's all the time on Commodity Champions. Thank you for watching.
A visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown, an ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day.
Hello and welcome to this special broadcast. Ever since Prime Minister Modi took over for a third term, the priority for the NDA government is how to become a Viksit Bharat or have a developed nation by 2047. And this indeed is the goal for industry bodies like the Federation of Indian Chambers of Commerce and Industry. Today we catch up with Anish Shah, the Managing Director of the Mahindra Group, the President of FICCI, to look at his priorities over the last 1 year and what India needs to do to grow its manufacturing footprint abroad as well. Mr. Shah, thank you very much for joining us. You complete 1 year as FICCI President. Give us a sense of your priorities and challenges.
So good morning, Parikshit. Pleasure being here with you. And in terms of priorities, FICCI's focus this year was essentially on Viksit Bharat. From a timing standpoint, my presidency started right around the time when the Prime Minister announced Viksit Bharat. And the Prime Minister also was very kind to give us time to meet literally on my first day in this role. And based on his guidance, we basically outlined 4 key areas: Make in India, women-led development, farm prosperity, and sustainability. And while we worked on many other areas as well, these were the 4 priority areas to help drive real actions for us to get to Viksit Bharat.
Right. Now, India is aiming to be a Viksit Bharat or developed nation by 2047. That will need a sustained growth of about 8% every year. What do you think India needs to do on that front?
So beyond the sustained growth of 8%, it's also a significant shift in manufacturing, because manufacturing will have to go to 25% of GDP. And if we work the numbers, that's a 16x increase in 23 years. So what India has to do first is, around what we call Make in India, focus on high quality, focus on ease of doing business, and focus on reducing manufacturing costs. Because India has to be the manufacturing hub of the world. We have the ability to do that. And the focus on these 3 areas will enable us to do that. There are a number of actions required. Many of them are at the ground level, and that's what we've been working with multiple ministries on: inverted duty structures, creating greater competitiveness for companies in India, and I mean all companies in India, not just Indian companies. The approach that we've taken is not around protectionism at all. In fact, we should be open to others coming in. We should have a lot more FTAs, but we should create an environment where everyone manufacturing in India finds it to be the best place to manufacture. And they position their global manufacturing hubs in India as well. That is what will drive success for us. So first is manufacturing has to be a major play. Second is with regard to farm. Agriculture continues to be a significant portion of our economy. And how do we improve productivity in agriculture? Whether it is in terms of productivity of produce per acre or per hectare. And second is reducing wastage and ensuring that the supply chains are set up in a manner where we can reduce that. That has significant other benefits also in terms of reducing food inflation in the short run. But that's another big area. Third is, as we look at the labor force, how do we get more women in the labor force? And what are the specific actions required for that? And which is why women-led development is a very important part of our agenda. And as we do all of this, we have to take leadership in the world on sustainability. And the government has been doing that. We've set some fairly ambitious targets to be 50% renewable by 2030, and a number of other targets beyond that going up to 2070 as well. So what are the actions on sustainability that enable India to lead in the world, but at the same time ensure that we've got cleaner cities, that we've got a greener country overall, and that's important for all of us as we live here.
Right. To speak about manufacturing specifically, what has been the recommendation to the government recently on how to increase India's manufacturing footprint, also to make sure we win globally with exports, and also localize at very high levels, maybe around 80% in certain sectors?
So here the benefit, Parashit, has been that FICCI is the largest industry association and has representation from large companies to MSMEs, and is also a chamber that represents multiple other chambers around the country. So therefore, our members could provide some very good input, because these are not recommendations at a high level. These are very granular recommendations by industry. So we've had multiple committees of FICCI across industries provide specifics on here's what's required for this industry to be able to succeed in terms of manufacturing in India. As part of that, we actually created a 1 to 2 page set of industry recommendations for every ministry. It was literally a 78-page book, along with a few pages on actions to transform India. And this was something we've worked closely with multiple ministries. They've had multiple questions as follow-ups, things that we've had to go back with. And that has really been the benefit of FICCI playing a role in, from a thought leadership standpoint. The high level of recommendation, or the categories of recommendations, are again around quality, ease of doing business, cost of manufacturing, and specifics in each area as to what is required. One example there is rationalization of PCBs in terms of what we import, and how can we create more exports here, or more manufacturing here that enables more exports. It also involves how do we enhance quality by leveraging our R&D spend. So what is the best way to set up a mechanism for the 1 lakh crore amount that has been set up separately for R&D, and how do we get real outcomes from that that enable our companies to be more innovative, more successful from that standpoint. What are the quality standards that can be set up? What are ideas around things that we can do for quality standards? How do we make it easier to manufacture in India by even setting up plants? And that's where the industrial parks is a great step forward. But how do we take industrial parks forward where a company can come in and within 3 months set up a plant that enables a lower cost of manufacturing, a faster time to market? So it's a very granular set of actions across each of these points that we've driven.
So which are the sectors? For example, you mentioned printed circuit board assemblies, which can be localized and can be exported from India. Are there any other product lines which you feel India has a right to win in, but have not yet been tapped?
I'd say there are lots of product lines, and I'd start with auto. India's got a thriving automotive industry. We've had all global players here for the last 20 plus years and competing with each other. That has helped Indian companies become a lot better over time. And we still haven't tapped into the world as yet, because we are not manufacturers for the world. And that's a change that we have to drive now, is how do we make the Indian auto industry the manufacturer for the world? And again, when I say the Indian auto industry, I don't refer to Indian manufacturers. I refer to everyone who is setting up manufacturing in India. And that requires addressing inverted duty structures. That requires ensuring that there's no protection for raw materials that come into creating automobiles, and maintaining the level playing field that we've had for a long time. But we have the right to win. We have the ability to create products in India that are world-class products, and having the right manufacturing setup, lowering logistics costs. There are a number of actions that can be done around that as well. That will really create a strong hub in India for manufacturing for automobiles. Similarly, tractors and farm equipment. This is one area where India again has an edge. In many cases has products that are better than competitors that come from various parts of the world. And we have started manufacturing in India for the rest of the world, but still at a smaller scale right now. Pharmaceuticals is already ahead. They've got a set of companies that are now very strong and have a large number of FDA-approved plants in India. So the list goes on. I think there's a whole set of industries. It's not restricted to a few, and that's the optimism around India.
Right. Now, you spoke about the auto sector. What do you think is the biggest roadblock which is stopping the growth of the auto sector in India globally, and what is the policy enabler that we need?
So I think we've come a long way. We've started making products in India that are of a very high quality, and this is where I would talk about Mahindra specifically, and even the Tata Group. They've done a fantastic job in setting up world-class products. As we have these world-class products now, that's what we've got to be able to take outside. Our electric vehicles that will launch in November, which is this month, are, in my view, just outstanding, and something that will compete with world-class products. And from a policy standpoint, I think there are a few areas that we've been working with the government on, specifically around inverted duty structures and areas that take away some of the additional costs that come in from manufacturing in India. Nothing that I would look at as a broad brush thing that's required, but it's again looking at the details and addressing various different aspects that make manufacturing in India at a lower cost and easier to do.
Right. Now, as you mentioned about the Mahindra Group, which is launching 2 new EVs this month itself, do you believe now that the time for electric cars has now arrived in India? Very soon, EVs will be at an inflection point?
Yes, we do, because it starts with product. And when you create a wow product, consumers want it, and that enables everything else to happen after that. Range anxiety has to be addressed, but again, with electric origin or born electric products, that's something that's easily addressed. Charging infrastructure, the government again is doing a fantastic job in setting up the plan around the charging infrastructure and working closely with industry. FICCI has taken a huge lead. In fact, just today we have an EV program for the entire day with various government representatives coming in. Honorable Minister Kumaraswamy was here this morning, along with Shri Tarun Kapoor from the PMO. And then we've got a whole day where we're outlining what's required to address any roadblocks to adoption of EV in India, and how can we meet the targets that we've set of 30% by 2030. I'm optimistic that actually we will reach that faster. At Mahindra, we want to reach that even 2 or 3 years ahead of that. And as an industry, I think we should reach there faster as well. Right. So FICCI's played a huge role in making that happen.
What's the sentiment around electric vehicles in the market? If you had to explain the customer demand, how would that be?
Electric three-wheelers, very, very strong. And that's one which has been a huge success story. It's gone from 0% to 23% as an industry. And this is one which will go to 100% in the next 3 to 4 years. So consumers love the product. The subsidies provided by the government have helped, because without that, electric would not have come into play. And after 2 years, the subsidies will not be required. So this is a perfect example of a policy initiative that has worked very well. For four-wheelers, it requires world-class products. And that's where I'll hold my thoughts till November 26th when we have our launch. And we can actually see the products.
Right. On charging, one of the things that the industry chamber has done is provide a long-term roadmap to the government on electric vehicle charging. What's the crux of that?
Charging is going to be very critical. Now, there are various private sector players who are coming in and providing solutions, but we need to do that in a coordinated way. As a consumer, if I'd like to charge my car, I want to know what charging points are available within a few kilometers. Are they open right now? How long is it going to take to charge? What's the cost? And I may not care as much whether it's provided by company A, B, C, or D. And therefore, how can we bring all of it together? And this is one area where FICCI has been working closely with the Ministry of Heavy Industries to look at first on highways where should be the charging points based on the data we have. Where is the traffic? At what intervals should we have the charging points? Second, can we create an app that is linked to the Bharat digital stack that makes it one app for the customer that can answer all these questions I just asked, where you just go in and everything is easily available. And if that's done, then that will use the investments in this space a lot more efficiently and create a much greater charging infrastructure at a much lower cost and at a faster speed.
Right. My final question would be about the need for a rate cut. There's a great clamor right now for a rate cut. Two senior cabinet ministers, the finance minister, the commerce minister, have both said that it is time for one. What's your expectation?
So for us, it is more important that the economy continues to be in a good shape in the medium term, not just in the short term. Inflation is a concern, and if a rate cut fuels more inflation, that's going to be negative for us. So I think that balancing act is very important. It's a difficult balancing act. I feel the RBI has done that very well so far, and that's something that is required going forward. So I wouldn't specifically say that yes, we should have a rate cut if it worsens inflation. I think controlling inflation is always the first priority from an economy standpoint, and as that happens, then rate cuts will follow.
Right. So there should not be any rate cut if it's causing more inflation.
Exactly right, because we've got to look at what is really good, not just today, but even a couple of years later. If inflation starts growing higher, it is going to be negative for us.
So inflation is a worry for you, Anisha.
Inflation is not a worry today, because I think the RBI has done a very nice job so far in staying ahead of the curve on it. And from all indications is that they continue to stay ahead of the curve. So today it's not a worry. It should not become a worry for us is the primary point.
All right, Mr. Shah, thank you so much for joining us here on CNBC-TV18, speaking about your vision for manufacturing and the Indian economy. On that note, we take a short break, but don't go anywhere. We've got another exclusive interview coming up. I catch up with John Pearson, the CEO of DHL Express, on the other side.
As we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Maharashtra elections this time stand out as one of the most unpredictable in recent history. The political landscape is charged with uncertainty and no one can confidently predict the outcome. Both the ruling Mahayuti alliance and the opposition bloc, that's MVA, face unique challenges, making the contest intense and volatile. The opposition has centered its campaign on issues like inflation, unemployment, farmer distress, Maratha reservation and the redevelopment of Dharavi. They have also used the breakup of Shiv Sena and the NCP as a key talking point to attack the ruling coalition, especially the BJP. Meanwhile, the Mahayuti, comprising the BJP, Eknath Shinde's Shiv Sena and Ajit Pawar's NCP faction, has focused on welfare schemes such as Ladki Bahin and infrastructure developments, and these are the issues they are seeking votes on. We also saw BJP leaders using slogans like Katenge to Batenge despite opposition from many state-level BJP leaders themselves. Another slogan used by BJP was Ek Hai to Safe Hai. The campaign of both MVA and Mahayuti has been clouded by internal challenges like cross-nomination, infighting and uncertainty over the chief ministerial candidate. There will be an NCP versus NCP battle on 37 seats and Sena versus Sena on 51 seats. Also, both Mahayuti and MVA will witness what they call a friendly fight on multiple seats. Mankhud, Shivajinagar, Ashti, Katol, Morshi, Dindori, Shrirampur are some of the seats. Certain seats like Worli, Mahim, Baramati, Kopri Pachpakdi and Shivdi are gaining attention as crucial battlegrounds. These constituencies are likely to see fierce competition with prominent leaders on both sides striving to secure voter trust. Mahayuti's welfare schemes like Ladki Bahin could play a key role in deciding the outcome. For both sides, the influence of rebel candidates will be important as they could tip the scales in closely contested seats. The possibility of post-election realignments cannot be ignored, adding another layer of intrigue to an already unpredictable contest. With both sides facing internal and external challenges, the stakes have never been higher.
You know, your 70-hour comment has gone viral and you're not going to be able to live it down anytime.
Welcome back. You're watching News Center. Globalization remains at a record level despite geopolitical tensions, and the return of a Trump presidency may not necessarily reverse globalization. That's the big takeaway from DHL Global Connectedness Tracker. This report, published every 2 years, strongly challenges the notion that we've entered a period of deglobalization. Overall, in 2023, 21% of the value of all goods and services produced was traded internationally, marginally down from 22% in 2022. US-China ties continue to diminish, with direct trade falling from 3.5% of global goods trade in 2016 to 2.6% in 2024. Decoupling between US and China has led to large trade share gains for countries like UAE, India, Vietnam, Brazil and Mexico. Despite broad regionalization trends, most trade flows are taking place over long distances. We're now joined by John Pearson, Global CEO of DHL Express. John, thank you very much for joining us. Let me begin by asking you about the victory of Trump and the kind of cabinet that we have seen for the White House. It's going to be a presidency, a cabinet that will be hawkish on China. We are going to see a very tough stand vis-a-vis China. So the trade between US and China may go down even further. Considering the developments taking place in the US, how do you think this is going to affect globalization going forward?
Well, I'll try and summarize my answer. We've been in these situations before. In the first Trump administration, I remember in 2019, which was my first year in the job, there were certain heavy tariffs put on the export of Chinese goods to the US. Some of them then were repealed, and we get through these times. It's fair to say we can see an impact of some of these tariffs when they happen. Well, now, but it is not a situation that is unfamiliar to us. We're now going into a new administration that promises lots of things, to be honest with you. One of them will be a 60% on China goods and maybe 10% on all other countries that don't have a free trade agreement. What I know from the Global Connectedness Report and the Global Tracker is trade and globalization is incredibly resilient. It's still globalizing rather than deglobalizing. Water tends to find a way. Trade is rather mercurial. Remember, trade in your mercury in your hand, it moves all over the place. When one door closes, another door opens. Trade will find its way between different partners via somewhere, perhaps to China. So I think we just have to wait until the administration decides on what policies it wants to put in, and then we will adapt to whatever we see. But no one is better positioned to understand global trade and globalization than us, and understand the early impacts of anything and be able to share that with our customers. So we wait like everyone else waits.
Has the US been able to decouple from China to the extent it wanted to do so about 8 to 10 years ago?
I think the first thing you would say about China-US trade is they're both each other's largest trading partner. Trade has come off a little bit from where it was in the peak of the pandemic, and you could imagine some things that were traded in the pandemic, PPE equipment, things related to COVID, really drove that level of integration between the two countries up. It has come back a bit, maybe not to be expected, some of that tariff related, some of it just global trade related, but they are enormously coupled as countries. They both need each other in so many different senses of the word. And my own thoughts for that in the future is it'll be rather incrementalism if it is on the way down, putting aside any rather more dramatic impact of tariffs, which then creates negotiations and discussions. And then those tariffs can quite oftentimes come out. So tariffs aren't always a thing for the future.
Right. Have you also seen countries which are benefiting from the US-China trade war? If China's contribution to global trade has gone down, have any of the countries like India benefited from it?
Yeah, so I think that's a good question. I think back to my point about water always finding a sort of stream to go down to reach the sea, I think there are countries that are benefiting from it. And I'll say it in a couple of different ways. Countries that have no strong alliance to the US and no strong alliance to China have certainly grown their share of world trade over the last 8 years. Mexico, Brazil, UAE, Vietnam, India are 5 great examples of that. And no doubt we'll come back to India in a minute. So, in fact, I think I'll pause there with those 2 answers that I give you. Trade always finds a way, so some countries are being the beneficiary. Those that have no strong alliance are definitely growing faster. And then I'd go on to say, countries that are the beneficiary of China plus one and diversification of supply chains into Vietnam, into Indonesia, into the Philippines, into India, not necessarily China diversification. India is benefiting enormously from a very successful